Streaming live on YouTube as well. Stream live. Levered ETFs, you know, the above them, it's like the NVIDIA 2X or the NVIDIA 3X, like the really bullish or bearish. These things are dead, I think, but it's just all part of the ETF ecosystem. Eric Tunis joins us here, senior ETF analyst for Bloomberg Intelligence. Talk to us about levered ETFs.
Mic check, mic check.
Structure risk. Yeah, so leverage ETFs about $200 billion. It's like 1% of all assets. So they're not that big, but they make up 13% of the trade. So people trade the heck out of them, which is how they should be used, frankly. And we went and did a study, and we were like, oh, how much money have these lost for people? And we were shocked to find they've actually made money for people, about $60 billion lifetime. And what happens is, what they really...
Good morning. Hope everyone's having a good day. To start,
they will buy into it after a bad week or a bad day, and as it goes up, then they pull money out. So they're taking profits as it goes up, and those two ETFs are up over 10,000%. They great markets, right? Tech and semis, on up and up and up. And so, in a way, the sort of traders are using these things as an ATM machine. On the flip, there are other products where the 2X meets volatility. And
okay, Meta on the watch list.
Sort of lose money or have it decayed. So it's a very complicated area. It's more nuanced than like that. Again, I equate it to fast food or the whiskey. You know, it's not healthy. You'll probably lose money. But there are, you know, it'll do the job. You know, it'll give you that 2X or 3X every day. Are they systemic risk? Not in the U.S. I think Korea, where there's not much liquidity, you could have the tail wagging the dog. But in the U.S., outside of a small quantum stock, largely speaking, these stocks are so liquid, they're not going to really mess with the underlying too much.
I did appreciate this note because it's not as simple as good or bad. I mean, it tells you that, you know, I mean, they're not purely wealth destroyers per se, but you brought up the South Korea. I've never asked you. I love you. I think TVs 3 to 4 times a week. But I've never asked you how you felt about that. Like, do you think that was a little extreme? Like, we have one asset manager telling a Bloomberg reporter saying that it should just be banned completely. But you made a point that maybe it's a smaller market.
Yeah, well, first of all, let me just say, I'm going to go full LinkedIn here and say I'm honored and humbled to be bothered by you. Anytime.
Okay, Meta watching pre-market. Coming into the opening bell. Futures are pulling back.
Yeah. Anyway, back to South Korea. In that market, you know what I looked into, which is interesting? They can't gamble at all there. Like, you cannot gamble on sports. They are pent up. You know that dude in college?
Okay, we got about 2 minutes to go for the opening bell. New York Fangs are mixed somewhat. We closed above the 50-day on Friday. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, August the 3rd.
That market, again, ETFs love liquidity. If you have an ETF,
Let's get ready for the opening bell.
So that market's pretty small. So frankly, I could see if you ban them, I wouldn't have a problem with it. I just think in that market, you're going to have more tail wagging the dog. But again, the tail has to want the dog. And in that case, the real issue here is these two stocks.
Okay, let's see what Netflix looks like. Netflix is trying to break higher, acting more bullish of late. Microsoft following through. I took those call credit spreads off on Friday. I figured we might see what's happening today. Okay, we're about to open. All right, markets are open. Give it a few minutes for the markets to settle down. I'll be looking at taking some profits off the table here and there. Microsoft looking good. I have August 21st. August 21st calls Microsoft looking good. Futures trying to bounce. Let's keep an eye on hedge flows. Okay, we can see all of the resistance for now. All right, looks good. Back to Netflix. Netflix trying to break a bit higher, take out last week's highs. Okay, CBRS, looking for that to continue higher as well. CBRS.
I'm going to tweak a little from this here. The top 3 ETFs.
All right, CBRS, Netflix. Okay, there goes Amazon. Amazon following through from last week's price action. Amazon gapping up again. Okay, Amazon gapping up again. Google looking good. Next.
I think that's something we're going to see if they did wrong. I think for the most part, they're just telling clients, okay, you like us, we want to see ETF, now we have that. So I think the future money for the clients, I think that's ETFs.
All right, there goes Netflix. Netflix looking good. Microsoft. Wow, looks good. Very nice start to the day.
Yeah, so the big example this year is Crude. This VC San Francisco company, and they're slated to launch 500 ETFs in the first year.
All right, futures are bouncing. There goes Amazon. Amazon.
Anyway, the idea here is we're saying we want to see methods to snacks because what you need if you're small. Because most of these indie.
Not a bad way to open the markets today. First trading day of the month, August. August tends to not be a very strong month. Seasonally speaking, tends to be one of the worst months of the year, especially the second half of the month going into September. Microsoft following through. Okay, so looking very good here. Amazon looking good. Netflix on the move. Netflix looks good. I've been sitting on these Microsoft calls for a month. They're finally green. Okay, New York Fangs are looking a lot better. Only Apple and Broadcom dragging its feet. Okay, looks good. Netflix is good. Microsoft is good. Amazon, Google, Meta, Snowflake, everything looking good here. Amazon. Nice follow through at Amazon with earnings. Okay, Microsoft following through. Okay, I sold these 18 deltas. The earnings were way beyond expectations. I thought we might get a little bit of a pullback. Didn't happen. I'm out of these. Close those. Okay, that's Microsoft. Okay, and there goes Tesla. Tesla's on the move now. Tesla on the move. Okay, Tesla turning the corner. Looking really good, actually. Tesla turning the corner. Daily looks good here. Coinbase. All right, so what's Bitcoin? Bitcoin got slammed. There goes AMD. Intel's down at the moment. Intel, are the chips going to catch a bid? The top 10 on the NASDAQ 100, ISRG, Amazon, Axon, Bodycams, Microsoft, Alnylam, Pharmaceuticals, Google, Dexcom, Workday, Adobe, and Thomson Reuters. All of these looking pretty good. Tesla following through. Nice follow. This looks really good on the daily. Looks like Tesla's going to turn and continue. All right, Microsoft looking really nice here. Microsoft. Wow, look at Microsoft go. Microsoft is just crushing it. Holy smokes. They're falling all over themselves. Got to be a lot of shorts too, I would imagine. A lot of shorts covering. AMD, nice bounce. Microsoft, still going here, Microsoft. Holy smokes, look at Microsoft go. All right, so any more news on Microsoft this morning after earnings? Looks good. All the New York FANGs looking good, except for NVIDIA. NVIDIA is probably going to turn here, it looks like. Apple looks a little weak.
RKLX.
Okay, Microsoft looking very strong here, Microsoft.
Amazon after their earnings report, shares of Amazon continue pushing higher, up 5%. So that's good enough to push the market cap above $3 trillion. Amazon now the fifth largest U.S. stock after NVIDIA, Apple, Alphabet, and Microsoft. Speaking of Microsoft, up 5.2% right now, $489 a share. Northrop Grumman securing agreements worth about.
All right, looks like shorts covering on Microsoft. I'm glad I closed that on Friday.
This is actually part of a broader effort to boost output of munitions drawn down by Iraq war. 10-year yield right now, that is down 4 basis points. 2-year down 4 basis points at 4.25%. So here's a statement issued by Texas Governor Greg Abbott. Apollo Global Management has selected Austin second headquarters. The firm's New York headquarters at 57 High West 57. That's the skyscraper for Central Park. So,
All right, Microsoft. I have some August 26 calls. I'm going to take some of these off at the highs this morning. Waiting for the opening range. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, August the 3rd, first trading day of the month of August. Seasonally doesn't usually fare very well. Usually seasonally one of the weaker months of the year. So take the opportunity to potentially take some exposure off. The Iran conflict, attacks, I should say, on again, off again. Microsoft still looking very strong. Look like a little profit taking. Meta, nice follow through. Looks good, Meta.
Definitely the Azure is a cheer for the investors that are cheering up, but it's tricky because even if you do, they just don't reward you.
Well, that's perfect lead in for our next guest, Lee Meta, founder and CEO of NetComey. I mean, how do you think the marketplace should look at AI? Should it be total spend that these companies are doing? Should it be the actual return on invested capital? How do you guys think?
yeah, the return on invested capital is the talk of the day, the month, the week. It just absolutely has to exist at this point.
Okay. We can get NVIDIA and Apple to turn. That would be good. How's everyone doing?
Either being valued yet for the value created, not just for the money that they're making right now with experimental dollars.
Google looking really good.
Great. Then we need value created. Absolutely. And every company adopting AI today, every large company adopting.
Okay, so I have August 21st calls on Google. I have 375s. Also have some 400, 405 calls. Those are a bit out of the money, but the way Google is trading, we could see some follow through. Google looking good. Crazy price action here.
So today, because AI is getting used for various types of use cases and has been pitched to large companies that way, that you can apply it anywhere, it's going to create significant value. But they're not seeing that happen in every type of use case. So we need specific scenarios.
Wow, Google's beautiful. We're going to put an opening range high up here. We got about 15 minutes to go.
Measure. That's what NetComey does. So we are in the application here for agentic, and we create the autonomous front office for the world's largest companies. So we work with companies like Delta, United, DraftKings, Rockwell Automation, MetLife, a bunch of other.
Okay, Microsoft putting in the high right now. Microsoft.
Players, either cost savings or it's increased lifetime value.
All right, let's go see what hedge flows look like. All right, we got resistance. You can see where the resistance is.
Means connect with their customers, either with websites or mobile apps or phone calls or emails or chat. Like there are various mechanisms in the physical world or the digital world that interact with customers. And now with AI, as you introduce this new type of building block in your
Resistance. A lot more purple, a lot more positive gamma.
and not even wait for them to ask for it. It's almost like the end of asking, if you will, where if you're able to predict it and serve them autonomously using AI, then you get to build.
Oh boy, nice start to the week.
Because you're preempting the creation of a customer problem, and that makes you more customer centric in fact.
Well, what about insurers? We're seeing concerns from insurers about how to price AI related risk.
All right, positive gamma, looking good.
Tell you about, I guess,
Let's see.
AI or enterprise AI, so to speak, today.
The Q's up not that much this morning compared to the S&P. S&P above the risk pivot. We also above the 50-day moving average. Okay, looking really good here. Are we going to break out during the month of August? It's been a year for breaking records. S&P very strong. S&P back above the 50-day. That's a big deal. Okay, Google, Meta, Amazon, Netflix, Tesla, Snowflake, all looking good. We got Broadcom and Apple down. NVIDIA's trying to turn the corner right now. Okay, Microsoft profit taking. Google's still going. Netflix. Okay. New York Fang's looking a lot better. All right, Netflix. Okay, Netflix. Let's take a look at Netflix. Okay, so coming up to Netflix. 73.75. 73.75. 75.06. 75.45. $78.19. Okay. Looks good. All right, S&P futures continue. We're up 53 handles. Markets like the news. Let's see, Microsoft. It's a lot stronger than the options market priced in. Let's see. Microsoft. Oh, Microsoft, you're super strong. Let's see what Microsoft looks like on, okay, Microsoft. Wow, I can't believe this is doing what it's doing. Same thing with Apple. Apple got whacked, and yet it was looking really strong going into earnings. Let's see, Apple. We're looking for it to get back above the 50-day. Apple. Meta. Meta super strong as well. I took the call credits off, or put credits. Okay, Meta took those put credits off.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
All right, Isabel, Lee sitting in for Tom. Tom will be in tomorrow. Also, Dr. We're here. We're gonna we go. All right, what we used to call ESG.
Okay, looking good, looking good.
As you can see, we're putting their investor dollars both here and outside the U.S. Senior ESG analyst at Bloomberg Intelligence. Shaheen, it's been a while since we chatted. What do you expect your market these days? Where's money flowing in? Where's money flowing out?
Sure. Suppose we look at sustainable fund flows, so looking over ETFs mutual funds. And what we found is for the first half this year, these funds were about 5 billion in outflows. Now, despite outflows, this is much less than about 150 billion that we saw last year. And even though we see outflows, there are a couple of bright spots. The first is ETFs, which are about 24 million inflows. 25 billion, yes, sorry. And fixed income, which are about 14 billion inflows. So clearly, equity, non-ETFs outflows. Clean energy is where it was at in the first half this year. Near record.
Okay, so those look good. The credit spreads for Microsoft, we took those off. I think I might have marked the chart up, right? Did I mark up a chart? I don't remember. Meta. Actually, I don't think I did. Anyway, so with Meta, you could see what I did here. Meta, I sold puts down below. Here we go. This is what I sold.
Sustainability investment has become politicized. Changed the way other investors choose not to invest.
So when we look at sustainable funds, 90% of asset puts are European. So any kind of global flows number is fully dominated by Europe almost. That being said, actually the US did see inflows because all these clean energy ETFs are downside of the US. Even though they allocate globally, they're based in the US, and those are the ones that actually saw inflows. And we're seeing less of an outflows this year, even if it's still an outflow because they are related. Yes, that's
Okay, so Meta, we're done with Meta now. Meta looks good. All right, I'm just taking some things off. I'm going to reassess the markets. Honestly, my bearings are off for a little bit. That 1 day off on Friday really threw me off. It's amazing how if you're listening to the markets, watching the markets every single day, how you get into a sync with the indices and stocks. I'm having to recoup. My brain's not totally here yet, so I'm not going to take any trades just yet. We're looking for opening range breakouts, so that's a strategy that fires automatically. We got the pre-market high with Meta, obviously the purple line, pre-market high. Meta looking really strong. Microsoft, Netflix looking good. Netflix. Okay, low profit taking. NVIDIA starting to turn now. NVIDIA. Okay, pre-market high. NVIDIA is at the pre-market high. NVIDIA looking really strong. Let me see what else I want to take off here. I'm just clearing some profits here and there. Okay, that looks good. Okay, there goes NVIDIA. Jeez. Tell me I sold my NVIDIA. Nope, I still got it. Okay, cool. NVIDIA, that's right. We took the 205 210s, 205 210s. ISM Manufacturing 55.6. ISM Manufacturing 55.6. Let's see how the markets react. Forecast. 53.9. 53.9.
ABC News. Cheering, Preston. It looks become a familiar pattern. President Trump threatening, then backing off on plans to bomb Iran even further. All of that happening overnight. Here's ABC News Chief White House correspondent Mary Bruce. The president calling off those planned strikes, saying the outline of a deal has been agreed to that would include the immediate, complete, and total opening of the Hormuz Strait. But the Iranians firing back, saying they're close to reaching a deal with Oman over the strait, and that those talks don't concern anyone else, saying the critical shipping lane will in no way return to the way it was before the war. Prices keeping back down. A vote on Todd Blanche's Attorney General confirmation now expected this week after Blanche signed a order saying the
NVIDIA, wow, very strong NVIDIA. We got an opening range breakout on NVIDIA.
The Justice Department dropping vandalism charges against former Olympic canoer David Herman over the Lincoln Memorial reflecting pool. U.S. Attorney Jimmy Farrow saying the contractor botched the job, not Hearn. President Trump continues to insist vandalism. 3 people killed, 7 wounded at a fast food restaurant mass shooting in Twin Falls, Idaho. An Oklahoma state trooper in an armed citizen returning fire with a gun to ground.
Okay, NVIDIA. All right, looks good. Okay, let's see. SoFi. Okay, back to the 50-day SoFi. SoFi still going. SoFi. All right, S&P looking really strong here. S&P 500. Okay, we're at the opening range high right now. We dipped a little bit, but looks like we're going to follow through. Let's see what futures look like, the hedge flows look like. Okay, we're running up against resistance now, coming into resistance. Okay, we're running into resistance. Okay, S&P, we're running up against resistance right now. Okay, so we got a 99 percentile. Hey, Goosey, you missed me? Did you miss me? Did you miss me? Okay, we're starting to see a little profit taking right now. S&P could roll over a bit. We're right at the 200-day. No, that's not the 200-day. That's a trend line. Looks like we're trying to break out here. Wow, pretty impressive. Pretty impressive price action. Okay, everything is showing a little bit of profit taking except for Nvidia. Nvidia is still pushing. All right, Nvidia is still pushing. S&P looking very strong here. S&P very strong. Opening range breakout. Really looking good here. Nvidia. Opening range breakout. Wow. Looking good. Opening range breakout. Signals, volume, spiking. Okay, Nvidia. Let's see, Nvidia, Netflix. Okay, Netflix looking really sharp. Okay, we're looking for Netflix to get back above 85, 90. Right now it's consolidating. Nvidia's opening range breakout, volume spiking, exceeding the opening range. The average of the opening range, 9:30 to 10 o'clock, the average of that volume, just added up. The average exceeding 1.5 times, looking for strength. It's a good signal. If you want to sell into strength, get shorter term options. I understand that. Okay, Nvidia looking very strong, very nice. Okay, Nvidia. Okay, looking really good. So 10 o'clock, let's see what else is what else is working. Core weave, opening range high, we got rejected. Axon, body cams, police equipment. Meta opening range high. Pre-market high is way down here. The purple line is the pre-market high. Okay, so whenever you take out the pre-market high on volume, you can see what kind of signal you get there. So a close above the pre-market high on a burst in volume is a long. You put a stop underneath the pre-market high. This is really good. Up to opening range, this is showing a lot of strength. Same thing with Google backing off a little bit. Google backing off. Okay, Meta does look good though. Meta looking good. Just need Apple to turn the corner. Microsoft looking good. Opening range breakout signal, but we just got rejected. Enalium Pharmaceuticals. Okay, off the opening range high. You can see the signal how we need to see the breakout. So right now it looks like opening range, looks like some people taking profits off the table. Let's see, CrowdStrike, that's on the watch list. Looking for a breakout on CrowdStrike. Okay, that looks good. Okay, First Solar is number 1 on the S&P 500. That's breaking out, opening range. We don't have a signal yet, but it is taking out the opening range. This is First Solar, followed by United Airlines. Followed by United Airlines. Okay, NVIDIA is still going here. NVIDIA, very strong signal on NVIDIA. Wow, strength. Really nice to come back to Myrtle Beach and get this kind of reception. Okay, looks good. Lots of strength. Okay, what's SpaceX look like? SPCX? It's still sliding. SpaceX looks good. NVIDIA is still going here. Okay, NVIDIA a little profit taking now. NVIDIA took a little of these, the 205, 210s for a profit, took a little bit off there, just reducing my risk. August tends to be seasonally one of the worst months of the year. So aside from day trades, I have some longer term trades that have been sitting on losses that I want to exit. Microsoft, I had some calls that I've been sitting on for over, 2 months? When did we move out to August? I think it was sometime in May. We started rolling our calls out to August, from July to August. So I've been sitting on these calls for a while. That's really nice. $250 per contract profit on these spreads. Nice. Okay, everything is starting to show some signs of profit taking now, so that's a good idea this time of day. Let's see if we get a follow through. Pretty strong move on NVIDIA. Okay, I have to take a 2-minute break. I'll be right back.
Privately,
are terrified about the midterms, which are now right around the corner. It's August, it's November. And they're watching their polling numbers drop, like a rock. And they would like Trump to focus on affordability and gas prices and things like that, and they just won't. But when it comes to defying him with votes.
Check, mic check.
Okay, so it just feels like there's a lot of moving parts here. In terms of what kind of role Israel is playing or perhaps not playing at all, what do we know there?
Well, we know that Prime Minister Benjamin Netanyahu was in DC last week. They talked. Netanyahu has been taking sort of a hands-off approach. Trump announced for that part of the world that he had reached agreement with Hamas and Israel for Hamas to disarm and for there to be peace and harmony in that Gaza conflict. And yet, Netanyahu has expressed serious concerns with it. Hamas hasn't disarmed. Israel killed the Hamas leader just yesterday. So, we just don't know what's happening. And we do know that Netanyahu is pushing Trump to still ensure that Iran doesn't have nuclear weapons, which, as I said in the beginning, I don't even know if that's on the table. Trump says it is, but we don't know.
Is all negotiations, are they emanating from the Oval Office or is the State Department running?
I don't know. I don't know the answer to that. Trump said there would be talks.
Yep.
That's it. Yeah.
Well, we're all just kind of reading the tea leaves like everyone else. I think that's what the market's doing today. Wendy, thanks so much for joining us. Wendy Benkinson, Senior Editor for Bloomberg News. Follow the norms of protocol. I guess, obviously information and news release from the State Department. This is not much of a
No, everyone's waiting on what Donald Trump says, but what he says changes day to day. And what amazes me is how literally the oil market takes it.
and I think it probably feels like an too.
That's all it can work with,
Right?
right?
It's all it can work with and just discounting the news that's in the marketplace. And again, the most recent news is incrementally positive in that it's reconciling at least for the moment and negotiations presumably getting a little bit more support. So you see that in the crude oil market with the WTI crude oil off 6.4%, trading right around $79. The market reacting.
Yeah.
It could change today, it could change tomorrow. That's just kind of, if you're a trader, that's what you're doing.
And the oil surge has huge implications for the rest of the markets because every time oil goes up, then you've got the renewal of inflation concerns, you've got bonds going down. That changes how people price equities. And equities have not been making new highs for a while. They've kind of been bumping along the top there, but certainly have not revisited those highs.
Yep. So we're
NVIDIA looking good. All right, so again, let's go take a look at some of these other stocks. SoFi back to the 50-day. We need to get above the 50-day, reattack the previous highs. Obviously, MACD is turning, stochastic's turning, RSI is turning, so this looks pretty good. Still in this base. SoFi, still in a base. Needs to get above 2013. SoFi. Okay, additional stocks. CoreWeave looking good. CoreWeave coming off the low. CoreWeave. Meta, we like the double bottom on Meta. Big move on Meta. Very nice. Meta, you're probably going to be able to close those put credits for hardly anything. Let's see what these are going for right now. Filled orders, Meta. Okay, it looks pretty good. Meta looking good. Let's see. Some of these other stocks, App Lovin'. What's App Lovin' doing? I haven't looked at that in a while. Alnylam Pharmaceuticals. Can never pronounce that correctly. Coming off the low. That's number 5 on the NASDAQ 100. Intuitive Surgical, ISRG, turning the corner. That reminds me of Netflix. Netflix turning the corner, back above the 20-day, headed for the 50-day overhead. Amazon, of course, following through, just off the highs of the session. So you don't need to chase this. You can get a B and C pivot perhaps for an entry on Amazon. NVIDIA is still looking very strong here. NVIDIA very strong. Meta starting to see a little bit of profit taking. Meta. Okay, again, UAL, United Airlines. United Airlines, let's see what that looks like. UAL. Okay, breaking higher. Not significant volume. Look at the difference between the opening, see the opening range, that orange line, that's the opening range high. Pre-market high is way down there. The volume isn't spiking though, so less interesting compared to say something like NVIDIA, which has got multiple opening range breakout volume signals. So it tells you, when you see these orb signals, these high volume spike signals, it's telling you the stock is in play. I'd focus more on, especially if you're trading options, I'd focus more on a stock that's in play than one that's just simply bullish and above its pre-market high. I mean, there's another way to trade that, but GoDaddy, GDDY, GoDaddy off the highs of the day. Baxter International, open range breakout signals. It's starting to consolidate up here inside of Thursday's price action. Boeing, is that turning the corner? Boeing, breaking out. Boeing. Do I have any Boeing left? I don't think I do. No. What about the banks? Citigroup. Citigroup needs to get above the 50-day over there on the right. Citigroup, JP Morgan on the watch list, looking for that to continue. JP Morgan, opening range breakout signal, but we're fading at the moment. Snowflake off the opening range high. Oracle finally turning the corner, right? Oracle. Okay, looks like we're going to start to get some progress out of this stock after earnings. Earnings were a surprise beat back in May, June the 10th. The period ending May, reported on June 10th. Oracle looking good. Looking for a bounce. This is acting like institutions are building positions, so there's no hurry. Okay, when a stock starts to turn, yeah, it looks good for day trade perhaps. If you're looking at short-term intraday signals, but if you're looking for like a swing, it needs to base, and it's already starting to turn. It's back above the 20-day, so back above fair value on a short time frame. Intermediate time frame would be a move back above the 50-day. Intermediate term fair value is up here near 160 or so. Okay, NVIDIA is still looking pretty sharp here. NVIDIA, lots of strength.
We continue to try to balance and not expose the portfolio.
Okay, so we want to maintain that focus. Need to make.
Give up some of the exposure.
Okay, watch for some consolidation up here at the highs.
Which we often, seeing that portfolio like they often need to make your money into the launch and yet until they give themselves so often it is the case of just balancing some of these thematic exposures, you're taking into account consequences, generating what's needed. So I think in general that's our main focus. Of course, most of our clients are really exposed to the US, but along with that, there's lots of being talked about future investing in the US. But ultimately, there's some really interesting things going on forward as well. With the recovery in the European financials, the changing nature of corporate culture and look at some of the opportunities available across digital education economies like India. Plenty to be done internationally as well.
So David, alternative investments here. So baseball.
There's obviously no such thing as a system guideline of wealth management. You're catering things to the specific clients' situations. Having said that, once you get into certain figures, you can be looking for portfolios to at least 20%. Any figures that number, yes, that even fine. The key, of course, is about the alternatives have seen a revolution in the past 5 to 10 years. Semi-liquid evergreen products, which doesn't hardly at least the liquidity constraints from the market. Therefore, understanding the family but if you look at the track record for these private markets, especially things like infrastructure now is a bit more available for their pitch funding to work with. Combining those with public markets really is where you get the best combination of growth.
Nvidia is still going here, looking really strong. Nvidia very strong. Okay, there goes Amazon starting to turn back up. Amazon. I'd like to see an opening range breakout. Amazon. Wow, that is really nice chart. Nice chart. Okay. Wow. If you're still sitting on Amazon, this looks pretty strong. I'm looking for a break to the upside. Google's starting to bounce. Netflix pulled back a bit. Netflix.
story these days, just in fact, starting story these days. It's a tough one. People are really focused right now. SpaceX stock that they own, 30 billion stock, it's on the balance sheet. That sale still has not closed. Clear that. It's not a sale and we'll get control over those. So in the meantime, it's something to be struggling to restructure the business. Former CEO, let's start with you. After a new you got very recently. That's the truth. Businesses, people they don't really have spectrum assets left. They sold off most of the spectrum now to SpaceX and AT&T. They do have the geostationary satellites, which have value in the government sector. They've got a wireless business.
All right, SoFi, Microsoft, Google, looking for more upside. Google, Netflix. Netflix falling off a bit here. Netflix off the highs of the day. Got rejected again up here at the 74 area. Netflix. Trying to break the downtrend.
Find buyers for summer.
So you mentioned just kind of SpaceX, and then you're one of the Bloomberg Intelligence analysts that's covering this broad company called SpaceX. Stock's up a couple of percent today, but boy, it's way at $111 a share, way below the IPO price, way below the first print of $150.
Thing that's weighing on sentiment here, Paul, is that you have the lockup coming up soon, and so a lot of shares may hit the market if, you know, those shareholders, particularly Space.
All right, futures, keeping an eye. We do have resistance up here. 75, 75, 99 percentile. Okay, we're running into 75, 75 resistance. Okay, let's see what the. Okay, so we're in the thick of it right here. In the thick of it. A lot of positive gamma, so price should stay pretty sticky here.
Yeah, when we heard from Trolley, what we saw there was essentially people doubling down on those high protein cups, maybe spending a little bit less, but trying to figure out, okay, if I can move to that, also spending more on limited time offerings. So there really is this ongoing need. That's what always has been doing, but there's an ongoing need to really innovate and really put out something that's new, that really drives consumers in the door, maybe willing to pay a little bit more than what they had expected. And so I think we're in that same exact.
Oh boy.
To see how these beverage platform McDonald's just launched, was that enough for all these different fruit flavored, cold foam, different flavored beverages enough to get the consumer in the door and become willing to spend this environment for? We're all kind of checking your wallet twice. Yeah, let's go. Yeah, so definitely interesting there. I think the prepared section, the innovation, that's what's really driving it.
Intel. Intel, nice little change in direction for Intel. Netflix still falling off here. Intel opening range, above the opening range, no opening range breakout signal. Okay, Intel. Intel was a put credit spread candidate last week on after earnings. I never got into it, but it looked really good. And we're higher.
Sticking us all with trillions in debt and making everything harder to afford. As Governor Mark Sanford courageously protected taxpayers, vetoed court, and balanced budgets to safeguard our children's future. Mark Sanford, the proven conservative leader we can count on in the Senate to leave our grandkids opportunity, not debt they'll never be able to repay. American Leadership Action Fund is responsible for the consequences. Every parent wants to leave their children a better life. But Washington is sticking us all with trillions in debt.
Shut up. Jeez. Politics. Politics.
To safeguard our children.
Oh, these political ads, they're going to get fast and furious. Oh, man. All right, Intel still going here. Intel looks good. Nice trend. Just wish there was above average volume. I mean, there's a lot of volume, so the fact that it didn't give us an opening range, breakout volume, it still looks pretty good. Intel going. Let's see, what do I have left of Intel? Anything? Intel. I wanted to sell put credits. I'm all out of that. Okay. Let's see what Home Depot is doing. Home Depot. Okay, that's consolidating still. Okay, Home Depot. What's McDonald's doing? McDonald's. Okay, trying to clear the 50-day for the last few weeks. Unable to do so. S&P still looks pretty strong here. S&P.
Ladies and gentlemen, you know, the cargo is open.
Intel's still pushing. All right, NVIDIA also, the chips are maintaining a bid here. Opening range breakout signal, pretty obvious. Very active. In play, NVIDIA's in play. Still going here. I wouldn't be buying up here at the high though. I'd be taking profits off in the strength. Looking good. Where is my, there we go. Nope.
Play, really find some demand. So this is also another sticking point where if they find a reason to go risk on, it could be really explosive after earnings.
Good stuff. Charles, before we let you go, any thoughts on the market? I mean, July was quite the month when it came to particularly momentum names, which I know are some of the ones that you're watching. Diamond top of the NASDAQ, maybe you reached the measured move, or are we leaving that volatility? Or is it just going to be par for the course now going forward?
No, I expect volatility is actually to kick up with AMD and SanDisk earnings this week. The Qs actually entered correction.
AMD is having a nice reversal. It's still below Friday's high. Moving back into Friday's price action. AMD looking okay.
This has happened. Everything just centers around the Middle East, right? If there's negotiations that are actually going to take place, the markets are going to price in risk opportunities. We'll see AI jump, and we'll certainly see the NASDAQ rally a little bit more. What's really helping the NASDAQ a little bit more is the fact that the MAX 7 are starting to rally. We just saw Amazon make new all-time highs today. Microsoft's had great momentum since earnings. So, the volatility, I don't see it really slowing down anytime soon. A lot of it is dependent on news, but, we just kind of have to play.
Okay. Tesla breaking out to a new high. Tesla.
Stuff, Charles, appreciate it as always.
Volume pre-market was pretty high anyway, so right out of the gate. Tesla looking really good here. Let me see what I got with Tesla. Might want to add to it. Tesla. I have December calls on Tesla. Okay, December looks good.
And that goes back to what you were saying about whether.
Here on Bloomberg, the context changes everything. When news breaks.
Volume looks good on Tesla. Turn in the corner.
For all the context and clarity you need. Hear it first.
This time of day, I'd be looking for dips now. A lot of these stocks have ripped higher, like NVIDIA. Okay, looking for B and C pivot now. Looking for that A. Looking for an A pivot.
Commercial business. Sky News reporting that England and Wales have withdrawn support for Infantino's re-election. Bloomberg sports editor Giles Turner joins us now from London.
Looking for ABCD pattern. May not happen, but watching for it. Amazon turning back up. Amazon. Okay, looks like it's going to consolidate. Flat VWAP.
Certainly compared to what it used to be. He was assuming that his next tenure was only a decade. FIFA, he was looking at another 4 years. He said during the World Cup, 200 member associations, and all these nations and football associations will vote for him. 200 of 211 ready to vote for him. He was unopposed. The election was going to be in Morocco in March. The next part of the next World Cup is going to be held. And then you compare that to 1 week later, and everything has changed. It's very, very rare to get member associations to come out, especially individual member associations, and say they're not happy and they want to get rid of the boss of FIFA. You've had England and Wales say that in the past 24 hours. UEFA is pushing to get other member associations say to come out and do similar things, like but they will do. You've also got North American.
Okay, Amazon trying to push back up. NVIDIA very strong.
So whose privatization is bad? Why is everybody so upset about this at the Infantino?
I think that the real problem is the lack of consultation. This was done in a very closed group between very powerful people.
Okay, let's see. Intel. All right, so stocks are starting to show signs of profit taking. Okay, profit taking starting to come in. Here's your A pivot right there.
They always come out and back to Antino, even with the political risks that he brings.
All right, back to what's working in the markets. First Solar, S&P 500, First Solar is number one. That actually looks pretty good. First Solar, really nice looking chart.
So if you're going to do this huge change, you really need to get them involved, feel on it of the process. And they had no idea. FIFA itself had no idea this privatization plan was coming. So I think
First Solar, longer term swing candidate. Let's see, FSLR. So they had earnings last week.
Thank you so much for joining us on this story. I'm sure you will be back again. Bloomberg.
They came in with an additional 1 billion. That's pretty interesting.
For two key Republican senators.
No, they reported 1 billion. First Solar.
The end of jobs or the end of human health. Follow the noise. We follow the noise. The context and clarity.
First Solar maintained a buy at Guggenheim.
Two key Republican senators have dropped their opposition to Todd Blanchard's nomination for Attorney General. John Cornyn and Thomas Tiller said that.
Okay, Tesla looks like it wants to keep going. Tesla. First Solar looking really good. Tesla.
Well, because Todd Blanche offered basically a change, and the change was to essentially put in writing this deal that they objected to, and honestly, a lot of Republicans objected to, not to mention the Democrats. But that comes in the context of President Trump is continuing to say what he wants. He said that out loud at Camp David on Friday. He referenced it again in the first one last night. But it was the key criteria for these two senators to get over. Now we have to talk about the headlines questions and short time ago. The White House is calling a bunch of AI officials from companies to a meeting this week. Well, I don't know, but because as you said, that virus just came.
Okay, Tesla following through. Tesla pretty strong.
Very interested in the sector. The president has a pretty close relationship with the top heads of the technology companies. It's not unusual for him to meet with them. I don't know what this particular meeting is about, but they're watching closely. I was just going to whistle software of all the issues in Washington, D.C.
Okay, I gotta run and drop off this car not too far down from my house. Gonna take about a half an hour, I guess, to get everything squared away.
My answer to that is basically you're repeating the question back to you, which is he keeps doing it. And so pretty excited when he can say it was a new high, it was a new record. So he's very aware of the timing of his words and how that impacts oil markets, stock markets, all markets generally. But he also wants to be able to portray himself as a winner from this Iran war. And so if Iran strikes or does something that obviously did not fit with the MOU or what he considers to be their understanding, then he considers striking again and often does. And that sort of back and forth and those competing desires, I guess, in his head have animated this entire conflict for the last 5, 6 months.
Senate passes a continuing resolution to keep the government funded until December and pass the midterms. But the bill that the Senate passed takes out a lot of what the president wanted. Goes to the House now. How likely is it the two sides will agree enough to even bring the president into it? And if they do, is he going to accept that, given how firmly he seems to want the SAVE Act as part of it?
Terrific question. He's been pushing for the SAVE Act for months now. He's been sort of upset that the Senate and the House are leaving it all in August when they haven't passed that, but he just doesn't have the votes for the SAVE Act. So this has been a little bit of a way to get around some of that, bring in a few of the aspects of the SAVE Act that he wants. It's hard for me to say whether he will agree to it, but if he looks at the politics of A, the votes that he has now, and B, the fact that Congress is going to turn over completely in January, he may determine, I'll take what I can get. But I say that with the full knowledge that that is absolutely not what he's been saying up until now. But I suspect that's at least what his advisors or at least the lawmakers in Congress would like to see him do.
Jeff, such a joy to have you in New York.
Thank you, sir.
Thank you for stopping by here. That's Jeff Mason from our White House team. Now it's time for our metal spotlight, and Standard Chartered expects gold to rebuild its gains in months ahead, partially on those geopolitical risks we were just talking about, and central banks continuing to buy. Joining us now is Standard Chartered Global Head of Commodities Research, Suki Cooper. Suki, great to have you on. Thank you so much for joining. So 4,200 is your price target for gold. We are, though, seeing a Fed that doesn't seem as willing to cut as it once was. What gives you the confidence that there are still more gains to go for the precious metal?
There's a few factors here. When we're looking at the gold market, those structural drivers are still very much intact. And here we're looking at the central bank demand. We're also looking at that wider investor appetite to want to buy gold. And those drivers are still very much there, suggesting that investors are really looking for an opportunity to rebuild their positioning, rebuild those price gains. But also gold has factored in a lot of the headwinds already. As you mentioned at the start of the year, the market was looking at rate cuts, and now it's pricing in rate hikes. But we've also seen gold switching its focus away from some of those structural drivers and more so towards rate cut expectations or rate hike expectations. But we think a lot of those headwinds are already priced in.
Well, how much do you have to factor in what's going on outside of gold, in the sense that bond yields are still much higher, more attractive at this point, and they don't seem to be going down. The Fed, if anything, is going to be raising interest rates. So isn't the risk against a rebound in gold?
We have seen that correlation between gold and real yields, gold and the dollar starting to strengthen again to levels that we last saw back in 2022. So certainly in the near term, we think some of these macro drivers have become much more important. But if also we go back to the start of this conflict, gold was a prime candidate to meet liquidity needs. Positioning was toppy, prices were scaling record highs. So it was coming under a lot of pressure amid liquidity needs. That has now moved on, and we're now much more focused on some of these macro drivers. But we think gold is very much focused on these risks and is priced in. I would also say that our house view, our base case scenario, is that we don't expect the Fed to increase rates. So we think that once that nervous positioning starts to unwind, we'll see gold focusing on the structural drivers again.
Well, to that point, you point out in your calculations that over 200 tons of gold ETFs are currently sitting at a loss. Is the bulk of the unwind over, or does that loss in itself threaten more forced liquidations?
It's really interesting because we like to look at the price levels that these positions were established. And a lot of the positioning was built around 4,500 and above. So we've been sitting at this loss-making level for quite a number of weeks, and we've seen some of that downward pressure certainly in June and in July. But we're now in the midst of a seasonally weak period for consumption. India's demand is on the weaker side, and we're still seeing gold hold up very well around that 4,000 level. So we think that's actually a positive for gold, the fact that we still have these negative ETF positioning. We're in the middle of a seasonally weak period for consumption, and prices are holding up relatively well. So we do think it's a headwind for the gold market. We think it's likely to cap some of that upside risk, but we think that this base has been tested a number of times.
So you set a base, but how high can it go at this point? Do you rally back to where you were when the war started and everything changed, or do you just get somewhere in between?
We see 4,200 as our Q3 average, but going into Q4, we expect prices to average 4,650. So we do expect some of that upside risk to rematerialize. We do expect a retest of certainly over 5,000 level, but we think it will be a slower trek higher now. We're not expecting that sharp move higher that we saw at the start of the year, that was really being driven by retail investor appetite. We think some of that has moderated. We think we're more likely to see structural drivers and steady demand now pushing gold higher, as we still see that reevaluation when it comes to portfolio diversification and looking for that hedge in the market as well.
For the other commodities that you track, what seems most exposed to the upside in the AI infrastructure? But where are you seeing that theme play out most?
I'd say the two metals mostly across the precious metals are silver and platinum. Across the metals as a whole, it's really copper that we see a lot of that playing out. For silver in particular, I think what's really interesting is that yes, there's higher content that could boost silver demand higher, but we've also looked at the analysis in the broad industrial demand picture, and we find that the substitution risk that the solar industry is facing at the moment could actually offset some of those gains in terms of AI demand consumption. So it's quite a murky picture when we're looking at the industrial outlook. And of course, it's factoring in the risks around whether the AI demand boost will continue or whether it will start to moderate. But we do still see strong demand growth for silver and platinum on the back of AI demand.
Suki, thank you so much for joining. Really appreciate your time. That is Suki Cooper of Standard Chartered Bank. Coming up tomorrow, Nimrit King of North Star Asset Management and Johnny D of FTSE Russell and Amanda Lynham of Goldman Sachs. And we'll talk space ahead of SpaceX earnings with Phantom Space CEO Jim Cantrell. This is Bloomberg Open Interest.
People are getting more and more value out of Gemini and Chrome. We're evolving Chrome to be a natural AI assistant for everybody. You can run workflow across multiple tabs, unlocking really powerful productivity. It's going to be on us to continue to provide IT organizations granular controls to be able to deploy at the department level. And we're working to expand those same guarantees over more countries. Chrome Enterprise is ready for today and ready for what's next.
In the new Observably factory, we have revolutionized the coffee world by making a tab that is 100% coffee and nothing else. Discover the new machine and tabs online. A fad to some, the future of money to others. We see crypto's trillion-dollar swings. Others follow the noise. We follow the money.
So what do you do for fun when you're on break? I usually just play some games. Playing games? Man, come on, what's so fun about that? Well, I won $500 in my game earlier. This is a slots game. I won before too, but they never let you cash out. Man, you must have played a fake one. I just cashed out $500 to my bank account yesterday. Yo, why did you stop talking? I just won another $800. What game is it? Tell me.
This game is called No Luck. No ads, no withdrawal limits, and it's free to download. So go try it out.
Finish style conversation. Finish style refreshment. To finish long drink, you have to try it to understand.
And this is good. Good morning, this is good.
To the ugly trade.
It's number one.
This is
Wall Street.
Bloomberg deal. Listen to Bloomberg this weekend. This is Bloomberg Television. Bloomberg Tech is live from the front of Silicon Valley with Ed McClellan in San Francisco.
This is Bloomberg Tech. Coming up, Alibaba releases its latest plan model, its biggest ever, in performance on par with Anthropic. Amazon surpassed $3 trillion in market value for the first time, extending gains after a big cloud and AI-driven earnings report last week. AWS CEO Matt Garman joins us later in the hour. And how Apple is reinventing itself as a subscription giant. We'll dive into the details of the iPhone maker's Apple upgrade program and its next era of growth. There's an elite club that's getting bigger. Today's big number, $3 trillion. Amazon has reached the $3 trillion market value for the first time, becoming just the 5th company ever to hit that milestone. The stock trading at all-time highs following its quarterly earnings last Thursday night. From Friday into this Monday session, this is the biggest two-day gain on the stock since 2009. And the momentum has really carried through. Later in the hour, we're going to speak to AWS CEO Matt Garman. It really was AWS that was the big driver in earnings, the AI story. There's a lot to discuss. China's AI race accelerates. Alibaba to unveil Qwen 3.8 Max, its new flagship AI model, saying it can rival Anthropic's best. It's the latest in a wave of Chinese AI breakthroughs, challenging Silicon Valley's lead. Bloomberg's equities reporter Henry Wren joins us for more. Let's go with the basics. Alibaba sharing details of the model. The model clearly on benchmarks, it says is high performance, and the ADRs have reacted quite positively here.
Yeah, we're seeing Alibaba's ADRs trading up about 5% in US trading at this point. So the company said that it's a new Max 3.8 models rivals the US models, the Frontier Labs models, and some benchmarks. So, for example, on research reproduction, on agentic use of computers, these are strong suits. It also says that its model has 2.4 trillion in terms of parameters, and that's basically on par with the level that we've been seeing for the Kini K3 model, which was out a few weeks ago. Also, the company, yes, also said something about cost. Obviously, per token cost, it's a bit lower than the US Frontier models as well. $2 per 1 million tokens on the input side. You have a really strong command of Chinese technology companies from the stock perspective, right? Is Alibaba a name and really that trades on its AI? Or like some of these American multifaceted companies, a different part of its business? Yeah, the AI story is very important for Alibaba. But if we zoom out a bit, today it gains about 5%. But if you really look at the trajectory since June, you see that the stock is up about 35-40% from the June low. And the key story here is about the more optimism in AI. Obviously, we're seeing the Qwen breakthrough today, but really last month the company has a closed-door meeting with analysts, and analysts came out more optimistic about the company's cloud revenue growth. For example, JP Morgan is modeling about 45% in revenue growth for its cloud unit for the June quarter. So there has been an acceleration over there. But still, on the main business, on the e-commerce business, because it has been a company known for its main shopping site in China, that part of business is still lagging, although it's still the cash cow, so to speak. So investors' opinions are still mixed. So that's why we're seeing sentiment has been pretty weak into June. But since June, some positive AI announcements has really been boosting the stock.
Bloomberg's Henry Wren, thank you very much. Alibaba says its new Qwen model delivers frontier AI performance, and as Henry outlined, at a fraction of the cost. Could cheaper AI accelerate adoption rather than just pressure pricing? Joining us now is Lauren Cassidy, Chief Investment Officer of the Founders 100 ETF. The ETF tracking founders in this space, Meta and Zuckerberg, Musk and SpaceX. The economics of AI is really what the Chinese story is putting front and center. So I pose that question to you: drive adoption or lower the tokenomics here?
Yes, I do see this as a positive in that there's really a lot of open and closed models, and I do think it will drive prices a little lower. It isn't cheaper than Anthropic's Haku, but it is stable level performance, and it's about a fifth of the price. And so I think that that could put pressure on the elements, but overall there's still a lot that the American elements have to offer.
What are the advantages that the US models have to your mind?
Trust
reliability, additional features, convenience of not having to modify the model. So it just depends what an enterprise is looking for, what fits them best.
I'm looking at the Founder 100 ETF, and again, you feel free to remind us of the thesis on the founder side, but you don't have any of the ADRs for some of these big Chinese tech companies. What are the reasons for that?
I think that we believe that in American innovation long term, and just as we've had waves of innovation and greater adoption in the country, the steam engine, electricity, modern manufacturing, computers, and the internet, we are now on the sixth wave, which is AI. We think it's going to be a really big thing. We see tremendous adoption over the next decade, and we are very exposed to those stocks.
Let's shift gears a little bit. SpaceX has its first quarterly earnings call Tuesday evening. This is what I wrote, published this morning. It's the first opportunity that SpaceX investors might have to put the question of a Tesla-SpaceX merger to Elon Musk. Maybe. You and I discussed this before from the Tesla side of the table. But where does the 100 ETF stand on that idea?
Yes, we believe that's inevitable over time. Elon Musk is an incredible founder, and he is building the only closed-loop AI network. And over time, there's going to be more and more opportunities for Tesla and SpaceX to share. They're going to be building Terafab. I'm really hoping to hear details about that build out tomorrow. They'll be sharing chips. There's going to be a lot of opportunities for synergies between the businesses. It probably makes sense at some point to fold Tesla into the greater mix as we work towards data centers in space.
Lauren Cassidy, the Founder 100 ETF, back on the show. Thank you very much. Indeed. Another top story. One of the crypto industry's most trusted storage devices is at the center of a major hack. CoinKite, the Canadian company behind the cold card hardware wallet, says a software flaw made some Bitcoin recovery keys predictable, allowing hackers to drain wallets that were supposed to be kept safely online. According to Galaxy Research, more than 1,700 Bitcoin, worth about $110 million, has been stolen from roughly 5,000 different wallets. CoinKite says it has released a firmware update to fix the flaw. Another stock that we're watching, because of what happened over the weekend, shares of AMC, now modestly higher, 0.7%, have been much higher at the open. Highest ever total weekend revenue, including records for admissions and food and beverage, by the way. Why? Driven by the opening of Spider-Man, Brand New Day. Yet to see it. That film grossing $355 million domestically in the US. All right, coming up, Valor Atomics just secured $1 billion in its Series B funding round. Joining us next is Valor Atomics CEO and founder, Isaiah Taylor. This is Bloomberg Tech.
Finnish style conversation. Finnish style refreshment. The Finnish long drink. You have to try it to understand.
Stronger, not smaller is the decision I make every day when I choose to lift. It's the message I needed to hear 20 years ago, but never got. On Ladder, I get to coach women to lift heavy and build real, lasting strength. Strength training is permission to see what your body is capable of, to feel it properly, and test its limits. It's healing a younger version of me and protecting a future. I want every woman in strength training. I'm Kelly Matthews, senior coach on Ladder. Stronger, not smaller.
If the game you're playing right now can't hit a jackpot in 10 minutes, just delete it. Then come try 10 Luck. You have a chance to win big.
No ads, no tricks. Any price you win can be cashed out straight to your bank account. Just log in and claim your free daily bonus.
Blame luck. Blame now.
Huntington, River and Encore Turkey in Bloomberg.
Ballard Atomics, the company building America's first giga-sites, secured $1 billion in its Series B funding round, led by Sequoia. The company also closed a $200 million credit facility to build the world's first vertically integrated industrial nuclear power company. Joining us now is Ballard Atomics CEO and founder, Isaiah Taylor. You're also fresh off what now seems, with hindsight, a pretty key demo. That was a bit of an unlock for this round. You want to move quickly, so let's start there. What do you need the funding for, and how are you going to deploy it?
Yeah, and thanks for having me on again. Just a month ago, I was on the show talking about how we became the first startup in history to make nuclear power. We did that by powering an NVIDIA Blackwell chip, which was an amazing event. It was the first time that an advanced nuclear reactor has powered AI infrastructure directly. So you're right, it's been an amazing couple of months. We made a lot of progress. And really what this is about is giving us the firepower we need to go build the gigasites. We've now demonstrated nuclear power. This is the reactor standing behind me here. And we have to build a lot more of these in order to make pace with AI. AI is building very quickly. We need a lot of power in every direction. And this is really about scale for us. So this is the firepower that we need to go and build.
Sequoia led the round, but Sean McGuire is also going to join your board. Why is that important to you? What is it that Sean can give you other than just the check?
You know, it's been amazing to spend some time with Sean over the last few months and get to know the rest of the Sequoia team and the partnership. I think Sean's a really, really thoughtful person. He spends a lot of time with SpaceX and understanding that business model. And I think one of the lessons to learn from SpaceX is really just the power of scale and pace of production. And that's something that we want to do in nuclear as well. So I think that his lessons that he's learned there are going to be applied very well to this business. And I'm really excited to welcome him to the board.
You know, the numbers here are really big, right? So it's $1 billion round, $6 billion post-money valuation. But with respect, you know, this is still early. This is nascent. It is high risk. It is technical. How contingent was that demo that you did just on the show a month ago in literally making the round materialize? How much did investors want to see that this worked?
You're right. This is super early. And you know, this is a very long journey for us. We see this as a multi-trillion-dollar opportunity. We're going to go and build the biggest energy company on earth. So these are very early days for sure. You know, we have a lot to prove still. We want to prove pace of production. We want to go from building one reactor in a year to 6 months to once a month, and then even faster than that. So you're right, there's still a lot to prove. You know, I think that this demonstration is really important. We've said for a long time that Ballard Atomics is a hardware company. We're focused on hardware execution and on full vertical integration. And that's really what we proved here. We proved that we can take a patch of dirt, we can build a reactor on it, turn it on and operate it. And it's just one small step, but it's the first of many to go and build a nuclear power company of the future.
Isaiah, one of the things you and I have not yet discussed is who the customer ends up being. You know, you want to build the nuclear power company of the future. You've explained the scale of the tech. You've powered one Blackwell chip. I think that's important context for the audience, but who do you ultimately sell it to?
It's a really good question. I think that nuclear and energy in general is a bit noisy right now. You see a lot of deals getting signed that maybe are binding, maybe are not. We've been really, really focused and disciplined on this point that we believe this is a hardware execution problem. Everyone needs energy. They need it at any price they can get it, as fast as they can get it. And so really, really focused on just executing the hardware and bringing new power online. And I think once we get that new power online, that'll open us up to a bunch of really interesting customers who have large balance sheets, who depend on energy in order to build what they see as the future as well. And so that's, there's a handful of customers there that are interested in what we're doing, but we're going to stay focused and we're going to stay focused on hardware execution.
I don't know how much you want to talk about finance. I don't know if you're the finance guy in truth at Valar, but an interesting credit facility, Palmer Luckey's Arabor and JP Morgan, it's $200 million facility, but why was that important? You really sort of put it high up in the announcement today.
It is important to us. The long term of this business, right? We don't want to be relying entirely on equity, and we think that power is a uniquely debt financeable thing. And so moving this company from something that's equity financed to debt finance is a long-term goal of ours. And it's really great to be working with partners like Arabor who led this round, and JP Morgan, Preston and Barclays as well coming into it. And we're really starting to demonstrate to the market that this is a business that can take large amounts of credit, deploy it very well, get the yield on that. And this is how we're going to run the business going forward, is that these reactors will be financed. They'll be financed by customers, by different ways of putting these tranches together. And that's really how we're going to go and build all this capex. So we're excited to start to demonstrate this with everyone.
Let's end the conversation of talking about America's attitude and progress on your industry. Is America moving fast enough so that you can do the things that you want to do on the timelines that you've set out?
Look, it never feels like we're moving fast enough, right? We want to move so much faster than we are today. China has about 14 nuclear reactors under construction right now. And we're just starting to break ground on our next one here. So we need to move faster. If we want to win on AI, we have to go faster in all forms of power generation, but especially nuclear. I think nuclear is uniquely well suited to win the AI race. It's clean, it scales very well. You can build lots of it in one place next to a large data center. There's a lot of things that work really well for this, but frankly, we do need to move faster, and that's why we're so focused on our execution.
That's what CEO and founder Isaiah Taylor on the show. Thank you very much indeed. Let's get to the earnings story. Stay with AI next. Palantir set to report its second quarter earnings today after the closing bell. Joining us, Bloomberg's Lizette Chapman leads our coverage of Palantir. It's so interesting. But with these periods of times where we talk about Palantir constantly, then maybe it got a little quiet. Ultimately, the company has a lot of momentum. Right? What are you bracing for?
Right. It's a pressure cooker quarter, right? They have a history of always beating or exceeding analyst revenue or analyst estimates for every quarter on revenue, et cetera. So this is already the expectation that they're going to beat or exceed. And so even if they raise their guidance, it's kind of like, so what? You do this every quarter. And so the big thing that people are going to be watching right now is the concentration of sales, and whether it's in the US, whether it's international. This they are expecting really blockbuster growth for US commercial sales. This has been its strongest area of growth. And next quarter, for the first time ever in its history, analysts expect them to exceed, have commercial growth exceed government growth. So what they're going to be looking for this quarter is, has it continued that trajectory, and how are they doing internationally, which is something that we've talked about. Mark on and some other people on. So that's something that they're going to be looking at.
It's a really big point because, in the news headlines, Palantir comes up in the context of its work with the Pentagon or with different arms of the US government in a defense context. But they also have a lot of commercial case studies. So that's the moment in time it flips to commercial. But give us the basics of like what Palantir's business does, right? You always have to remind us, what is Palantir?
It is AI software that allows people to make the best use of the information that they have to gather data from all across different sources that they have, to integrate it, make sense of it, map it, and then throw an LLM up against it, whether it is from whichever company. Exactly. And so they've worked a lot on showing different partnerships that they have with some of the major players. That's something that they're going to talk about today, I'm sure, along with partnerships with NVIDIA and some of the rest. They have gotten a lot of attention for their work with defense, but it's actually the commercial, which is their fastest growing. And so we'll see how they do.
Alex Karp, the CEO, is vocal, let's say. He also talks about the markets sometimes, but is there a clear Palantir stock story of this year, of the last year? Like, how has
the market reacted to that.
Right. The market had massive expectations at the end of last year. The stock was up, it was almost up to 200 or so. And since then, it's plummeted from that high. It was trading at something like 247x earnings then. Now it's down to about 67x earnings, which is down from its 5-year average of 98x earnings, but it's still the most expensive stocks in the S&P. So a lot of investors are wondering where that disconnect is and whether it's really worth what it said it was going to be able to deliver.
This seems like a big one for the markets. Bloomberg says that happening with post funds here, but also defense capital. Thank you very much indeed. I mean, Apple's changing the way it buys devices. Why monthly payments could become the new normal. This is Bloomberg.
Some see heroes, others only negatives. We see the era of billionaire athletes. The future of money to others. We see crypto's trillion-dollar swings. The end of jobs. The end of human struggle. We see the endless funds fueling the AI. While others follow the noise, we follow the money.
My name is Paul, and this is my wife, Becky. We are standing in a newly remodeled showroom at some space in Myrtle Beach.
We're a veteran-owned company, and we've been building custom sunrooms for over a decade.
Our dedicated team ensures high-quality, efficient work on every project, no subcontractors involved.
With 3 custom designs to on-site project reviews and permit assistance, we make the process stress-free and easy for you.
Our goal is to bring your vision to life. Come see us at our showroom, and we will build the perfect sunroom for you.
I've never been more hopeful about Great check on Amazon shares at all-time highs. They joined the $3 trillion market cap club. And this is the biggest 2-day gain they've posted since 2009. Later in the hour, you'll speak to AWS CEO Mann and AWS, Amazon's key cloud computing unit. Apple is making a big bet that customers would rather pay by the month than all at once. It's the new Apple upgrade program designed to make your upgrading your device feel like a subscription. With Mark Gurman here with the latest power from this weekend. It's been really interesting to see the rollout of this. What are you trying to capture in this power? Where do you think this is headed?
Yeah, the fact of the matter is that you're going to see a change over time from sticker prices to subscription prices. The carriers have been trying this for years. It's been extremely successful for the carriers in the US and internationally. Obviously, Apple has gotten on a really good schedule of its new products, obviously new iPhones, and Apple Watches every September. The iPad cadence has really become fall and spring. The Mac, depending on which Mac you get, you're thinking fall or spring as well. And so there are upgrade cycles for consumers, right? Maybe I'm going to get a new phone every 3 years. Maybe I'm going to get a new computer every 5 years. But making it a subscription is going to get people into getting a new phone more frequently. They could give those phones then back to Apple. Apple could resell them on secondary markets. They can reuse the parts for new devices, right? Which creates a big cost savings and improved margins for them there too, as well as that secondary phone business. And then the consumer is paying on a recurring schedule. So the payments to Apple never stop. And over the long term, you're going to see Apple creating far more revenue and profit because of this program. In fact, Wall Street has been begging Apple to do this for over half a decade. So it's a long time coming.
So this weekend I did my first Apple upgrade. I took my 2020 Mac Air with an M1 chip, and I took the latest Mac Air 13 inches with an M5 chip. And I did the math, and it's a great deal. Basically, I can trade in still and still do the Klarna Apple upgrade. The thing that jumped out is I got to wait 3 weeks for that Mac Air. That's still an issue.
Yes, so as we wrote in Power On as well this weekend, the Mac Studio and the Mac Mini, those are no longer the only Macs with extreme supply shortages. Now it's the most popular Mac, which is of course the MacBook Air. And new orders of the MacBook Air are not arriving at this point until early September. So you're seeing the supply chain shortage shift from niche computers to the company's most popular computer. So that's not necessarily great. And so what they're doing now in terms of their marketing online and in stores, they're pushing people towards the base level M5 MacBook Pro, the 14-inch, which they have a lot of supply of still, and they want to sort of dwindle that down because they're launching the new M6 version in just a couple months from now.
Mark, just very quickly, we had a story on the terminal about how Siri AI stacks up against the new ChatGPT. What do we need to know?
Apple has a huge advantage by having Siri AI built into every iPhone now. That can run iOS 27 and the latest, large language models. It's competent, right? The promise of Siri has been there for 15 years. It's never really worked. Now it works. It's nowhere near as good or as capable as ChatGPT, but the floor has improved tremendously.
Let's Mark Gunn with the latest Power On. Thank you very much. So coming up, AWS CEO Matt Garman joins us to talk about the business blockbuster quarter. Amazon hits the $3 trillion market value club. This is what your markets look like. It's halftime here in San Francisco. This is Bloomberg Tech.
When control of Congress changes, entire sectors, like energy, can move with it. On Interactive Brokers prediction markets, Republicans have about a 19% chance of keeping the House as of July 7th. Think that probability is too low. Buy yes for 19 cents. Think it's too high. Buy no for 81 cents. Each correct prediction pays exactly $1 per contract plus interest. At Interactive Brokers, you can trade that prediction market in hundreds of other candidate races. Trade prediction markets alongside your stocks and options. The best informed investors choose Interactive Brokers.
Teams ready for agentic AI? 87% of business leaders believe AI will redefine roles and responsibilities at their companies within a year. Agentic AI's power also makes it adept at exploiting IT vulnerabilities. Serious innovation calls for serious investment and protections. Leading organizations are shifting to real-time AI governance, testing and monitoring agents, and setting clear controls.
Enterprises must establish rules of the game before agents begin to play.
Some see heroes, others only egos. We see the era of billionaire athletes, a fad to some, the future of money to others. We see crypto's trillion-dollar swings, the end of jobs, or the end of human struggle. We see the endless funds fueling the AI hype. While others follow the noise, we follow the money.
Business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bloomberg 10. Amazon has blown past $3 trillion in market value after its cloud unit, AWS, drove big earnings performance last week. The company says its AI business has hit a revenue run rate of $25 billion and its chip business notched the same milestone. Amazon also raised its capex plans for this year to $220 billion as it joins the chorus of tech companies backing American open models. AWS CEO Matt Garman joins us now on Bloomberg Television and Bloomberg Radio. Matt, it's great to have you back on the show. You know, this is the fastest growth for AWS in nearly 5 years, but to kind of capture a moment in time, can we start by talking about how much of that was driven by the frontier labs, the big ones, OpenAI, Anthropic, or how much of it was something broader across the enterprise, something bigger in AI?
Yeah, it's actually across the board, this growth that we're seeing right now. And much of that is some of the AI labs that are building their models on top of AWS. But actually, a lot of that growth is spread across all of our startup and enterprise customers, where AI is really impacting almost every single industry. And so whether it's financial services companies or healthcare companies or retail companies or media companies, really that growth is coming across the board as companies of all different sizes and all different industries are looking to use AI to grow their business. And so we're seeing a lot of growth from the top frontier labs, but for AWS, we're not like some others maybe just concentrated on just one or two large customers, but it's actually growth from a really broad set of customers, which is nice to see.
When AWS says the AI business has a revenue run rate of $25 billion, what does that mean? What does the figure encompass?
Yeah, that includes both training from very large companies like Anthropic and OpenAI and other large tech companies, as well as many startups. But also, and then a big chunk of that is really inference that broad swath of companies are doing. And so as companies think about how they take models in something in Amazon Bedrock and run those models to get value out of their business, some of them are automating processes. Many of them are running agentic workloads that they build on AWS to further drive efficiencies in their business or deliver new customer experiences. We consider all of that work, whether it's agent growth, whether it's inference, and some of that is training new models. All of that encompasses the AI business for us.
I think I've asked you this question at various points in time since you became AWS CEO. Is there a percentage split right now, training versus inference, that you can give me?
Yeah, you do, and it actually keeps shifting, I would say. More and more, it keeps shifting more towards inference. I think we still see large training clusters being used by a number of companies, but as these models get really popular and really powerful, more and more companies are integrating that inference into their workloads. So, I don't know the exact percentage today, but it keeps shifting more and more towards inference, and we expect that to continue as the economics make sense, where you really want most of that cost and spend being where value is being created for end customers.
Amazon's overall capex number for this year is very big, $220 billion. So it's up $20 billion, and you just explained that's mostly AI, but it also accounts for higher memory pricing, right? Because the cost environment is higher. But from AWS's perspective, what's the trajectory for next year? You expect that capex will be bigger still? Because I think one of the things that Amazon was quite clear about is that even at $220 billion, it might not be enough to meet current demand.
Yeah. One of the things that we're quite excited about is just the potential business for us is just massive. And we see this as a huge opportunity for us to really invest and help customers take advantage of the AI opportunity. And so we will keep investing. We think that there's a big opportunity for us and for customers. And as Andy kind of called out last week, we have really great insight into what that demand is going to be from customers. And so when we invest, and we will keep investing in CapEx next year as well, we have great insight into when that revenue is going to land. And so it's pretty well known for us. And as Andy mentioned, much of our capacity is already spoken through the end of 27 and even through much of 28. And so as we're investing, we're getting 5-year commitments from customers. We're getting these long-term commitments. And so we're out there making investments to keep being able to grow the business and try to meet customer demand. But as you say, today demand still significantly outstrips supply, and we're trying to build and invest to keep up with what customers are asking for.
And so we expect the capex number will be bigger next year than it is this year.
I I expect us to keep investing as we see opportunities, and some of that we'll see how the market continues to grow. But right now we're excited about our investments, and we'll continue to invest.
The chip business has also got a lot of momentum. You know, Trainium for some time has been a big part of the strategy, and we've discussed that. Been able to go and spend a lot of time in Anaplex to look at the server design. Let's talk about when you say the chip business has a revenue run rate of $25 billion, what does that mean? That's the business of selling the chips to third parties or renting out capacity based on the chips.
Yeah, renting out capacity based on those chips. So today we run all of our own chips inside of the AWS cloud, and it includes both Trainium chips as well as Graviton chips, which are general purpose processors. Graviton is incredibly popular. We've been building Graviton for many years now, and in fact, almost all of our large customers use Graviton as some part of their deployment, and it's a key part of how customers deliver extra value by lowering costs. Trainium is wildly popular, and as we've mentioned a couple of times now, we're largely sold out through the end of next year for Trainium capacity. It's really, really popular. We're starting to see both large customers as well as startups really love the cost benefits of running on Trainium, and having that choice in a cloud where you can run on purpose-built processors like Trainium that give you really great AI performance, together with NVIDIA chips for when you need some of that processing for GPUs as well, gives customers the right mix that they're oftentimes looking for. And so we find that combination to be quite powerful, and our Trainium 3 chips are really, really popular with customers right now.
We're live on Bloomberg Television and Bloomberg Radio. This is Bloomberg Tech in conversation with Matt Garman, the CEO of AWS. Explain the difference in economics between capacity based on Trainium and capacity based on Blackwell, for example. Like, what is the selling point of going with Amazon Silicon?
Yeah, we think that we think customers want choice, and so we offer great offerings for both products. Some customers really like to build on NVIDIA GPUs, and those are fantastic. And we're one of NVIDIA's absolute largest customers in the world. We've been offering NVIDIA GPUs in the cloud for over a decade now, and AWS is the most scalable and secure and stable place to run NVIDIA servers anywhere. And so we're very excited about that business. But when you add Trainium, we're able to lower the costs for many workloads. And so customers like to have that opportunity where they can take these really massively scaled AI workloads or inference workloads where we can tune them, because we kind of control that whole stack. We control the training chips, the data centers, and the inference stack, and can really tune that whole stack. And that helps customers lower their costs and improve performance. And we're really starting to see that flywheel go, where model providers of all types and customers love that they get that value and great performance. And we think that that's a real flywheel that we can keep turning, and we're quite excited about continuing to grow that business.
Can you make it tangible for me? What is the cost saving?
It's workload by workload, so there's not like a specific cost savings, but for workloads where we see this optimization happen, customers can oftentimes save 20-30% off of their inference costs when they run that on training.
Would you consider selling the chips outright as opposed to renting capacity based on them?
Yeah, we've mentioned that we might consider that in the future. Right now, we have so much demand inside of the AWS cloud that we really love that business, and so that's the place we're focusing right now. But it's an interesting opportunity, and it's something that we would definitely consider in the future.
The other big development was AWS signing the open weights letter. You yourself, communicated that. Why was it important to you, Matt, to sign that and participate in that?
Yeah, I think that, again, a lot of this boils down to customers wanting choice. And the big frontier labs have awesome models today, whether it's OpenAI running on Bedrock, whether it's Anthropic running on Bedrock. Customers really love using those models, but they also like being able to customize models. And so having a broad ecosystem of open weights models, I think is incredibly important for innovation. It's important for our customers. And so you think about things like the Nematron models from NVIDIA, think about Kimi 3 or some of the Chinese open weights models. Those really help customers be able to customize to their own data and really be able to innovate. And so we think that it's important to not over-legislate there and give that flexibility for customers to use whichever models they find to be the best fit. And that's actually why we really focus on having all of those available inside of Bedrock so that customers can choose which ones they want to use.
Not to over legislate. I mean,
We have an even playing field, and it doesn't mean that there's none, by the way. That
Starting to turn up S&P 500.
our industry is out there building up. And those
Futures just take out the high. Looks good. Okay, all the New York Fangs are looking better, except for Apple. Apple's the only one lagging at the moment. Microsoft, B pivot, ABCD pattern, potentially. Amazon, flat at the high of the day. Same thing with Google. Google back to the high.
And we'll continue to support in Bedrock, offering the Kimi models. I think the interesting thing is, so as you see many of these open weight companies, they're starting to think.
All right, SPCX, SpaceX, nice little follow through. We need a base down here. Day trade's one thing. I'm looking for an opportunity to swing this one. SpaceX. All right, Meta's looking good. Very bullish day in Meta.
that's where I'd like to end the conversation. The business case and economic opportunity for open models from AWS's perspective. So if the model makers themselves would like to make money, how does AWS see that going in your favor to make money from wide use of open models? Yeah.
Yeah, I mean, we basically, that is exactly what AWS. It's a great platform for companies to come and offer their become bifurcated. Not too much unlike email, say. Yeah, we think that ultimately
Google trying to break out. There goes Google breaking out.
and should be things where over time you find yourself more recursive life, more and more life. And that'll be a process that all society together.
Google breaking out, new high of the day, opening range breakout, pre-market high down below. Very bullish day.
Markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg deals.
Let's see, money magic levels for Google.
A different topic every weekday, only on Bloomberg Television.
367.50. We're above 367.50.
Rising demand for electricity in the US is fueling investor interest in backing battery startups, among them Base Power, which just closed a $1 billion Series D round at a $13 billion post-money valuation. Base Power's CEO and co-founder Zach Dell joins us.
We're trying to break through this area here. Looks like Google wants to go.
Inevitably, needing the funds is to scale, to get moving on the operations side. But let's start there. What is it you want to do in the first instance, Zach?
Yeah, well, we really want to scale energy infrastructure to meet rising demand for power. So we build a hardware product that we install on homes, and we leverage, it's a home battery that we design and manufacture ourselves. And we leverage those batteries to support the grid in times of high demand. So we're adding the batteries to the system to meet this rising demand for electrification of heavy industry, of transportation. We're adding capacity to distributed batteries. The grid is able to use those batteries when the demand is high, and the homeowners technology, much like wind or gas or coal. And batteries are really more akin to a transmission and distribution technology. So the way to think about it is that poles and wires move energy through space, and batteries move energy through time. And so the battery is really a utilization tool that is helping increase the capacity factor of the system and bring down costs for everybody.
So I ask you that because the energy or electricity generation isn't the problem here. What is the problem that the Base Power is trying to solve for?
Yeah, we've got a utilization problem on the grid today. So the grid is really built for peak demand, which means that most of the time we're not utilizing all of the infrastructure, which ends up being very expensive for ratepayers or consumers of electricity. So by deploying batteries to the edge of the grid to increase utilization, increase the capacity factor, and lower costs for consumers.
Trying to continue Google. Tesla looking pretty strong as well. Tesla.
Well, Texas is a fantastic place to build companies and also to establish manufacturing. And we see actually huge advantages in co-locating engineering and manufacturing because the team that designs it needs to be able to be very close to the team that builds it. So by coupling engineering and manufacturing, that done by one team, one company, one location, you get a bunch of efficiencies. It is much easier to you can move a lot faster.
What was the importance of assembling
infrastructure and meet the moment, meet the rising demand seen from
Tesla. S&P continuation here. Looking pretty good. All right, this 99 percentile is getting chipped away. 75.90. This was earlier, 75.75. 75.90. Wow, pretty impressive day. Pretty impressive. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, August the 3rd. Coming into the 12 o'clock hour. All we need is Apple to turn now. We'll have all 10 New York FANG components turning higher. Tesla's at the highs right now. Google's trying to continue. It's a bit extended. I would not buy it up here. I'd be taking profits off if you're day trading. We'll see what tomorrow brings. What's Core 1M doing right now? Core 1M is currently, why is it not displaying? Oh, it's at 5. Core 1M is back down to 5. So I'm reducing risk, short-term options, anything that I've have 2, 3, 4 weeks to go. I'm reducing exposure into strength if we have profits. I'm just taking what profits are given. I'll reassess the markets later this evening, but Core 1M is at 5, so spasm risk exists, which means we could be lower tomorrow inside of today's price action. For now, it looks pretty strong. S&P continues higher. Okay, we're above the 50-day. We're making a new high. A new high. We just took out the July high. Okay. S&P taking out the high of July.
Spider-Man brand new day was the biggest debut in Hollywood history, with a movie I paid $360 million in the US. In Canada, it was a smashing success. In China, too, pulling the country out of its post-pandemic Hollywood slump and contributing to a global box office debut of $927 million. That does it for this edition of Bloomberg Tech. These are the earnings that we're looking at this week. Earnings continues. We've got Palantir, SpaceX first ever earnings report as a public company. AMT, a big one in the A. Fast start to the week. You know where to find it on the terminal, on all Bloomberg platforms, and online on Apple, Spotify, and iHeart. Have a great week. This is Bloomberg Tech.
All-time high is not too far away.
Opportunities don't stop when the market day ends.
This is crazy. All right.
Schwab gives you round-the-clock access to
Your all-time highs just overhead.
ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24 hours a day. No matter the hour, you can trade brilliantly with Schwab.
Some see others only bits.
Okay, 50-day, 21 days turning up very sharply. Looks pretty good. Let's look at the New York Stock Exchange and junk bonds. Let's see what junk bonds look like. Lower. That's not good. The 10-year yield fading. The 10-year spiked last week thanks to the Bank of Japan selling U.S. Treasuries. That forced selling mechanically dropped the U.S. currencies, which means yields moved higher. So you saw that what happened on Friday, but we're fading now. So that's a good sign, good start. Okay, we're starting to fade. New York Stock Exchange. Okay, we're back up to the highs, 2,400 components. Let's see what the comp looks like. NASDAQ Composite, much better. It's kind of hard to get too bearish at the moment. IWM, turning back up. 50-day, needed to hold the 50-day. We're back above the 50-day. Wow. So a week ago, the president said it'd be a good time to buy again. We continue to slide, but now we're starting to turn up. So delayed reaction. Let's see. Snowflake. Snowflake looks like it wants to go. Snowflake is breaking up to new highs. Broadcom, we want that to get above the 50-day. Okay, but Snowflake looks really good here. Snowflake coming out of a squeeze. Day 4.
With Doctronic, answers come instantly, right from your phone, all for free. Just Doctronic it.
If it's not in your hand, it should be in a holster. End of discussion.
Okay, so you shower with it, you sleep with it, you sit on the couch with it digging into your ribs.
Then it goes to the big safe.
What, across the house, bolted to the floor? So every time it comes off your belt, it's a full lockdown?
So you're saying just leave it?
I'm saying secure it without burying it. Stopbox lives where a holster can, where a vault makes no sense.
If you were serious, you would keep it on you.
You can't. And pretending you can is how mistakes happen.
ETF IQ, I'm Scarlet Fu. Let's get to the biggest stories right now in the almost $22 trillion global ETF industry. A resurgence in risk appetite this Monday. Stocks and bonds rally as oil declines as Middle East tensions ease. South Korea pledges to curb retail access to leverage ETFs after a rout in membership makers. We're going to discuss all of that with Sean Taylor, who helps manage the M-Port ETF. And Corgi looks to take the crown. The firm aims to compete with traditional asset managers as it launches 500 funds in its first year. As always, we're going to get things started with Eric Balchunas, our senior ETF analyst from Bloomberg Intelligence. He is here with us, and he is checking out the flows. Eric, what do you see?
Scarlett, we have a really unusual situation in the flows. This is something you'll probably never see again in your life, which is the top 3 ETF flow getters. This is out of 5,400 ETFs, are all semiconductors. I've never seen that. Look at the
All right, so we're starting to fade a bit. S&P 500.
2.3. This is leverage,
Oh,
by the way.
it's off the screen. That's why. Looked like it was fading. We're still making higher highs and higher lows. Don't mind me.
For the semis anyway, so you can almost move that up here. Anyway, what's going on?
My futures chart was stuck behind
Is like the
price label. Okay.
So they piled in to play the rebound last week, and it worked. It went up 7% Thursday, Friday. I think some of this money may come out this week as they take profits. Also, some money into XLF. That's kind of interesting. Probably a rotation. Qs, and then look, you got to go all the way to the end to get the Vanguard. That's how much trading activity is going on right now in the markets in this space. Let's look at the outflows here, and you see a little bit more of some of the normal ETFs, IVV and SPY with some outflows there. Perhaps that's a little bearish. Some money in RSP, that's that equal weight that you would buy for the 493. You wanted to see some of those smaller large caps get more weighting. And then some money out of TLT. There was an article on this. We call it the Widowmaker. It lures sailors to shipwreck all the time. And it did it again last week. So people basically licking their wounds, taking some outflows there.
Okay, Snowflake looks like it wants to keep going. All right, Apple's starting to turn. Apple.
Semi-trade. That, if you add up all those ETFs, this is what the flows look like week to week, right? No big deal. Look at lately. It's just getting crazier and crazier. Last week, record 12 billion. I mean, that is a lot of money for what is an area that only has like 1% of the assets. Now, because it bounced, it went down, people piled in. Now, because it bounced up, I would expect, Scarlett, that we see some outflows next week as some of these traders take profits.
Yeah, those lines just
Okay, Apple's starting to bounce.
resize that chart. Joining our conversation right now is Amrita Nanda Kumar.
There's no volume. No, there's a little bit coming in right now.
With the semiconductor ETFs, Eric talked about how they kind of dominated the list of
Apple. See where we go with this. Apple.
Innovation as well. It's the flavor of the month, but how can you tell when it's overplayed? Because at the end of the day, there aren't that many companies as opposed to maybe perhaps other sectors.
Well, first of all, it's great to be back. So thank you for having me. Yeah, I think this is just a case of issuers really following the demand and going where the money is going. And so, semiconductors, it's interesting. I feel like people use that as an umbrella term, but really what investors are looking for is the physical bottleneck, which in this case is high bandwidth memory. So, NVIDIA could process all day long, but without that high bandwidth memory, what's going to feed it the data? And so what I think investors are saying is, why do I need to buy that broad semiconductor ETF? Why do I need to go broad tech? Let me find a fund that has really narrowed the supply chain as much as possible.
Okay, we're pushing a bit higher. Apple.
Massive inflows into these products. So certainly SMA.
I bought a few 305s.
For semis.
Apple.
We're seeing these finely sliced and diced funds getting onto Eric's leaderboard, and I think as long as the trend continues, that's what we're going to see.
So you follow the market, and you have some notes in here about just like how difficult it is to have hit products because there's so many products. Soxel, as you saw, is a leverage ETF, huge hit. It's inspired a bunch of others, right? There's like 2x, 3x, everything now. Bunch of AI ETFs coming out.
Apple turning up. Apple starting to turn. I bought some Friday 305 calls.
At the end of the day, because of all these.
Okay, we're just out of the money.
What do you see? Like waves of closures.
I think this is a case of issuers needing to be more realistic about what their economics are going to look like at the end of the day. So on paper, having 1 or 2, 3 anchor funds to subsidize your entire lineup is great. But number one,
What's Amazon? Amazon's still consolidating.
If that theme or that trend reverses, there go your economies of scale.
And if you were marketing 30, 40 basis points for your thematic, for your leverage fund, that's great. But the real cost there to issuers, well, that's billions of dollars that I have to raise. And
Okay, for now, it's just like shorts covering. So if this rolls over, I'll just go ahead and take that off. But looking for Apple to continue.
And what I don't think issuers realize is that is one
For now, it's just short covering. So we need to see a follow through. S&P is at the highs. S&P 500 at the highs.
To be reviewed by the buyers. But if you have a history of throwing a bunch of spaghetti at the wall and then just pruning away, that's going to give these gatekeepers pause as they consider, well, is this a holding that we'll be able to keep in our models?
You mentioned in your notes that automation technology has made it easy for issuers to file ETFs. The ETF life cycle does not lend itself to automation technology. It's easier to file just the as a result. And is it just as
Let's see what they have to say over at CNBC. Apple turning the corner.
Is not reflective of top management reality. So as you said, with automation, you can.
It's not disputing and debating the fact that the momentum in this name was gone. It was done, dead, and buried.
By the way, still gone today, even with a 25% rally.
Well, because
Still gone.
Here goes Apple.
the period of uptick isn't long enough to declare that it's back.
Correct. You need to roll through the course of time. The analogy here to me is where Apple was 2 months ago, 3 months ago. And I want to point out that if you go back a year ago, we were talking about Apple in a very different tone than we were 2 months ago. We were talking about the worldwide developer conferences in which there were basically duds coming out.
Can we get back above the 50-day? Apple watching.
And yet, since that time a year ago, over the last 2 or 3 months, it's had one heck of a bid. I think that's a very similar analog to a fundamental discretionary manager to what's gone on with Microsoft over the last 12 months. It was looked at as a dud for many, many times. There are many reasons for it. Copilot wasn't enough. They didn't have their own model. Azure wasn't growing enough. But now it's broken out. And I think where we are with Microsoft now, not in the rules.
All right. All the New York Fangs are up. We got Apple turning the corner. If we can just get Apple to get back above the 50-day, that'd be great.
It's done.
Yes, how do you declare it done? They have one earnings for the next stock. This is a traditional. This happens almost every time with Apple. The stock ramps into the print, and the stock sells a little bit off, and then
this isn't a little bit off. It's 10%. And first off, I sold it before the earnings because it was priced for perfection, because it had the run, and because I'm discretionary. And I look at the valuation of Apple at mid-30s, and I look at the valuation of Microsoft mid-20s, which I doubled up.
Okay, all of these are at the highs of the day. Apple's trying to turn the corner. Somebody took some profits there.
And that's exactly what I did with Apple last week. I'm not going to take any heat for that. Will it get to 400, as some people say, Scott? Yes, of course it will. Not in the next quarter. It's in the penalty box for now.
I'll go to Weiss, who is literally taking monochromatic to an entirely new level today. A man who has managed to pick a shirt that matches the art, that matches the wall. Weiss, that is a skill. Congratulations to you.
Thank you. Well, this is the East Hampton box, so that's all I can say about that. Look, I took a different approach, which is that
Snowflake trying to break out.
Our executive producer on Thursday, I took the opportunity to decline in minute.
Futures.
It up considerably.
Just off the highs of the session. Futures.
I bought before, but I bought it on the top to size that up considerably because I see opportunity in both. Take with the valuations, they're still very, very inexpensive. I mean, you've got Meta trading at 11 times EBITDA cash flow and 17 PE. Both are at pretty good discounts for the market for these kind of stocks. The market overall PE. So why not take that opportunity? It's the same bet I made when Meta was trading, and I've owned it for a very long time. But when Meta was trading above 600, close to 800, is that Mark Zuckerberg, he's going to be able to navigate this. He's not a prisoner to any prior moves that he's made. In other words, if he doesn't think that it's working, after giving it a reasonable time, he's going to get out of it. He's got the same.
New York Fang breaking out of this trend.
That's why I added to Meta, because it's very cheap. Microsoft, look, I don't think all the questions are answered by any means whatsoever. But what I do know, and what my view has been on cloud, which informed by adding to Google on their, is that cloud is going to, the need for cloud is going to continue to grow. It's exponential in terms of the need versus non-AI. So you're still lagging what the demands are for cloud. So both should do well. We still don't know what's going to happen to Microsoft's software business. I also bought a small trading position in Apple, which is ill-timed right now. But as we always see, you see some enthusiasm with the new Siri and with the new phones coming out, the 18 in September. So I think there's opportunities to be had. So I like being an active manager at this point. But to Joe's point, why I'm invested in Joe is because his screens will catch momentum before I catch it. So that's the benefit of it. So on any given day after earnings, you may win, you may lose. But if you take even an intermediate term approach, you'll do okay.
Yeah, but part of the issue is that now
Apple, no follow
Joe
through.
can't do anything in Microsoft for the next 3 months. So what do you mean? He's going to catch momentum before you will. There's a possibility that you're going to have a renewed momentum that could literally last for the entire period that you can't do anything.
Allow me to take the other side of that. Allow me to take the side of it that says, wait a second, Joe, what you've expressed in the first 5 minutes where you seem to have personal regret that the ETF sold Microsoft, that you wish that it did. No, you have to follow your rules. We sold Oracle, we sold Palantir, we sold Synopsys, we sold Microsoft. What did we do?
Google looks like it wants to break out. Google looks like it wants to go.
Believe it. So maybe we are selling nothing more than a recovery rebound in software. When you pull back the larger trend of a lot of people have been punished in that. We did identify in the case of Palantir, January of 25, we're at 16. Okay, we're out now at 125. Earnings tonight. And it has been a stock that over the last several quarters has had remarkable earnings. But yet the reaction to earnings has not been favorable. So look, I don't know the answer, okay? But maybe the possibility does exist that we are getting in front of what is nothing more than a rebound, recovery, bounce of software.
I'll come back to this in a moment because I want to get a little more on Palantir and I want to get a little more on Oracle.
Google looking good.
The next thing that I want to do is what I would call an A plus B. Okay. In terms of the takeaways from hyperscaler earnings that we've gotten so far. The A
Cerebrus looking pretty good. Cerebrus still basing here. It needs to get above these levels.
If you put that together with B, which is B of A saying that the
We need to get above this level right here.
okay, that's A plus
Cerebrus.
B. You got the ROI, you got the commitment to keep spending. The C is that investors are rewarding the hyperscalers. Okay, Bank of America's flow show, tech saw 15.7 billion in inflows last week. Deutsche Bank talks about a rotation back into tech having rebounded sharply after slowing.
I like the equation. I'm going to add a variable to it in a second, but I want
Cerebrus.
to A, B, and C. First off, you got on A, ROI. You are getting things from like Amazon saying that when they invest in the data
Google
center,
back to the highs. Google.
So that's a very strong ROI. Then B, in terms of continuing the build out.
All right, S&P turning back up.
750 billion of capex this year. That's going to 1.2 billion next year. Nobody's blinking, period. Nobody's blinking. And yes, that is leading to the hyperscalers outperforming. Point C. Now, there's a little variable that we do have to consider as we go forward. We're not going to answer this today, but the financing. Okay, free cash flow is being used up. You know what? I like where you're going, and I'm sorry to cut you off, but it's something I wanted to say earlier. How many times, Joe, have your rules looked at something that I'm in and said, Jimmy, I wouldn't be there. Okay, so as much as I think we've given you just a little bit of grief about Microsoft, it's okay. It's okay. It's okay. There's times that your rules do extremely well.
You have a much easier, temperament around taking some off the table of winners rather than cutting bait on losers and moving on.
I think that's absolutely true. And what I said earlier, I'm trying to buy low and sell high. Let me be clear, and everybody who has watched me for a long time knows this. I don't always get it right. Nobody always gets it right. I get it right enough that the strategy works. Maybe I'm not sure the Oracle's going to work, but I think it is, Scott. I think it is.
Well, do you take Joe's rules as sort of guideposts?
Futures are trying to break out. Futures,
They're a matter of fact.
S&P. Wow, S&P is just super strong today.
Gotcha. Mine is based on analysis, and I'm going to use this word discretion, as opposed to.
Look at all this purple, all this positive gamma, holding prices at bay, basically. A nice grind higher.
It's kind of. I see those 5-year credit default swaps at 200. Yes, that has my attention. That this is a pretty risky name. I've sized it appropriately in the portfolio. I've not added to it right now, or really for the last 6 months. We'll see if it catches a bid here. But they do need to show the ROI that was part of B in your equation. They're not going to report for, I don't think, another month, Scott. But every earnings report here is an opportunity for them to show that they are getting an ROI, like Microsoft, like Amazon, on the substantial investments they're making.
You have that too, Oracle.
I do, and look, just so you get Oracle, you get Microsoft, right? Rules base says get out of Microsoft, but fundamentally Microsoft's improving. Oracle is a value stock. We sold half our position. We said let's just see where it goes. It's a small size, and I think the opportunity there could be a lot larger when A plus B equals C works.
And you don't get big opportunity without big risk. That's just not how it works. Okay, this is big risk. This is big ball. This could not work out. I suspect it will if Microsoft's going to work out, if Amazon's going to work out, if Alphabet Web Services is going to work out.
Why are you putting them together as if
they're in the same business?
Well, then why aren't they? Why are they trading differently?
Because a couple of reasons. One, for instance, let's compare it to Google.
Their balance sheet's the same size.
Hang on a second. I'm answering your question. I mean, if you're looking at, say, a Google, they have a large language model, models plural. They also are designing their own chips. We've talked about that triple threat. That's not present in Oracle. In Oracle, we're all talking about just data center and the ROI on data center. Obviously, Amazon's got a number of businesses, not just chips, but also the retail. Microsoft's got a software business that, as much as it's been pilloried over the last few months, I think that's been wrong. So, look, bottom line, Oracle is risky. Obviously, it's risky. That's from whence comes return.
So I heard you say before, for the next quarter, Apple is dead money.
Yeah.
You're expressing this enthusiasm and confidence that Oracle presents a great opportunity here. Can you put a time frame on it? Because here's what I see in Oracle.
Yeah.
I see a stock that over the last year is down 45%, down 28% year to date. The 12-month price target is ridiculously higher at 253. We know what the condition is as it relates to its usage of debt.
Just keep in mind, Core 1M. Core 1M is at 5, or was.
Do you think this is a stock that's
496. This is crazy. People are still buying like crazy.
Yes, but how about before the next all-time high? Let's just look at the last 3 months, right? This stock
Individual options,
what's happened
implied volatility.
Extra variable that I'm talking about, concerns about funding, and particularly with regards to OpenAI to get the funding.
With people chasing calls.
Now, I'm not going to minimize that. That's a real risk. Again,
Okay, so let's take a look at S&P from that perspective. Let me just fix this real quick.
It's a lot of other large language models and cloud clients. So the market is treating this as if this is all on OpenAI and will they get the funding, et cetera, et cetera. That's what's produced the value that a discretionary manager like myself Well, there to say Surratt can come in and buy. Doesn't the market know that though? If the market know the market knew everything, there'd be no opportunity. If the market knew everything, there'd be no opportunity for any of us to be on the show. There'd be no opportunity for us to generate alpha. The market does not know everything.
Go ahead, Vice.
Yeah, I think I don't know how you look at value here, Jim, but I see a PE that is higher than Meta. That's right around where Microsoft is. Yeah, EBITDA, their EBITDA is okay on a valuation basis, but still higher than where Meta is. So just because the stock is down so meaningfully, I don't think that defines value. I think the valuation defines value in conjunction with the balance sheet.
They keep talking about Apple. They're going to knock it back down. People are going to sell it.
Because in order for them to drive, a higher PE, you're already going to get there with Microsoft and Meta and Google and others that present a much more compelling valuation proposition.
Hey, Steve, I 100% respect what you're saying. And it's just a difference of opinion that you and I will have. And you've chosen to go with the horse that is Meta. Absolutely fine. Yeah, so let me give you the numbers, and they're up on the screen here. It's trading at a 17 time Oracle, trading at a 17.5 times forward price to earnings multiple. And here's the big if, Steve, it's a big if. If the funding for OpenAI and all these other large language models come through, that PE in the coming years goes down to like 13. I'm not sure if it's possibly that you're looking at the trailing multiple if you're comparing this to Microsoft.
I'm looking at 26. I'm looking at 26 and 26.
Just saying what's on the screen here. What is it right there? 17.3. I don't know. You know what? We don't have to argue about the multiple. The two of us have made our bets on basically the same thing, which is that the AI trade and the infrastructure build out is going to be positive free cash flow. Both of these companies, Meta and Oracle, are having negative free cash flow right now. They're both being painted with the same brush. I respect your choice, and I've made mine.
Just to add to Jim's point, look, you're looking at the PE, but in our view, my view, I'm going to speak for you, the E is lower than what we think it is. So the E is the one that's going to go higher, and that will then compress the multiple, which will then give you a higher multiple down the road.
The other thing.
So do you think, just one more second, good Scott. So do you think I'm looking at Meta and Microsoft because I don't think the E is going to go higher? That's what you look at in every.
Yeah, Rich, same thing. Same thing here. I had Microsoft. I've been holding on to Microsoft since, I want to say,
You say the earnings are depressed and they're not going to recover. They say the earnings
like April, May, I started buying some. I rolled the contracts out. Not as large a position as yours. I only have 50, but I took most of it off today.
Because there are things that are out of their control dealing with OpenAI, and they made the bet on OpenAI that they're going to be the winner, and I'm not so sure that's the case. So I'm not only betting on the company, I'm betting on another company that's had somewhat of jaded history, despite how relatively new it is to the investing public.
The other thing I wanted to do is you upped your because you sold it. You've sold it. It speaks for itself as to why you've sold it. Now we'll see what happens with the earnings tonight. The cyber exposure, which you've upped. Stocks that have gone through various forms of momentum gains and losses. There was a moment where it seemed it was gone, and then it came back, and not only came back in a big way. Now you upped your exposure to Okta, Palo Alto, and Fortinet.
Yeah, it came back really fast. If we remember, it was that month of April through May where you had that staggering rally kind of out of nowhere. So you get your first opportunity. Personally, I reestablished a position in CrowdStrike. And it's interesting because, this entire conversation that we're having, there is validity to recognizing where there is fundamental momentum in the market. And I think we all have to be very careful with one earnings report reversing what the appearance of fundamental momentum might be. So in the case of cybersecurity names, they very clearly have very strong fundamental momentum and they've carried that forward. But think for a second about the last week. You said Apple next quarter goes nowhere. I'm not disagreeing with your price direction, Paul. But has the fundamental momentum changed that much from where it was previously? Now we're talking also about Microsoft. Microsoft came in with awful fundamental momentum. And one earnings report, we've changed that. So price has a way of very quickly in a very short time frame changing sentiment. And I just caution everyone, be a little bit careful with that.
So speaking of AI, we are getting more details of a White House meeting with AI executives this week. Kate Rooney has those details for us. What are we learning here, Kate?
Yeah, so we are just hearing from a source familiar with this meeting that AI giant Anthropic will be in the room. Representatives for that company plan to be there at this White House meeting that they're planning to hold with industry partners. The White House separately confirmed that they are hosting this meeting. It's to go over this framework and this executive order. Remember, that was signed back in June. A lot has changed since then, and we do expect some of the biggest names in AI to be there to talk about this and to go
Apple going.
From what we're hearing. We do also know OpenAI CEO Sam Altman was there last week to talk about a bit of this. Jensen Huang as well. We are hearing there could be others. We haven't heard specifically.
Apple going here.
But Google, also some of the big industry names that could be in this meeting. But we do know for sure Anthropic representatives will be there tomorrow. Scott, we do plan to get more details about kind of what goes into this executive order signed in June. It's in on details. We'll get a lot more.
All right, good stuff, Kate. Thanks for that. That's Kate Rooney. Coming up, the big stakes, SpaceX this week. Lockups expiring, earnings looming. We're going to get set up for all of it when we come back.
Apple working. Okay. Do. Okay, Apple going some more. Apple. Looking good. Apple pushing through VWAP. Can we get through VWAP here? All right, Apple looking very good here. Apple.
Welcome back to Halftime Report. I'm Christina Partsinevelos, and I'm here with your CNBC News update. Acting Attorney General Todd Blanche now appears headed towards Senate confirmation after two Republican holdouts backed his nomination.
Apple looking good. What's up, bud? What's your name? I'm gonna mute.
appearance.
All right, Apple looking good.
All right, Christina, thank you. Christina Martinello of SpaceX shares around their lowest level since going public. And some big events are looming this week. The much talked about lockup expirations, earnings tomorrow. We'll focus on the lockups first. That's where the biggest drag on the stock has clearly been. Morgan Brennan joins us now with the details as we look ahead to that. Hi there.
Hey, Scott, that's right. Stratospheric milestones for SpaceX. Well, let's start here. It's a supply story. So when the first stock lockup expires on Thursday, you got 911 million shares owned by about 20% of insiders and early investors become eligible to sell. Just to put that in perspective, SpaceX sold 629 million shares, or less than 5% of shares outstanding in the IPO. That's just the first wave. Through the end of September, the public float is poised to triple. Supply will continue to swell until next June, and in total, according to Morningstar, share total could climb to, at least in theory, more than 6.4 billion shares. Now, this is one reason that SpaceX shares have tumbled 20%. Bounced back a little bit from that today here in trading. From the IPO price, down more than 50% from the intraday high. Wall Street is betting that this continues. S3 Partners says short sellers now hold 32% of the company's current publicly tradable float. But in the meantime, first earnings as a public company, that happens tomorrow after the bell. And here's what to watch with that.
Okay, Meta also headed higher. Meta.
Guidance for Starship after successful 13th test flight. Starship is really key to the future growth plans, including those data centers in space. How much do Starlink subscriber growth, NeoCloud deals with the likes of Anthropic and Google, and multi-billion-dollar government contracts offset the cash burn associated with the AI build-out that investors are looking to have answered tomorrow night? Scott?
Going to be a big week. Morgan, thanks so much for that. That is Morgan Brennan setting the table for us. I almost feel like it's like the earnings, because all the talk has been about the lockup. And if you look at the stock activity from the day it went public until today, all I keep hearing about is lockup, lockup, lockup. And that's why the stock has been weak, anticipating that.
For sure. It's interesting.
Okay, I sold a quarter of Apple into strength.
After the earnings. I'm not sure that I like that setup in the calendar. The estimated move, according to the options market, is somewhere around 15%. That is a pretty big move for what SpaceX is going to be trading like in the days after the earnings report. I think obviously we know it's going to be a loss. I think the level of the loss is important to understand. I also think this is the first step towards those like myself who have said it's very difficult to fundamentally value this company, to begin to understand what this company's all about. But I don't like the setup, Scott, as you move through the entirety of the year. Even as you move into 2027, Elon's own stake in SpaceX unlocks and he has the ability to sell. I don't like that setup. I don't like the way the stock is traded. And I definitely don't like the way the debt market, the secondary debt market, priced the debt.
My value guys over here are obviously going to say they don't like it because you can't value it. The man who chooses beige is his obvious favorite color. I don't know what your opinion on this might be, but you're the type of person who at some point might take a little action on this name, maybe.
I would, but you know, the deluge of stock, I don't think it's all big discount that's coming to the market. So you're just going to see this being highly volatile. If you're a day trader or even an algo trader, and you could figure out the patterns, well, then you could trade it. But otherwise, this is one of those that fits my bucket of life is too short and it's much too difficult. So they are going to show a loss. There will be positive things in there. We saw it in the S1. Starlink is doing amazingly well. I mean, it's unprecedented the growth that has had for that kind of technology. But I just think the stock, you know, the way the stock trades is going to overcome any fundamentals. And to your point, just can't value it. I don't even know if you'll be able to value it if it gets down to 60 and say it's sufficiently, you know, disregarded all the negatives so forth. So I'm out.
What do you guys think? By the way, it could be taupe instead of age. I'm contradicting myself, feeling weird.
It's taupe.
Yeah. What? The whole thing?
My life. You know, I'm such a Casper Milquetoast kind of guy. Scott, very even keel, never emotional, anything. And I think my background proves that out.
Okay. Okay. Well, the foreground too.
FYI, don't wait for me to sell if you got a nice profit.
The vision to get
If you took the strategy on the mean reversion bounce, I'm scaling out into strength.
basis hard to invest in, but
Okay, I'm not going to let this go red to green.
the growth part of that, the AI, there's so much that's of interest to all of us that comes back to your A, B, C question, because it's going to be part of all of that.
All right. We do have some news crossing on Boeing. Phil LeBeau has it for us, as you would expect. Phil, what's going on?
Scott, take a look at shares of Boeing. They've been up all day in anticipation of this news, and it's just been announced by the FAA. It has certified the Boeing 737 MAX-7. That's the smallest variant of the 737 MAX family. That means that Boeing is now cleared to begin delivery of MAX-7 airplanes. They've got about 20 in their inventory. It is not a huge component of the MAX family, but it is an important one. And now it sets up Boeing to begin work to finalize the certification for the 737 MAX.
Okay, looking for more upside on Apple. I want to sell a little bit more here into strength. There goes Google. Google.
It's a far more important one than the MAX-7. But make no mistake, Scott, this is an important day for Boeing. This was a plane that was supposed to be certified 6 years ago. They are finally getting it certified today. Again,
Yeah, Apple's not the best setup, obviously. You got stocks like compared to Google. Like, look at Google. Look at Google. Holy smokes.
That's Phil LeBeau covering that story for us. Up next, ETF Edge with Dom Chu. Domino, what do you got coming up?
All right, so Scott, small cap stocks continue their outperformance over their large and mid cap cousins, but are all small caps created equal? We're going to speak with one ETF expert who's looking at smaller publicly traded companies that are especially good at one metric in particular, and he's using ETFs to express that view. That story's coming up when ETF Edge on the halftime report returns after this break.
Yeah, looks good. Apple probably keeps going. I like Google. Google looking really good here.
Days since our last customer service meltdown. Because we're not just responding, but resolving issues faster with ServiceNow. So, causation or correlation? Which do you think? Causation. You win. Did you? Yeah.
Some see heroes, others only egos. We see the era of billionaire athletes, while others follow the noise. We follow the money.
If your self tanner isn't white, throw it out. Most self tanners are full of dyeing chemicals. There's a better way. Beauty by Earth is one of the only non-toxic self tanners I've seen. Head over to beautyByEarth.com. Better for you option, even better results.
Finnish style conversation. Finnish style refreshment. The Finnish long drink. You have to try it to understand.
Ready for worry-free sleep on your period? Switch to leak-proof underwear. They're comfortable, absorbent undies that hold up to 8 super tampons, made for overnight protection. They go from bed to breakfast and everything in between. Just throw them on, go to sleep, wash, and repeat. This is period protection that feels like a dream. This is Nix Leak Proof. Get yours at Nix.com. That's KNIX.com. Thanks for walking us through. Yeah.
A dedicated fidelity advisor, helping pay them for students. My team of specialists, new advisor helps you build a person smart and distant strategy, identifying opportunities to foster a trade. And your life surprises you. You can change too. Because students are meant to be open. Says how much they love Tuesdays. We do. Introducing Tuesdays out for now. Every Tuesday, I join Mount Everest in Loftetown at Juicy Silver and starting at $24.99. Reach your favorite date night. Tuesday nights only at Outlet Steakhouse. Toughest decision I've made. It was so hard. And what she's looking for in her next football club. I just love the challenge. So tune into the podcast version of Leaders with Friends and listen and watch on your television or wherever you get your podcasts. Policy in Washington.
All right, Apple looking really good here. I'll take some more off here shortly. Apple. Okay, we're almost at 6. We got a limit to sell another quarter at 6.
ETF IQ, I'm Scarlett Food. Let's get into the ETF life cycle where we walk you through the 3 main stages of ETFs from initial plan to final farewell. Second is filing. ETFs for the SEC to review. Record shares filing for 3 different leverage trade semiconductor ETFs. 1-time short daily fund, a 2-time long daily ETF, and a 2-time short daily ETF. 2 is launch. 2 new crypto ETFs from Morgan Stanley began trading last week. Which invests in Solana, and MSSE, which tracks Ether. These products follow the introduction of MSBT, which is Morgan Stanley's Bitcoin ETF back in April. What's notable is that all 3 products are now the lowest fee products in their category at 14 basis points.
All right, Apple's still doing really well here. Google, what do I want to do with Google? Do I want to take some off of Google too?
Ranging from Oscar Health, Starbucks, to Lithium and
Google, Tesla. Come on, Tesla, you can do something better here.
BlackRock and Vanguard. Joining us now is Bloomberg's Isabel Lee. I think this is what Eric meant when he said spray and pray. Is that what you
Okay, Google. Let me look at Google.
Seeing what happens, right? To launch 500 ETFs this year, and the goal is 1,000. They're big, hairy. And I asked them on what's your timeline?
Google, I have some calls I'm going to take off here at the 375 calls.
I should have said that, but it's a definitely. I mean, how many issuers do you know that has 1,000? And I feel like, okay, it's you can corgi in multiple ways. First of all, their logo is a corgi, which is my dream dog. And second, traditional asset manager. They run a 24/7 cafe. They have the bus which takes people from Y Combinator to the Corgi Cafe. Yes. Have a Silicon Valley mentality. To Eric's point when we were talking, I was really about the story. So they're not traditional in that sense. And at the heart of it all is AI. That's really this crazy.
Yeah, well, when you bring up 1,000, that's insane. So right now, Corgi has almost 200. They've launched over 1 a day since they've been come out. And if you look, BlackRock, they're going to pass BlackRock in a year. This chart here is going to be a top 5 chart of the ETF industry next year. Corgi's doing in 12 months what it took BlackRock 2 decades to do. Now, a lot of these ETFs are close, but in their credit, you need a flagship. When you look at this, you have to have a bit to run it. They're just throwing way more spaghetti at the wall to get that fit than most people.
Yes.
And maybe their Silicon Valley mindset is a little naive, but might help.
Higher tolerance for failure and they have more resilience because, to be clear, they have a lot of ETFs, like almost 200.
The AUM is only around $800 million so far, and around half of that is concentrated in one ETF. But as we know, the ETF is the photonics ETF, which is, I think, a first in the category. But you just really need one anyway. Those are able to succeed, and you can take a little breather, and then you can go on. Another thing that really caught my attention early on was that they don't use a white label. Because in the beginning, I thought, oh, this has got to be this one big shop that does nearly every ETF. But no, so everything in-house. That's how they make everything cheap. And we've made the point a lot in the past that their fees are very competitive. So basically, AI and everything, and because of that, they have economies of scale, and that's why everything is cheaper. That's at least what they told me.
They're trying to disrupt, right? They're disrupting the insurance industry, and they say that they're disrupting the ETF industry. They don't know how terrible is, and that could be an advantage.
You go in with what you know, and
Yeah.
know that, then you can move forward. Thank you as always. You can check out Intel Stories on the Bloomberg Terminal, complete with pictures of 240s Napoleon. And Crude, sorry. Funds may not seem that wild. After the ETF and equity and bond ETF inflows reach almost $1 trillion in the first half of 2026. And a key driver of the record-breaking flows is the shift to model portfolios. Joining us now is Holly Fairstead. She is head of global product strategy and development at Capital Group. Holly, great to speak with you. You talked about how we're seeing an industry shift where active ETFs are combined with models. Why is that? Why are active ETFs a good fit with models? Well, thank you so much for having me on the program today, Isabel. We're seeing a convergence of two key trends in the industry. First is the growth of model portfolios as a percentage of financial advisors' asset allocations. And second is the outsized market share that ETFs and specifically active ETFs are taking within those model portfolios. Just to give you a couple of important statistics, the model ecosystem is $19 trillion in AUM. And
Okay, looking good here. Microsoft again.
15% annualized clip through 2030. I'm sorry, that's 9 trillion, not 19 trillion. It's a really large number, and ETFs manifest as an outsized proportion, about 60% of model portfolio assets. So as we're seeing financial advisors increasingly allocate toward models, they are also increasingly allocating towards ETFs. And so this is a trend that we think is only going to continue.
So we have some data from Crude about a quarter of ETF flows are models, which is big. And I always thought models, they traditionally use passive ETFs. Model makers, to me, were the new active manager. They say, let me organize these passive ETFs in a way that's active and sell it to the advisor who wants no part of actually some of the portfolio. It makes it easy for them. But you're pretty active in that. Are these capital group models, or are you just selling to other model makers?
Well, so Eric, about 10% of the assets under management in Capital Group's ETFs are coming through model portfolio programs. That is both the adoption of our funds in models that are created and managed by others, and in the 8 model portfolios that we manage ourselves. So we're seeing a combination of adoption of our strategies and active strategies in particular across our models and the models of other asset managers. I think importantly, the highest rate financial advisors are leveraging model portfolios so that they can spend their time focused on client acquisition and client servicing. Capital Group recently did an advisor benchmark survey, which said that 58% of the
All right, Microsoft looking good here. All right, Apple, maybe take a little bit more off. Apple looks like it's going to create a B and C pivot. Back to VWAP.
Complex and well-diversified asset allocation. I think that increasingly what we're finding is that just as financial advisors have always utilized active mutual funds in their model portfolios, they now increasingly are managing ETFs where they have that option available to them. You also notice that active ETFs now account for almost 9% of assets within the model portfolios. Where do you see that going in 5 years? Well, we think the growth of active ETFs and model portfolios is only going to continue. Part of that is certainly to pass it. So we believe that
Okay, it's 1250.
availability in the marketplace, in particular, core
allocations in a portfolio that are well diversified, we think that that growth and that preference towards active management, once again, is going to take over portfolios.
Yeah, and Holly, look at the chart here showing how big these legacy active managers like Capital Group are shooting up the ETF league table. But there is a lot of outflows of the mutual funds, and you just said it, that the models prefer the ETFs. How do you deal with the mutual fund part of the business?
Well, we're most focused on delivering vehicle choice for our clients. So where the ETF is the preferred vehicle, where the tax efficiency matters the most for our clients, we want to be able to offer for active management in that vehicle. And for clients where the mutual fund is most appropriate, retirement accounts or non-taxable accounts, just as two examples where we continue to see mutual fund dominance, we want to be able to offer investments there. Importantly, we're investing in scale across our asset management and investment management ecosystem so that we can deliver either vehicle and we can truly allow clients to express their choice.
Holly, thank you so much for joining us today. Holly Fairstead over at Capital. Coming up next, our IQ test, and we've got Rita Nagapur as one of our against her. DJ,
All right, pretty decent morning. Make sure you're taking some profits off. The S&P is starting to roll over a bit.
Did your favorite soccer team win?
Stupid commercial.
For real, there's no way they'll actually let you redeem. Actually, I already successfully redeemed $500 on my bank card the day before yesterday. What? You didn't tell me sooner. Dude, we are officially done. All right. The app is called Gleaming Slots. It's free to download. Go give it a shot. Gleaming Slots. Play now.
Finish style. Finish style refreshment. To finish laundering, you have to try it to understand.
Sleeping on your period? Time for leak-proof underwear. They're comfortable, absorbent undies that hold
50,000 calls were bought versus just 38,000 puts this morning. Among contracts expiring this week, Bears are targeting the 95 strike put that needs a 17% sell-off, while the most popular for Bulls is currently the 130 strike call, which needs a 23% rally. Overall, options imply a massive 14% swing in the stock after earnings, which makes sense given SpaceX volatility, higher than anything in the S&P 500 except for SanDisk. And finally, I had reported previously the last few weeks on a heavy buyer of 330 strike calls that needed SpaceX to triple. Maybe don't hold your breath on that. More than 800,000 of those were sold today, more than any other contract, Scott.
All right, good stuff, Oliver. I'll see you this afternoon again. Thanks, Oliver. Running finals.
Yeah, Oliver's good. Oliver's good. Talking options. SpaceX for earnings. Okay, we got earnings tomorrow. Was it after hours? Yeah, tomorrow after hours. SpaceX. Okay, Microsoft looks like it wants to keep going. Apple, a little B pivot at DWAP. Apple looking good here. Apple. Microsoft looking like it wants to go again. Microsoft. It just keeps pushing higher highs. $100 billion in profits with Acer. That's like crazy. 100 billion. Microsoft. Acer revenue surpassed 100 billion for the first time. And Copilot has 30 million paid seats. That's crazy. No wonder it's moving higher. People wrote Microsoft off. It's nice to see the company performing now. Let me see, Microsoft again. Okay, here's Apple. Microsoft. Apple, not the best setup. It was a nice turn off the low. You might want to consider taking some profits off. We have Brent. Brent will be coming on here shortly from Spot Gamma. Oh boy.
Justice Tom Blanche, of course, the president's nominee to be Attorney General, looks like he will be ultimately confirmed after reaching a deal with Senators Cornus and Tillman, putting in writing that the anti-weaponization fund is rescinded and clarifies that IRS.
Looks like it's just a matter of when, if Todd Blanchard the bottom line here, you got continuing to decline despite the headlines. We've got the Dow against the Nasdaq also holding on to gains. Yes, we're off session highs on the Dow at 52,963 at the trading briefly above 53K. But right now, we're 485 on the Dow, 9/10%. S&P 500 index are on the PIP screen on the Bloomberg, looking at an index that is very close to session highs right now, 1.3%. And Nasdaq up by 2%, the Nasdaq 100 index up by 1.5%. So bottom line, the equity market is hanging in there right now. The Bloomberg Max 7 index up 4.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it remains. $10 the ounce to 4,035, down 0.3%. West Texas Intermediate crude 79.83 a barrel, down 5.7%. Brent crude 83.76 a barrel, down 7%. So bottom line here, keep an eye.
Recording in progress.
All righty, what's up, everybody? Today is Monday, August 3rd, 2026. Thanks for joining me. And what I think is the last webinar of this kind ever. For 5 years. We'll have the webinar structure in the coming weeks. So they'll take a better around for a while and saying, I don't want to keep talking about the same things. Quick sets. There still will be webinars, they will just be different. That's it. So what is going on today? If you have any questions, leave a question in the Q&A toolbar. Put the question in the Q&A, I can get it better. If you just want to say what's up or chat, then feel free to use the old chat. First, you are booing. I don't know why. Oh, Nick from the Money Show. Hello, sir. Good to meet you. Good to see you. I guess that Money Show was the Money Show Masters, which is a little bit smaller, and they got a bigger one coming up in the fall. I still am going to be doing the webinars. We're just going to change So for example, if you're new here and you want to know what color blue this is on the screen, and you go, what is that? Why is that blue? That'll be handled in like a different Q&A, and mine will just be about what's going on in the markets. Jose from Mexico, what's up? Good to see you. Annie, you're going purple again. And Hassan from Bear Bull. All right, we got a real menagerie of people in here today. I like it. All right, let's talk about what's happening today. This morning when I wrote the old note, this was the band of resistance. You can see 75, 75, 75, 85 right in that general area. And so if you were to go and look at the founder's note, you can see what I'm talking about in here. 75, 80. So I'm kind of looking at that. You can see that area pretty clearly right there, right? And the market did the seek and destroy thing. If you don't know what seek and destroy is, go to YouTube or use the Discord support bot, say, what is seek and destroy? And what you'll see is that Hero just rips, and Hero keeps ripping until we hit the 99th percentile strike. What I mean by 99th percentile, if you hover over that level, you'll see 99.06. That's a big strike. These are a lot of 0 to TE contracts. Obviously, if you look at the net OI, you can see that there are 10K, 10K, 10K. That's a lot of size. It's a lot of size. Those of you who've been around for a while know that I say anything over 5,000 is material. You start talking about 10,000, I think we probably tag it. And so that was sort of the plan, right? And up we go, Heroes rips higher, and we just kind of fill up into that zone, right? We tag these aforementioned strikes. And then look what happens as we play over the course of the day. The strikes above start to grow, 75.85 and 75.90. They grow in size, and then you see they start closing the 75.75, right? Hero never backs off. 75.75 start to go away. That interest builds up at 75.90. And so we just keep pressuring up there as we play through the day. And then all of a sudden, look at that. Those strikes all go away. They closed them up. So the retail guys or the hedge fund, whoever the bias was on the buy side of those positions, they were short those calls, the dealers were long, and then they closed them up. They bought them back. And, you know, you see Hero just has not really stopped or didn't stop up until right when we get in the 7,600 area. Now we're just below that level of 75.90. Now you can see Hero starting to plane off. Now, why is that important? That to me suggests that we're probably, do we make a new high at this point in the day? I don't think so. Maybe we close at 7,600. You can see the open interest is now gone, right? It's just this negative kind of gamma pocket in here. If you look at charm pressure, is very interesting on the day as well, because if you wind back to where we were, you can see that charm being red says we should sell up here and we should buy up here. And you can see that dividing line right there at 75.85. But as these contracts get closed and rolled, you can see that line, that charm line continues to creep up. And then when these big pocket here gets closed, now you see this big blue charm area open up. Blue charm, positive pressure, that's basically the deal, right? And so when you're kind of navigating this now, it's kind of like, do you expect a sell-off? Do you expect a rally? Well, there's no material open interest for us to latch onto, right? It's kind of gone. Now we have 7,600, which is obviously a big level. And if you kind of look at gamma, it's positive gamma in here overall. So that suggests we should be
Okay, Microsoft, a little profit taking.
Kind of drift, pin type action is what I would expect roughly for the rest of the day. Bulk gains are made for today. I would expect us to sort of drift more or less sideways. If we zoom out a little bit and look at the rest of the week, what you see here is, we're kind of counting on positive gamma pressure at the risk pivot, right? 74.80 is where our new risk pivot is, and that's roughly right about here. And if you look at this over the rest of the week, you see it's pretty much blue above, and then there's red below. So this is still the risk pivot. It's quite a bit higher, 100 handles higher than that level at the moment. What I would anticipate happening is if we do admittedly start to continue to rally in oil and that main situation, which Iran denied, Trump says it's on, so who the hell knows? If that stays in the box, will it start creeping up? tech is not, like, the leading tech is not participating, although many finally woke up. We've all seen the DRAM, et cetera. Too much today. But the battling they're making, the point is that as long as the oil stays in this box, the big starts going down, the tech story, I think, is still fine enough. We would expect the market over these kind of days to continue its upside drift. And as it does, you would expect to see positive gamma or blue or purple, whatever you want to call this, fill in above. And then you would see that the red would come in here and start to deteriorate the picture underneath a little bit. And the reason I bring that up is because we should be able to slide the risk pivot up as the whole
NVIDIA.
complex, the gamma complex, the positive gamma complex slides higher.
NVIDIA is trying to break out here.
But the value as well, the risk pivot is at 74.80 right now. If we rally 100 handles and we raise the risk pivot, then, we've sort of moved our stop up, right? And if we drop below that risk pivot, we'll go risk off again, or look to hedge, et cetera, again, into this. So, this drifting up of levels, like call wall moves higher, put wall moves higher, those levels will now slide up. Is bullish writ large. When those levels kind of move down, it's bearish writ large. Right now, say what you want about the rate ball and the Iran situation, everything else, equity vol right now is coming down, and that is a bullish sign for stocks. Let's take a look here at the equity complex. And if we compare today versus Friday, or even if we look maybe pre-Warsh, we'll go back to Tuesday and just see what that looked like. Vol's just sinking, right? So if you look at these longer dated vols, they're down about a quarter point from pre-Fed. You can see they're down about a full point around at the money. So, this is vol coming in, right? There's just no two ways about that. And if you're worried about Iran, or if you're worried about rates, or if you're worried about anything, you wouldn't see this.
All right, we're breaking out here, NVIDIA.
Start to see that get big. It's just not going to be. So you can't really fight that. The equity complex, if you look at what the skews are doing here and bring up the stats, we're at the bottom of the range the last 90 days. I think is what I have on here. Particularly to just under, kind of just out of the money puts, the stuff that are around that risk pivot. That's reflecting as, particularly sold. There's a little bit of a mild bid, you could say. I mean, this isn't very long dated. These are only 1 month options. So maybe that right tail is lifting a little bit, but this is.
We're listening to Brett over at Spot Gamma.
Does this matter? Well, we turn to the Core 1M. The Core 1M is the correlation metric that we know so well around here. You can see that's now at a 5. Why is this important? Because what's happening is they're smacking index vol, so S&P vol is going down hard. NASDAQ vol, I have to double check it, but it was getting sold off. Single stock vols are getting bid. Now, we wanted to blame that partially on earnings, right?
Futures.
But we just had most of the mags now report. The Core 1M, I believe, is cap weighted. I'll double check that. But it definitely measures the top 50 names. So those have all reported now. And even though they have reported, the difference between the single stock vol and the index vol is that they are not all moving in the same direction, right? Index vol going down, single stock vol going up. When we look at this historically, there's negative returns, -3 to 10% over the next over the next 20 days. That's typically what happens when Core 1M goes below 5. Now, if we're going to sit around and say, well, Brent, you started to complain about this earlier in July, did we really get that kind of a sell-off, 3 to 5% sell-off during this entire saga? Well, if you look at the S&P, you would say to me, Brent, just add the 401M, so we just kind of look.
Broadcom looks like it wants to keep going. Broadcom.
Sorry about that. I don't want to do it that way.
Okay, that looks okay. NVIDIA looking good, though. NVIDIA looks good.
So here's where we started to see that Core 1M go under. Right around the end of the month, right? The quarterly OPEX. So that would have been start of July. If I'm being honest, and I'm the person that made sort of the bearish call, you would look at this when Core 1M goes under 8, which happened again right around here, let's call it. We certainly were 20 days forward in time, and then we didn't go under. Now, ultimately, the S&P experienced a 2.2% decline, roughly, from that time period. I'm really trying to look at the bottom of the candle. It's 2.2%. That's not too gross, right? Considering we had such a low core situation. Now, if you look at the NASDAQ, much different beast, right? Over that same time frame, we lost 8%
NVIDIA trying to go.
So I'm not gonna take a full L, full loss on that call of the drawdown. It was certainly a tech dominated sell-off, right? But that matters. If you bought S&P puts, you're probably like, this sucks. If you bought now short of NASDAQ, you're probably happy, right? Now, over this same time frame, what's hilarious is we have DRAM and all this other stuff.
All the New York fangs are hanging out near the highs. Apple's turning back up, holding above VWAP. Looking for these New York fangs to hold on to strength. Right now, positive gamma is keeping prices above near the high of the day, I should say. So positive gamma is working for us.
Broad-based, broad market selling, it was stuff that was up the most. Now, what's interesting about this rally is the stuff that was up the most is kind of lagging at the moment, right? It's not too impressive. What is going up a lot? Look at software. Software's having a great time. There's a very famous, now famous blogger that made a call back in, what was that call? Oh, right here, the end times. Remember that article that went around? When that was basically the low. It did test the low one more time, but that was the low. So DS was saying, is there a better way to play Core 1M? I don't think so. What I do think is that this is still signaling that there is high risk. But do we want to short NASDAQ instead of shorting S&P, or do you want to take a shot at shorting both maybe? Something along those lines, right? I just think, what I do think is that we have risk embedded in the system. If you look at the Mag 7 index, it's ripping, right? Going up very strongly here. Even though some mixed earnings, right? Tesla did crappy, Meta did not great, but it's bouncing strongly, whereas Microsoft and Amazon did very well, right? Apple's getting beat up pretty good right now. So, you know, the mags are resurging. The other thing you got to note about this speaks to capital rotation. You see IGV, the mags are ripping, right? This is the stuff that nobody wanted before, right? When into DRAM and semis and whatever else. So capital rotation speaks to correlation. Correlation's not being in sync. Why we're buying software right now, we're not buying
Snowflake fading. Broadcom pushing a bit higher. Snowflake fading.
Not Intel. So that's a
Snowflake fading.
Uncorrelated regime.
Profit taking. NVIDIA at the high of the day.
So we talked about dispersion that's last week being all-time highs. That is starting to now revitalize and pop back up because people are now allocating across different sectors so broadly. That matters because if you have a macro flare-up,
S&P turning back up.
Rate situation is bad. You're going to sell stock. You don't want to hold anything. I don't matter. I don't want to hold memory or bags or whatever. If I think that there's going to be a credit crisis, right? I'm out of stock. So that's important. I think also as we try to parse this apart a little bit and say, you know, is this a bearish kind of setup? It doesn't feel as much because it feels like it's capital rotation. So it's a little bit different. Just because it's a hot moment here, looking at Trace and NetOI. You know, that's 8,000 calls up there, and you got 9,000 puts below, and 0 calls below at the 0 VTE. So can we tag out around that level? It's not. I don't think it's out of the question. Zoom just a little bit. Sorry to bounce around a little bit. But if you look at the gamma of that position, it's not all that big at the moment. Now we're starting to lift up there a little bit. If you start to get into this area, it's like it's like the magnet will like pick it up. And so if you look at Charm, you should see a bright section there at the end of the day with here. So it's a great call out. How do you play that? You structure cheap call fly up in that area. Yeah.
Okay, Apple looks like it wants to go some more. Apple looking good.
Get up there. Yeah, there's just no reason to sell stock right now, is the truth, right? And why is that? Vol's getting crushed. That's a big bullish statement. Number two is we're above the risk. I mean, number one is we're above the risk of the price. That's my goal.
Apple looks like it wants to run a bit more. It's a little extended right now, off the low.
Vols are coming in across the board. We were looking this morning at the NASDAQ, huge, right? You look at QQQ, skew, risk reversal, excuse me.
Nvidia, very strong Nvidia. Apple looking like it wants to go.
Puts, we'll nuance that, and IV rank of 68%. Wow. So that's a bullish look. Now, if we break this down a little bit further and we look at call skew versus put skew, the put skew is what is getting smacked.
Core weave, top of the day. Core weave.
Margin calls that accrue was the reason that we crashed. We believe that's probably a strong statement to make, right? Sell that ball. Because that wasn't actually people who were like fundamentally saying this is garbage. This is people saying, oh yeah, poor seller, great. Now it's my opportunity to sell that ball. And that's what's happening.
S&P
We're
going.
getting a little bit bid as you can see that call skew percentiles up, but the bigger feature to me is that puts getting sold. If you're smacking puts, you're not scared about the market selling off the future. If your hero looks different than mine, you just probably using a different S&P equities. If here's S&P 500, right? You can see there's a big difference. And why am I looking at equities today? Let's go talk about hero. It's just very big. So if you look at the S&P equity indicator, 4.3 billion. This is lining up to be possibly the biggest in the last 30 days. What is this? This is the mag. This is any single stock. Aggregate that. And not only that, you can see how much is not short dated options. The difference between the purple and the teal is huge. It shows that people are rebidding stocks. Full stop. NASDAQ. Very big zero DT pressure, and then into the afternoon that started to separate a little bit. People started to buy some longer dated positions. Sizable 2 billion.
S&P looks good.
Last in the S&P 500. It's pretty broken apart in here. I think in the afternoon, I don't know if there was headline. Maybe there's actually an deal. Maybe there's actually a meeting. I don't know, but why I'm guessing that is because you can see the separation there between all expiration flow and zero DT. Zero DT is getting bid above. There's this gap between the two. So if I think the Iran situation is officially clear, then I'm going to go bid on not today's call. I'm going to start buying off the calls. Right? So that's it. If you're thinking about a pin trade, you know, somebody here just correctly flagged the pins, and I think that could be the target now because it's fairly large and hero just continue to go up. The equity heroes continue to go up. So that validates to me the idea of saying, let's see if we can move through this kind of light gamma zone in here and then move up to where this 10 is. So a 7,600, 710, 7,620 call fly maybe would be something like those. If you have a little more risk in your pocket, you go maybe buy 7,600s and then turn it into a fly when we get to 7,610s. I mean, there's a couple different ways you can kind of set that up or play that. But you know, if we didn't have 8,000 contracts only 10 handles away, you know, you wouldn't put that trade on in my view, right? Because you have that.
All right, S&P going.
It's maybe worth thinking about. Can we come down today, dude? I don't think so. Now, I don't know what's going on with that Iran situation. That could be the you know,
That's crazy.
Shot across the bow. But other than hoping that Trump doesn't tweet and the people who get Trump's tweets 1 millisecond before the rest of us see it, right? That's a new dynamic to think about. There's just nothing bearish on the screen. All the hero indicators are up. You can see from around 115 to now, we've added $3 billion of hero. That's just massive. It's huge, right? And it's just the machine is working right now. And I don't see the resistance at 7,600 is the resistance level because of the big fat range, right? People like to watch that. There's not a lot of interest there, even at the non-zero TD strike, right? Where the position is at 79.10 at the moment. That is a 99% strike, as you can see. And so you know, that is the target at the moment. Some crazy psycho is here from Australia. What is it, 2 in the morning there, 3 in the morning? You're probably right next first.
S&P going. Apple looking for that to lift a little bit more.
And right now,
love to see this back above the 50-day.
Today, tomorrow, or the next day. At the 4-1M at 5 is admittedly a sign where I say I'm going to start looking at some puts, but I'm going to nibble on some maybe.
Nvidia looks like it wants to keep going. Nvidia.
Not want to sit here and heavily short this market when the ball's coming in. Oil's down 5%. Mags are up massively. Why? We're above the pivot. Why short this thing? If we get into a negative gamma zone, the ball starts to creep up, those kinds of things, then, like basically we were talking about 2, 3, 4 weeks ago, which again, I started this off saying S&P did not, 2% high to low sell-off, 4 going under 8 last time, not that big. NASDAQ lots, a lot more on a relative basis. If you go onto Twitter, and I know I shared this with all of you guys, but if you go onto Twitter here and you look at the, right, untune this at this point, because it's not as relevant now, because it's a little bit old, but this was the article we wrote, the NASDAQ article around why the NASDAQ ball was so beat up, right? And I said, I think that we'll get a 5 to 10% sell-off is what I wrote in that article. Well, it didn't happen with S&P, definitely happened with NASDAQ.
Nvidia going.
Not great, right? You shorted S&P, you're like, Frank is the worst person who's ever lived. But you shorted the S&P, you're like, okay. So it's a weird. Yeah, let's look at Microsoft and some of these other mags here. I think that makes sense to do.
Looking good.
Number one, Microsoft after earnings, doing very well. And what I want to see in here is where are the pockets of positive and negative gamma, right? And so right now, the stock is moving in through here, and you kind of see peak positive gamma in the 530, certainly with this really rather large strike 550. So I think as we kind of move through here, certainly into those 500s to 510s, I would think that it would start to slow down. Maybe we get these positive gamma strikes here. So you're talking, 525 is peak positive gamma. So I'm looking at the top of this curve.
Nvidia going some more.
I think here you got a pretty nice big support bar at 470 at the moment. So, this looks constructive to me, certainly for these strikes, which is probably a 525.
Apple looks like it wants to keep going. Nvidia, Apple.
Apple is doing the opposite, right? It's getting pretty beat up now down at 307. This is all positive gamma, huge positive gamma bar at 300. It's just high positive gamma overall. This is a name that should have some mean reversion to it. It's just how it's positioned. So I think this is a dip that's worth buying. If it breaks 300, maybe I stop out, and certainly if you can earn 280, that's okay. That's I just don't see it happening. Down the market somewhere. So it doesn't make much sense. Amazon, all the way up here at 290. You have a big positive gamma strikes. We're kind of in this zone right here. We have peak positive gamma around 300. So I think this thing could run another 2-3-4%. Getting this 295 to 300 probably would stick out there again because peak positive gamma and it's $100 million of gamma. That's a lot. Nvidia support here at 200. I think that's pretty strong. And there's this decent pocket of local, and I call it local because it's just this area in through about 220, 230. And I think this is where the stock kind of tapped out last time. So can this run pretty well in the 215-ish, 2 to 220? I think so, because you can see there's this pocket of negative gamma strikes, which to me look pretty good. Meta, this actually is the lowest gamma of any of them. And you can see here, it makes its low into about the 600 area, but there's no big positive gamma strikes anywhere in this thing. So of all the names, like no one is short calls, and I think because people are worried about the mean reversion. It's been strong mean reversion the last couple of weeks. Certainly in this roughly 600 area, I think maybe could look to, but is there a good reason to be short this thing? I just don't think so because we're in this mean reversion environment, right? And it's a good thing to acknowledge. So I really pay attention to that thing. For my hero candle, I use 30-second.
Nvidia looking great. Nvidia, Apple above VWAP, Microsoft.
The combo, yeah. So the combos are an interesting one, and I'll tell you why. Because the combo combines the spiders and the SPX together, right? That's what those combo strikes are. And so here you have combo 7602. That's picking up on 750 in the spiders. And so that strike is going to have a lot of gamma with it. Sorry, not 750. What is picking up? Let's go and look.
Apple,
750 is
a lot of positive gamma, so this could run a bit more. This could run a bit more. Let's see.
750, 752.
We're at 307, 308.
Must be 7600 plus 7. Oh.
All right.
Clearly something's getting picked up there, right?
NVIDIA does look good though. Microsoft at the highs, Apple turning up.
So 757 is the call it has, that's where the call strike is. That's 19,000. So
Love to see Apple get back above the 50-day.
locally, that's 757 there. So anyways, the point of the question is, do the combos matter as much? And the problem with is, we talked about this before, that I think these levels that you're looking at now are set up from mainly open interest, naive positioning at the end of the night. They are sort of like, I talked about this before, like, what is the season? It's spring or it's summer. Okay, great, it's summer. Temperature should be between 60 and 100 degrees, right? Or whatever, depending on where you live. And it's the same thing. Like, where's the call wall? Okay, roughly I get it. 750. We're over or near the call wall. It's a fairly strong day. We're over the ball trigger, so we're safe. That kind of stuff, right? And so this is the same thing with the spider position. But then when we go back and we look at what happened with trades today, and the positions shift so much, and this is not small open interest flipping around, right? You got 8 to 10,000 contracts rolling and moving about like it's nobody's business, right? That's 12,000 there, 6,000 there, 8,000 there. Like, that's a lot of notional value in the S&P just flip flopping around. Now, in fairness and in truth, we should have the spiders plotted up here somehow as well. We just don't have the data to provide that to everybody in the same form, so that's why you don't see it. And S&P SPX is still the beast. You look at all the data, it still is the thing that runs the show. So, but in full disclosure, you kind of should keep an eye, I guess, on that spider volume as well. And so, that's what's kind of being going on. But the zero DTE is where most of the gamma is. Gamma is highest for at money options as it gets closer to expiration. So zero DTE gamma is the most important thing from the gamma perspective, and it's just getting shuffled around, so quickly these days that you gotta watch the math here. It's just yeah, the difference from Friday to today feels criminal. And look, they got an alleged deal, I guess. I have no idea.
Cerebrus trying to get a bit higher here.
Slightly takes a little of that pressure.
Cerebrus, CBRS trying to move higher.
That rate thing, they're like, what is something
Coming out of this triangle.
Could be rates.
Cerebrus.
It look great, but people keep not paying attention to that and believing that you can get the oil price down. So who am I to argue that at this point?
CrowdStrike looking really good. CrowdStrike following through.
Why do I think we rally into OPEX? Because we tend to have these cycles, at this point, and so Ram, what I think is happening is they're selling vol, right? They're bidding up stocks. We're clearing earnings with some success. The Fed rate now is like, who cares? Like, now we're able to say, well, that whole post-spasm thing wasn't anything to do with worse. It had to do with situational awareness or whatever. And I don't know if I fully buy that, but at any rate, right now it doesn't matter, right? Because we're clearly bidding up because they say that the Iran ceasefire is there. So if oil comes down and inflation comes down and the rate pressure comes down and earnings overall look all right, like Coca-Cola and some of these other Chipotle and Starbucks, I think they had pretty good earnings from what I gleaned, right? So say the consumer is doing fine, all these things are fine. Like, what's your reason to sell? So the reflexivity of that, right? Selling vol, stocks go higher, we, keep buying, keep rolling, we sell more vol, like it all just feeds back on itself. And then when we hit OPEX is when we have a chance to shuffle that around. Now, OPEX is kind of far away now, right? You got a full 3 weeks to get to that OPEX. So it's a big gap between the July and the August OPEX. But, at the moment, there's just not a great reason to sit here being short. I mean, core 1M being at this low for a long time is because people continue to bid up these thematic sectors. And it matters. It's sort of, and I guess what the argument is that this is a new normal, right? maybe this new regime of, it's like part of the NASDAQ article I wrote was like, do you have this separation of stocks where the tech stocks and the Mag 7s are making so much money and anything tech related just goes to the moon now?
Let's see,
Anything
CrowdStrike.
those get left behind, it's the ball goes changing different. It's kind of like I wasn't around for when we stopped talking about the Dow, we started talking about the S&P. You know, now the Dow is still at record highs or whatever, but you know, it's kind of like that is the idea, like to keep the separation between you know, the difference. So and these are my hero settings right here. So I want to look at those. So anyways, back to the original point. Core 1M is telling us that stuff is out of sync, and it happened just like that. Now, S&P stayed incredibly stable over these last couple of weeks. We have ignored Iran, we have ignored a lot of things. And then every time things look like they're gonna get ugly, Trump gets an Iran deal. I hate to say what I'm gonna say because it's just the worst thing to say, but you go through, you know, these times in markets and you're like, well, if the market didn't crash because it's manipulated, do you remember, some of you are old enough, you remember back in the day when we had the PPT, right? And everyone would blame everything on the PPT, Bernanke, whatever, right? And I don't know if there's truth to that or not, but this is what I will say. Trump knows about manipulating markets. That's why he just paid this $100,000 a month for his API access. And then, you know, there's this video, there's this image now of Besant at Camp David, and he has written on his to-do list, you know, buy yen, right? And that's a staged photo op, obviously to manipulate the market, right? Because if people go, oh, he says buy yen, and they believe he's going to do it, then they're going to buy in and he'll not do it. So the point of that being, like, if anyone's going to manipulate markets in any kind of way, it's going to be this regime, you know, this group, and Besant certainly has to know how to do that, and like the friends to know how to do it. And Trump is so focused on the stock market, it's insane. Now, does that mean we should cry over spilled milk and the S&P didn't crashing? Like, no, but it's great to know that this is a president that is so keen on the market going higher. That's great. Now, 401M's at 5, does that mean we can't have a spasm kind of crash moment? Yeah, we've had several big crashes during Trump's tenure. So
Apple starting to pull back a little bit.
back to
Apple
the
back to
point.
VWAP again.
I don't know if things are totally different this time. I suspect that they're not, but we are in these moments and they can feel like they go forever. But ultimately, like when you talk about when we were in the tariffs 2025, the days were long. It felt like a slog. And you're like, what the hell? Now, if you think back about that, that felt like a week where things were bananas. And I was like, okay, right. So, you know, these things, when we talk about them every day, they feel like they take a long time to play out. But, you know, but ultimately, we got to stick with the things we know. And when core 1M is below 8, I think that warrants hedges. We got to worry about some spasms. But at this moment, if you look past anything other than core 1M, it all looks pretty bullish. I don't want to short anything on the screen at the moment. So I hope that was helpful. I hope that is helpful.
NVIDIA at the highs. Okay, maybe take a little profits off on NVIDIA.
Manipulation. I mean, I suppose so. You know, the yen thing in itself is just so interesting. Just such a bizarre thing. So I wrote this article about, you know, the NASDAQ changed its rules, right? Its structure for getting in some of these other names faster, for example, and then think about where the value is going to be created in the AI space or the hardware space, robots, I don't know, whatever it is, right? Where
Dell looking good too. Dell back above the 50 day.
that's mainly tech. There's a lot of the S&P 500 that's not tech. So the argument that if this AI thing is really the truth and the future of humanity and whatever else, like that's where all the values will be created. That's, you know, you suddenly get the NASDAQ just outperforming at just an unbelievable level. And if you look at the outperformance of the NASDAQ over the last 2 years, even, you know, it's real, right? And so you have this funny moment where you're like, hey, you know, yes, it was violently lower, and you can see the two track each other pretty closely here. But you can see that separation started even earlier, right after the tariff cycle, and up there, big sell up there. But that's significant outperformance. It's less stability, but it's significant outperformance. And does this only start to happen more if you look forward to just like the moment? So that's not an option. Andre's looking for calendarized game updates. I just need to open the machine. We have a tech person working on 2 developers.
Tesla looks like it might want to turn back up. Tesla. New York Fang looks good. Tesla. Nice turn in Tesla.
Would index vol getting bid be a resolution to low? No. Index vol getting bid, so index vol will probably go up, and then core winner would go up as well. So we got the big spike in core winner will spike.
Snowflake still fading. Tesla looking okay. Nvidia starting to show signs of profit taking.
All bought, all sold on the day by market. So normal open interest is what you see in a brokerage platform. This is not, you're not gonna be able to reconcile those with what you see. If you go through and add up potentially all of this, you could, but Zoom user, I wish we, you know, it would have been, so I shouldn't say I wish we went down. I really have a great reason to think we were going down. You know, I think last week we had a setup for things to break, and the Iran situation just continued. You go into account preferences, you can change from light mode to dark mode. Those of you who've been around a little while, these kinds of questions here, and I'm not saying they're bad questions, like I'm super happy new people have come to the platform and things like that. But we're gonna split this stuff out a little bit, so if you have new questions and like want to talk about system settings and things, dedicated webinar for you, and then the other
Apple. Okay, looking for a bounce. Apple.
Here are my settings. Call also low from David's iPhone. That is based on raw open interest and the oil situation coming down, bid the market up. And so I think we had a little bit of a chase with people that the roll calls higher. So I would expect that call off to jump quite a bit. I think honestly, the market got caught off guard. I think the implied move for this entire week was 100 bips. Market was not interested in this much upside. I certainly. Yeah, combos aren't really, combos are spiders and SPX. They don't really get market. And then the size on combos 1, 2, 3, 4 is the combo 1 is the biggest game on that. 5 is lowest. And if there's not a 5, it's because none has the size for that size split.
Okay. Apple looking for a higher low, higher high.
9,000 zero DP contracts. I think size gets tagged, so we're at 75, 97. Zero keeps going up. I think the weight of the evidence says we go up there now. What does it cost to bet on that? Look at the live you can do a 7600, 7610, 7620, call fly, or roll the dice, $1.85. It's 18 cents in the spies. That's not a bad, I mean, if you lose 18 cents, 18 bucks in spiders betting on that, you know, send your hate mail to info@spotgame.com. But that's sort of the setup that I think, that setup makes sense. We play with the Robin Cloud a little bit. It's been interesting. Now, why don't we go down here to 75, 75? Well, hero just keeps going up. So, and this is the equity hero just keeps going up. That's why. Do I think it's wrong to put a hedge on at a 75, 75, 75, 80, right up like 25 cents, maybe as a downside play? Okay, but hero just.
Dexcom following through
Okay.
on the watch list. Emerson Electric that has earnings this week. Google looks good. IBM another setup.
Directionally speaking,
From the watch list looking good. IBM another swing trade setup looking good.
Data dog, this fucking, hello, you make a chart white.
Come on, Apple. JD, don't forget JD.com, JD as well, JD.com.
What else? How else can I help here? PLTR, Dave's iPhone got to you. New subscriber Mayoa. I hope I pronounced the name right. Nice to meet you. The structured curriculum to learn all terminology. There's a lot to learn. If you go under here and you go to training course, that's a great place to start. Also, if you go into Discord, you have Discord.
Tesla turning back up. Tesla.
Bot should answer questions like core one, and it should give you a link to a recent Q&A where we discuss or break down a topic. Also, we have things called sharpen your skills sessions. The sharpen your skills sessions, you can find those under a webinar. There's syllabus, there's academy, there's webinar replays. You can come in here and look for the sharpen your skills session. But the Discord bot, if you're on Discord, go there and you can ask it, and it will give you the material that you are looking for. And I hope that is helpful. Let's see here.
Okay, Tesla looking okay. Apple looking for a bounce. Apple. Intel. Intel.
We place more weight on total gamma, including.
Here's A up here. Looks similar to NVIDIA in some respects. Intel. All the chips doing well.
Remove OpEx from total gamma. Gamma sort of self weights, right? Self WEI GHT. So when I think about that, it's like, well, let's just.
Intel looks like it wants to go some more.
When I think about it that way, right?
Intel about to break out here.
So gamma is highest for at the money options in it. Gamma increases as we get closer to expiration. So if you're talking about October OPEX, for example, well, that doesn't expire, right, for 3 more weeks. So that's kind of priced in already. So, you know, if you know that, well, okay, great. I know that. So why am I gonna, well, I don't necessarily need to adjust. Now,
Okay, looks like Apple's gonna fade some more here. Apple.
You come in and you look at something
It's that VWAP.
Contracts, and we say, look at gamma, and then I'm gonna say remove next expiration gamma, or if I do total gamma minus the next expiration, you can see how this gamma shifts. Now, why is that valuable? I think it's valuable because if there's a big change and in here there's not, but you want, then you can see, okay, like we're pitting to the zero DG contract, and then that contract's gonna go away. So why would
All right, S&P still going here. S&P cash still
You know
going.
what I'm saying?
7,600.
That's why I think the weighting matters, when you are looking at that or trying to break that down. I hope that answers the question. Please let me know if it doesn't help.
S&P cash looking good. 7,600.
How would I look at long-term futures stock and tools, for example, a month out would be looking at quick strike vol. Well, it's number one, it's just a cycle, right? And that's how I kind of look at this stuff. So if we just go and we look at the S&P and you go, is this kind of a bullish or a bearish cycle? And, you know, right now, it certainly looks like a bullish cycle. And so you can see that oftentimes the options exchanges are turning points. So there's a low put in at March OPEX. You know, we had a little mini speed bump here, arguably at April OPEX, we're going sideways.
Imagine if we go for a new all-time high.
Very small correction here.
Wow.
Like little correction here. So, you know, there's these like mini cycles that break down. And then, you know, there's obviously more substantial cycles where you can see like in April, we kind of mark a major low here, right? So that's the value there. Now, if you're a long-term holder and you just want to figure out when do I hedge, you look at stuff like is vol shifting, is core when I'm at the low, is there signals in the vol market that say things can be broken? And if we're ripping into an OPEX, maybe I want to hedge at the top of that OPEX because oftentimes we have correct, right? So those are the things to start to think about. SpaceX, I think with that, I think SpaceX, because of that big ugly lockup, I just don't know that I really want to touch that. That's scary. Someone says they're starting to cover the tens. Is that true? No, still there. Still there on the tens. You see how much that gamma bar has changed now, right? When we started talking here, it was not the high, it was not the biggest bar.
Broadcom turning back up. Apple can't hold on to this 307 area, it looks like, for now.
I don't trust the map when there's no 99% on strike.
Oversold.
So if
Apple is oversold. Looking for a bounce here.
88% on strike. Positioning is just kind of mixed and there's not much going on. That's why I say this doesn't matter. Or I'll reduce less. There are times when you look at the map positioning and there's just no big strikes on the board. You go, I don't have a great handle on it. It's like, what am I supposed to do with this position? Like, I can't do it. There's nothing big on the map, right? So statistically, there's nothing big on the map. You go, okay, I gotta.
SK Hynix trying to get back into Friday's price action. Got a hammer today, but we did gap down, so we need to see a little bounce.
Significant strikes, big changes in all those kinds of things. Then you can trust things. Another situation which is difficult to trust things is when relationships don't seem to sync up anymore. So, to be honest with you, core 1M and the NASDAQ drops 8%, the S&P says stable, that's weird, right? And so do you start to discount that a little bit and say, I don't trust this? Like, maybe a little, you know, like oil didn't drop the market, like there's manipulations going on there. Do you pay attention to gamma when oil is what's driving the market?
Okay, Apple fading here. Apple is fading.
That stuff a little bit. So, you know, a lot of this is about looking around and saying, where can risk come from?
We're getting oversold. We're looking for a bounce. Apple looking for a bounce.
Commodities, rates, for example, currencies, those types of situations. It is, but a lot of times it's exogenous stuff, right? It's tariffs or Iran or bank failure. So if you tell me there's gonna be a credit crisis tomorrow, I assume that people are gonna hedge that out. If they don't, like the smartest people in the world, if they think that banks are gonna be a problem, they'll start buying puts. So I should see that put position pick up. And if I see that and I say, okay, banks are gonna fail and people are hedging that, I want to pay attention to it versus saying like, oh, social media, all they want to talk about is banks failing, but nobody actually gives a crap. So it's kind of like, you know, that was kind of the truth a little bit in the oil market where oil kept going higher, felt like it should have gone higher. People are ripping their hair out saying, why doesn't oil go higher? Price action didn't do anything. And price action ultimately is kind of the truth a lot of times. Certainly not always, and you can make some amazing trades when price action isn't necessarily syncing up. But you know, oil down 5% today on a rumor. Well, if that rumor is not true, you know, is oil really going to drop 5%? I don't know. But I don't know any better information, but to believe that oil coming down 5% suggests that there's some type of peace deal possible. Now, are people, you think about price action being false or misleading, like when DRAM Korea, excuse me, were crashing because of margin calls. Well, that price action is not necessarily truth because you know there's four sellers. So, you know, that's when you can kind of separate things a little bit. Gamma is what we care about, 99 percentile of gamma, right? And so that's huge. If you look at the net OI, well, net OI is just the size of the contracts. That's only a 98th percentile position. Well, if you look down here, there's another 95th percentile position, but that's so far the money doesn't matter anymore. You know, if you look at a position down here, 7,500 is a huge position, but guess what? It's 200 or it's 100 handled out of the money right now. Doesn't matter. Right? So that's why gamma matters more because gamma is the weighting mechanism for open interest. So that's why I pay so much attention. There's still the EMA crossing here is worth using. Yeah, I think it's just helpful, right, John? Because look, so much of what we talk about is when, you know, and today is just trend day, higher or lower, but you know, a lot of times we'll say in seek and destroy, I want to hold it until the trend in hero changes. Well, what's the trend? How do you know? Right. And so I had to reset my browser, so I lost my settings. But if you come into the indicator, and I had EMA set up before, and so you got to play with these a little bit yourself, but forget how many seconds it was. So I have 30-second candles, so you got to divide 10 minutes by, you know, 30 seconds or, but and if you look in I've done some videos on this before, so if I'm moving quickly for some of you who are new to this, don't worry. But the point here is that, you know, you set up two EMAs, right, on total for all expiration, or you can do it on 0 DTE. You can say I'll set up another one at 1,000. Make sure that's also on all expirations, and that's teal, right? I just broke something. Learn to use your own tools, Brent. Okay, so here's the two EMAs. And so the idea here is that, how do I know when the trend is changing, Brent? Well, if you use the EMAs and just say, look, as a trader, kind of like to stop, this is when I'm going to stop myself out of this trade. Well, if the EMAs or the SMAs, whichever one you want to use, if they cross, I'm out. Right? That means the trend in hero has shifted. And so I'm going to shift from bullish pairs. That's it. Is that guarantee that the trend is over? No. But otherwise, what you're doing is you're sort of guessing and you're hamstringing. It's like, I just like using that because it makes so much sense. Now, have I looked at Bollinger Bands or anything else on here? No. Does it sound ridiculous? Kind of, but not really. The reason it does is because you get this, like what Hero Flow does is it measures the giant inflow. So if you put
NVIDIA turning back
Hero,
up.
it's like the options market has this like rage of buying and then it backs off, right? You have this ebb and flow of those positions. It's like, oh, okay. Maybe there's a little bit of merit to that, right? It's something to think about. John G says Trump's talking now. Help us. What's the most common way people misread trace? They just don't take it as truth enough, is what I would say. Like, there are times too. So here's one of the problems. We produce data on 3,000 stocks, roughly, all day long, every day, right? A lot of that data, 99% of it's probably meaningless. Doesn't matter. So you have to recognize what is important. Statistically, what matters, what should I pay attention to? That's why the 99th percentile is so helpful. Oh, the 99th percentile strike is telling me that, in fact, that is a giant strike, right? Even if I came here day one and I'm trying to figure that out and you go, oh, 99th percentile, okay, important. I don't need to know what all these other things mean because I had this, the biggest strike is right before, right? For example, if you look at Hero and we just pick up a random name, Tesla, and you go, oh, well, this is a sell-off right here. Why didn't Hero go down? It's because it's $50 million, right, on Hero, which can do $2 billion. It's not that big of a flip. So knowing the magnitude and identifying what matters is probably still matters for us. Great question. Seek and destroy, how often does it fail to pin? Well, in this case, what happened, so this is how I like to use seek and destroy. Seek and destroy says, we're going to go to this strike and we're going to tag it and we do it. I'm done. I'm out. That's good. I don't need, if I identified it and I did really well on the trade, then it's over. I hit the level that I think we're going to, and then either I need to put a new trade on, i.e. adjust my settings. So it's like I change a call to a call fly because I want to milk some more money out of it, or then I put a position on to express
Crazy. S&P just continues to make new highs.
Now, if we already hit the strike and you're saying I was waiting to hit the strike because we're going to pin it, and we're at the 99th percentile strike, we're probably the rate of change.
Okay, this is new right here, 76.10.
Trade trends more or less sideways, maybe a little bit upside drift, then that is what you're playing for, right? That's a little bit different. What they do is close up a bunch of these things. I love it that jump so much. Now they're closing them up. So max, we're at next 15,000 now. So now do you say, do I still think we're going to hit that? Now it looks like what they did, yeah, they closed that almost all the way up now. The 10s are gone, right? So on the Trump pump.
Net.
Right. So this is a perfect moment. The thesis before, about an hour ago, roughly when we started talking, was 79.10. We should move up into that strike because that positioning was there. Now that strike is gone. So if I'm looking at this now, the picture's kind of murky, right? You just look at the net open interest, you got no real size above, you got the dwindling size below. I made a little bit of money on the upside there. It's like, okay, now what? I don't have a great reason, right? I don't have a great reason to maintain a long now. Doesn't mean we necessarily go down. Just, if my thesis before is based on this giant position and that giant position is gone, well.
Broadcom breaking higher.
So that's.
Broadcom is breaking higher. Okay, we're trying to get above the 50-day. Once we get above the 50-day, 400 should give us a good idea what comes next. I'm thinking Broadcom's going to be higher.
Rate ball being up today, and I don't know how rate ball is doing kind of intraday here. Let's take a look at
S&P still going.
The vol has been bid, no doubt, and if we compare this to Fair versus Friday, it's kind of mixed. This TLT change, right? And it's coming in a little bit, and I think that's because oil came down. Now, I kind of feel like maybe that the play is buying TLT balls because no one is positioned for that, right? Everybody, if you look at the Explorer view, go look at call skew percentile and put skew percentile. Nobody wants to own TLT at the moment. What's the yield on TLT at the moment? Is TLT tax deductible interest in going off up there? I think you can buy the treasury. I think you can buy long bonds at 5% tax free. I think the all-in clowns were saying no. So what about the realized ball of that, how high is that? Well, we can look that up. So 1 month realized balls right here.
Broadcom's looking pretty strong here. S&P continuation.
You know, we're still,
Wow, look at this market. I would be taking profits off in the
realized
strength,
balls still very
reducing.
it's really not moving that much. Feels like this. TLT's moved a lot more last year. Thoughts on realized ball? I think I just totally misconstrued your question. Realized ball is rate ball. You know, we had, I don't know what the at the money strategy was today, but we're up now 1.5% on the day, right, which is really pretty bonkers, and 2% NASDAQ. So this was an upside day that no one was positioned for, and I think we're
Wow, S&P just keeps going here.
50. It could very well be that this Iran situation is legit, right? We finally did solve this issue, or at least we paused it again for a while, and now what you're seeing is ball just getting so smacked, rates can come down, like, so the whole end is now turning up. That seems to be kind of what's happening, but clearly no one was pricing, nobody was pricing this. Thank you, DS, I appreciate that. TLT is not us, but. So, anyway, back to the question, is some of the upside day today due to the cover trade? Well, what was covered today? All these positions were covered. They were super far out of the money on Friday, right? I didn't think we were gonna hit this level up here, on Friday night. This morning, we opened at 75.70, which you notice there's no resistance level between where we were trading, right, down here, and 75.75, right? That was the resistance. Not anything lower than that. Above that was about 15 handles above. So that's what I thought was resistance for today. But what happens? They close the freaking positions up. They covered. No one, whoever was sitting at 20,000, I was like, oh no, and they roll it higher. And then we just literally saw in real time another oh no when they closed these ones, and yet the market was still grinding higher here. And you look at other positions, there's not really anything else on for today. I don't think they're gonna get up 76.70 on the day, right? That's not that big of a position up there. That would be kind of hilarious. But they keep rolling. Clearly, like this is the sign of the cover trade associated with a ball move that's bigger than people expect. It's has to do with ball move to the upside. So what actually gets a name on my screen in the morning? I want to see stuff that just has a lot of volatility associated with it. So I
S&P at the highs, 76.10. Can we get there?
The scanners board. So if you have a big macro watch list like this, or you look at top stocks, that kind of thing. This is dispersion. Look at how these points are all over the place. They're just splattered everywhere. This is unusual. Normally, you would get Apple, Amazon, blah, 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 on one quadrant, right? Maybe rates be another quadrant and stuff, but this is just dispersed everywhere. So, what is interesting? Stuff that is, big sell-off, rallying too much, and I know that retail is driving something, there's margin calls and something, those are trades that are really going. We get a lot of 1x2s and SK Hynix and the like, those trades actually work out, do very well. So those are the things that I like, the things that I think I have edge in when they're being moved because of emotions, right? Forced selling, I rank as an emotion. Chasing to the upside, an emotion, right? And that's the stuff that I like to create. Ron, info at SpotGame.com should get you support. I find it hard to believe that. I'm not calling you a liar, but shocking to me that you got a response. It should be 24 to 40 hours per month. Joe Carter, I'm glad you like the Monday morning Q&As. We're going to do a few different things, and there'll be a nice announcement about this. JT is going to do another session every week. I'm going to try to shift my stuff. I think we're going to try to be open to see people like that better. So we'll trade the open a little bit live. I say trade, but we'll go through the open. And the reason I don't trade on screen is because we will have hedge fund clients, we will have bank clients, we will have a lot of clients, broker partners and things like that, where you just can't do that kind of stuff. Compliance departments will go bananas, right? So we just don't do that stuff. I also don't like doing it because I don't want you to copy my trades and lose money or do something stupid or whatever else it is. I don't know why you're trading or how you like to trade, so. I hope that more or less makes sense, but, we're gonna shift stuff around a little bit, to hopefully make it more valuable for everybody.
Apple, I'm out. Out for now. There's no
There was
momentum.
a lot of volatility in the hero session today.
Momentum slowed. I mean, it might get going in the evening session. It is 2:00. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're listening to Brent over at Spot Gamma. Member only Monday conversation every Monday.
Hanging back there is gold. Gold moon back from the days. I think 30% or more gamma expiring, roughly speaking, is enough to warrant that expiration. I know there's a lot of questions today. I think everyone those questions. I think I answered a bunch of these questions, went through. Trades for NASDAQ. The reason it's not on the roadmap right now is not all of the exchanges where NASDAQ trades is there. And the other problem is the NDX is just not as liquid. You just wouldn't get as much from that. 7620 is the all-time S&P high, called there by D. That is the 99 percentile strike. Not quite, but like this is the moment right now. I don't trust the map. We've had so many positions closed. We're up 2%. I kind of feel like, hey, we wrote it. And I'm just gonna chill out. Like 2 more hours. Trump just talked. The positions all been closed and rolled. 2%, 0.5 S&P. Whatever the ball chase, like a cover chase, like okay, we're good. Now I'm not saying if I own stock for long term and sell out. I'm just saying for the day trades and the pin trades and whatever else. All right, like it's been built, so. 76 resistance. I would think that's gone, but I also don't have a reason to think we go to 7610 anymore. That big strike sitting there was the reason. If Hero keeps going up, maybe. Do I want to short stocks here? No, but for zero DTE, you got 2 hours left in your trade. Like, I don't, what's your reason? What are you pointing to saying, I think this continues to go higher today? You may have a valid one. I'm just saying, I don't, the data doesn't show it to me. So. Selling call spreads, maybe. Find that idea for the zero DTE. I mean, there's been a lot of covers today, but we are at a major resistance point. There is all-time high. We did have a huge vol move up. Positions are closed. I don't know. Yeah, the 76 10s are gone. They're like that. Wrap is this way. All right, we covered a lot today. I hope that the session was helpful for Trace. I think we covered some of the mags that I think are interesting. You look at like Apple, for example, and looking at Universe there, I think that probably makes a bunch of sense, for example. So a bunch of interesting trading opportunities I think are out and around at the moment. I know that there's we have next week. I'm on vacation, proper vacation, so I'll be doing a webinar And then the following weeks, I guess that's OpEx week, we're gonna have this new Q&A session laid out. The new flow patrol report also has been put into.
Most of the stocks are just kind of chilling right now. We've had quite a move.
So flow patrol as it exists are still.
So I'd be reducing my exposure.
Something like that.
Semiconductors, looking for them to hold the 200-day and push higher.
All right, that is definitely it now. Any questions at whatstockn.com? Thank y'all so much for joining me. I'm just gonna tell y'all, but today's my birthday. I'm gonna tell you all of them, but I'm gonna go have some cake. Kids. That's it. So thanks so much, everybody. I'll check out on Discord in a little bit. Oh, you're August 1st, cousin. I like it. And thank you all for joining us from Australia. And I mean, I say thank you to those people. Super. You guys are gloves for Punch and Train Tech Project. Thank you for all the kind birthday words. All right. Hope trading was successful today. And we'll talk to y'all a little bit.
That makes a lot of sense. Brent is also a Leo. That's pretty cool. $76.25, looking good. Nice trading today, folks. We had a really nice opportunity. A lot of these stocks heading higher. I'm reducing exposure in shorter term options. I had Friday's options, the 305 calls. I've since closed all of those. Looking for semiconductors to catch a bid. Intel's at the high of the day. Looking for Nvidia to do something too. Watching XOXL. Okay, what's SK Hynix needs to get a little bit higher. Get back into Friday's price action. We had that nice pop. That whole what was the name of that fund? Kind of a funny name. Situational awareness. Okay, looking good. Market's looking good. Okay, Trump is speaking.
15, 16 months is incredible. It's clean, it's safe. You haven't seen anything yet. We're replacing all of the grass as we replaced in the fields, beautiful fields with the grass. Grass is like you. It is a
Yeah, that was the word I was searching for. Irony. How ironic. All right.
most of them for 25 years. And it's a renaissance. You use the renaissance, but it's a renaissance. But the biggest thing was we have very good time. This was the crime capital, frankly. It was the most unsafe capital of any country in the world. That was one of the safest, and it's one of the safest places in the United States. And people are coming down. You see the tourism.
550, 553 now, 553.
We used to lose 3 people a week. Death. That's at least, I mean, it's 3 people in terms of death. 150 people a year were killed. They come down from Iowa, they come from Indiana. I'm looking at the Washington Monument. I'm looking at and they end up getting killed before their parents are so. It's not happening. We don't have that. The military has been unbelievable.
Okay, so the New York Fangs are just oscillating at the moment. If we get anything, looking for between 220 and 240.
Now you can walk to work, you can walk to the White House, and the people in the White House, they tell me, sir, thank you, they're thanking me all the time. They used to have to take Uber, and the Uber would be robbed, okay? They weren't even said. They go to a restaurant, and they feel safe in a restaurant, and then the restaurant would be robbed. Do you know the restaurants were all closing, and now you can't, if you're a restaurateur, you can't get. You literally can't. The restaurants are booming. Crime is down 92%, maybe more. I might get down 100%. You know, the greatest statistic we have is that 2% of the people create 91%. You can really handle it. And we moved almost 5,000 people out there, criminals, career criminals. In some cases, they're in jail. In some cases, they were so bad, they came in through a night. They're so bad, we don't want to move them. We want to put them in jails because we're afraid they're going to come back in someday. So I appreciate you saying. I guess she's a communist, and then she says she's a socialist, but I guess she's a communist, is what she says, but I have not met her. I look forward to meeting you. Would I federalize, basically the same federalized as she? I'm allowed to do that, and would I do it? If they want to, we took something that was in deep trouble. It was a graffiti-filled, crime-filled mess. We turned it into Shangri-La. We turned it into a great place. Look outside, look what's happening. Look at the beautiful ballroom and military center. It's a military center, much more than, we have a drone board on top. Look at the grass at the building. It's being all replaced with the top stuff. The parks, all being replaced. Starts very soon. The one at the top, it's got 700 acres of parks. We're all going to brand new restaurants. You can get Scott's. You know Scott's? Scott's Miracle. They did it. Great grants. What can I tell you? Gotta give them because they did the White House for free. Sir, friend of mine, guy that is terrific. We'd like to give you a new gross at the White House. I said, I'll take it. How much? He said, free. I'll take it. So, thank you. Thank you. Well, I don't know. I think we're going to maybe get something, but I want to give them every last chance before decapitation. Very tough to do what we have planned, still planned. We'll see what happens. But it's a very, very tough thing to do. I think I'm very proud of the fact that I'm giving it's just a big move. To do an attack that big in the country, I'd rather not do it. Now we've already through lots of large attacks, but they were normal large. Hopefully they'll come to their senses because what happened cannot have an impact. But hopefully they'll come to their senses. So they called me and they said, please send it to me. That's the real truth. And everyone knows it. And they found out 2 weeks in sleazebags, not sleazebags, leaders should be put in jail. They have to straighten up the laws for leaders. But in this case, leaders, because they said the severity of the attack. And who's going to come last night? And it would have gone on for a long time. And there'd be essentially very little left. There'd be nothing left. If I ever given a chance to let a lot of people live, I would So I wouldn't have no time to say, you know, I don't have to do it. A lot of people are running. And you have a sick 90 hours you take in place right now. So they'll be defeated because I'm destroying the country they would take. But this desk is like a blocking desk. No matter who gets in, if it's bad, I block. And I'm gonna block. If it's bad, if it's stupid things, like the things they want to do, we want to get rid of the US Senate. We want to get rid of the Supreme Court. They want to put now 21 or 23 people. That's on the Supreme Court. We'll get rid of it. They want to get rid of the presidency. They want to have an appointed executive running. That's a communist thing. It's a communist thing. These are sick people. And you said it the other day that maybe some disease in Europe, but when a country goes bad, and if you look at the blue cities, aside from massive crime, much more crime, Republicans have very little crime. But why do the blue cities happen? And also you can say this with nations when they go bad. The blue cities have something in common, crime, vicious, violent crime. What do they have in common? They're all dirty. They're filthy dirty. Their streets are dirty. Their streets
dirty.
smell. Their storefronts are broken. Their trees are all gross. Everything about the place is dirty. And I don't want to mention any specific city. It's really all of them. But you go into these cities that are blue, they're crime-ridden and they're filthy dirty. They're like Washington, D.C. was a year and a half ago, with graffiti all over the place, with crime all over the place, with people afraid to be here. You got to be ashamed of your capital. Some of the most beautiful buildings built in the real time. Like you look at the Supreme Court building and they put graffiti on it. The most beautiful columns I've ever seen. In fact, our columns are going to be nicer at the ball. I said, I want the Supreme Court but better. But you look at those columns.
All right, Microsoft's about to break out.
No artistry, just bad people. But the one thing they all have in common, crime, the two things, crime, but they're disgusting. They're filthy dirty. The streets are dirty. They have people.
All right, get to the point. All right, so enough of this. Keep saying the same thing over and over. Oh, hope everyone's having a good day. The mic is a little bit away from me, so that's why it sounds low. All right.
Companies cutting 8 to 12% of their combined operating. But there is a lot of skepticism around this deal. You know, one concern is that these companies have direct question is whether Astra even needs M&A of this size.
S&P starting to fade.
Its goal of reaching $80 billion in revenue by 2030 without major mergers, and around half of those target sales would actually come from the US. So that makes this deal rumor a bit of a head scratcher for some investors.
You know, we've seen deals like this floated before. They don't necessarily always come to pass. Why do you think the time could be ripe if something like this were, you know, being maybe, you know, talked about, thought about, floated?
That's a great question, Kelly. So, you know, when I talk to some analysts, they do point out that Eli Lilly is one factor. You know, this is now a $1 trillion company. We're not only in the age of big pharma companies, we're seeing huge pharma companies. So seeing a company of that size, it doesn't make it seem very unlikely for two sort of smaller pharma companies at this point to merge in that way. But again, it goes back to sort of the question of, will this get, you know, approval from antitrust regulators and whatnot, and does it really make sense strategically for a company like AstraZeneca?
You know why Astra in particular is down 7%? Bristol Myers down fractionally, but that's a big drop for a company on a.
That's a great question. So for AstraZeneca, again, analysts really kind of question the logic of a deal like this. AstraZeneca has done great with their stock price quadrupling under their new CEO, and they really question if M&A is really needed here to reach this goal of $80 billion in annual revenue by 2030. That's something that they're already confident in doing without any kind of major mergers here. So they're questioning whether this really is something kind of worth for the company.
Yeah, and if they're going to be using stock to do it, it could also be one of those.
All right, Microsoft trying to go.
If they're using stock in some way, it could be a kind of commentary in the
Okay, S&P. Microsoft's trying to go here. Looks like it's trying to go again.
There are possible synergies, of course, antitrust scrutiny as well. Just how much
Apple, I'm completely out of those Friday calls now.
that size need to acquire that much more in terms of pipeline for their future oncology ambitions?
Right, that's a great question, Dom. And so that's really the big thing that people are debating here, whether you do really need to merge these two companies. They're already generating, again, these cancer drugs for the respective companies, generate half of their sales already. And the biggest, in terms of cost, the biggest thing that they can do is reduce sort of operational costs here, cutting the need for two cancer teams.
Okay, S&P is starting to bounce a little bit.
But again, these companies both have very strong pipelines and also cancer portfolios by themselves already.
All right. Annika Kim Constantino on the deal chatter in biopharma. Thank you very much. We'll see you soon. Thank you. All right. Well, Bitcoin is up fractionally today, but the bigger focus of the moment right now is why did Strategy sell Bitcoin? More of it last week. The CEO of Strategy, Fong Li, joins us next to talk all things Bitcoin and just what the prospects for cryptocurrencies are. Keep it right here.
S&P 500. Cash. Looking for it to fade a little bit. Maybe back to the call wall. We'll see. That's 75.50. All right, I bought some 75.80s. Cheap. All right, Microsoft looking good. S&P. Looking at this level right here, 75.80. Right in this zone. 75.80. Most of these trades like Microsoft and Nvidia, Amazon, Google, Meta, these are probably going to be higher tomorrow. I just bought some puts just as a small hedge intraday. Whoopsie. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's been a very productive day. If you traded from the open,
Welcome back. Checking out shares of Strategy higher after the company sold more than 1,600 Bitcoins last week, raising roughly $105 million. Now, it's part of a major overhaul aimed at shoring up Strategy's finances and rebuilding some investor confidence, including buying back preferred stock. So will Strategy's strategy work? Joining us now for a first on CNBC interview is strategy CEO Fong. Thank you so much for joining us, Fong, for this. As I'm looking right now, the prices for Bitcoin just a little below 64,000, so call it roughly half of what it was at the highs just in the last 12 months alone. We're closer to the bottoms here at the 52-week range than the top. What exactly is your outlook for it, and how exactly are you navigating this kind of price action given your corporate balance sheet needs?
Yeah, look, I think Bitcoin is going through a bear cycle right now, and some of that is external macroeconomic. I think there's major funding that's happening with AI. I think there's uncertainty with interest rates. There's uncertainty with wars around the world, and there's uncertainty with governmental legislation. We, as a company, went through this in 2022. Right? We actively manage our capital structure. We rotate into Bitcoin. We sell Bitcoin when we need to, and we'll continue to do so. And we'll get through this bear market. And what strategy is designed to do is to outperform Bitcoin in a bull cycle, which I expect to happen next year.
You mentioned those factors that were driving some of the downside action and sentiment. It wasn't that long ago that many of those factors were reasons to be in cryptocurrencies and specifically in Bitcoin. The fact that they were decentralized from traditional finance, the reasons because you didn't have some of the exposure to fiat currencies and some of the geopolitical aspects, cross-border transactions. Why that sentiment shift, and how do you get back to a zone where Bitcoin becomes one of those positive plays on those uncertainties yet again?
Yeah, I think that will still be the case.
All right, S&P is still holding up.
Legislative clarity, and what I mean is we need SEC and the Treasury and CFTC to move forward with a set of excellent rules that they have planned to allow tokenization of real-world assets, to allow stable coins to be implemented. What will happen then is large banks, and we've seen them start to move into this space, and that'll be a major catalyst for Bitcoin. And I think that'll also allow Bitcoin to be the inflation hedge that we expect it to be.
Our graphic just showed that your average cost was $75,000 per Bitcoin, and we're at 63 today. So are you a forced seller of Bitcoin?
No, we're not a forced seller of Bitcoin. The average cost is not that important to us. It's really where our Bitcoin purchases accretive to our common shareholders and our Bitcoin per share, and they always have been. We're selling Bitcoin from time to time, and we've shown that our Bitcoin sales are not really a major portion of what occurs in the market, but sometimes it makes sense to sell Bitcoin to add to our U.S. dollar reserve. Sometimes it makes sense to pay dividends. That's what we've been doing.
When we spoke about this last time, the first time you had sold, you said it was to test the market. What is the rationale to shareholders for why selling Bitcoin gives them more value per share, when the original idea was that buying Bitcoin as it continues to move higher would give them kind of leverage returns? Now,
The big picture is we have
All right, so far we're holding on to 7,600. Grover looking at 7,600 as support. Looks pretty good so far. Microsoft watching for a breakout.
It's really focusing on a very small amount.
Be nice to see a breakout, but I wouldn't buy it up here.
Last few weeks to buy back Strush, which is trading below par, and that's accreted to Bitcoin per share.
Michael Saylor, the chairman of your firm, has basically put on social media that, while strategy has been a seller, to your point about some of the corporate machinations around your balance sheet, but Michael Saylor on X said, when I say never sell your Bitcoin, I speak as no one saver to another. I have never sold mine, not one Satoshi. Strategy is a public company, not my wallet. Since 2020, it is disclosed it may buy or sell Bitcoin and manage capital. Our shared conviction of Bitcoin remains unchanged. Michael Saylor says he's never personally done it. You have to do it for corporate purposes because of what you just mentioned. How exactly then do you view that future of it, given the fact that you may not have to operate with the same kinds of parameters?
S&P turning up, looking good.
Yeah, look, we have 842,000 Bitcoin. That's over 4% of the world's Bitcoin that will ever be mined. We're the largest institutional holder of Bitcoin. Last quarter, we passed BlackRock. We're the JP Morgan of the crypto economy. So whether we sell 1,000 Bitcoin out of 842,000 to me is irrelevant to the conversation. The conversation is, what is our role in Bitcoin? And are we adding Bitcoin per share?
2610.
Creating value? I think that's an unequivocal yes.
Fong, you said that one of the reasons you sold the Bitcoin was to pay your dividend. Would you have been able to pay the dividend without selling the Bitcoin?
Yeah, we have over $4 billion of cash now on our balance sheet as a U.S. dollar reserve. We could use that to pay. We could use that to sell the Bitcoin to pay the dividend also.
And Fong, just how much, and I want to get this because this is not just about your firm.
Tesla turning back up. All right, Apple, no follow through, so it was a good decision to go ahead and close that for now.
To not just yourselves, but the
Microsoft looking good.
for its path forward. And we're just showing some stats right now from
Microsoft at the highs. Not interested in buying it up here. Let's see what it looks like tomorrow, if we get another opening range breakout or not. Microsoft.
That has been put forth by Commissioner Atkins of the SEC, by the CFTC, Treasury Secretary Bessent. There are rules ready to go, and they're either going to go with clarity with the legislature behind them, or they're going to go without clarity with the power of the executive branch. So I think the most important thing is decision on clarity one way or the other, and the rules will get made.
All right, Fong, thanks. Really appreciate it. Good checking with you again.
S&P up 111 points, hanging on to 7,600. Looks good.
Here's what we're watching this hour. ICE detentions reached a record high last month for the Trump administration. According to CBS News, more than 46,000.
Who cares? What does that have to do with trading?
And track market trends up to the minute. Trade really strong.
Welcome back to the watch list. I'm Nicole Petalides. We're coming to you live from the New York Stock Exchange. Time to take a look at the sectors that are on the move going into the closing bell. Kevin Hinks is joining me live from the CBOE with some of the takeaways and his view on some of the sector action. Good afternoon.
Hello, Nicole. Yeah, we have 7 sectors at the S&P.
All right, S&P trying to push a bit higher now.
But also consumer staples is down. That's a risk on measurement there. Healthcare.
Looks like we're going to head higher.
What is up, though? Information technology is interesting because despite some of the memory stocks being down, it's software that's having a really good day within information technology. Communication services having a monster day of 4.5%. That sector led by Google Alphabet, led by Meta Platforms. Also, consumer discretionary up 2.5% on the day. So the leaders are leading, right, Nicole? I mean,
Got an hour and 18 minutes to go.
The big sectors, the weighted sectors of the S&P 500. In terms of the macro, the dollar has rebounded from the big sell-off on Friday and over the weekend.
Communication services doing well, up 3%. Consumer discretionary. Both of these were what we were looking for to continue. We got that in spades. Technology, industrials, materials, financials all look good. Broadcom back up to the highs.
For that, appreciate it. So 7 sectors higher, 4 down, and the S&P 500 up 1.5% right now, 7603. So now for our ETF watch list segment, joining me right now, Bilal Little, global ETF strategist at Direction. Thank you so much for being with us. So ETFs play an important role in a portfolio. You were looking at the markets in the big picture. I know ETFs have a purpose, particularly when there's a lot of volatility. What's your big picture market thought?
All right, S&P bouncing a bit more.
The market is actually picking winners and losers. If you take a quick snapshot of last week, we actually saw that, right? We saw the market saying, hey, we're rewarding earnings, but we're actually rewarding guidance just as much. And when you have a company like Meta and or Apple,
S&P holding on to 7,600.
they didn't guide so well. What happened? Their stocks were punished. Meanwhile, Amazon and Microsoft actually did well. So what we're seeing is the market is making a decision, and they're picking those winners and losers. The other part that I will land on is when you start thinking about where we're going, is the market is looking for opportunity. And that's why you saw a bit of a bounce today, the entire, I would say, hyperscaler trade, comparatively speaking to the sims.
So let's get to some of the ETFs. I mean, you have the.
All right, calls are working better. S&P 500 calls are working. Puts were a little hedge. I want to see prices higher. I'd like to see Apple bounce. S&P, can we go for our all-time high? This week, looks like we're going to get an all-time high again this week. S&P going.
Direction. We're an innovative firm. That's the most important aspect of what we're trying to do. And at the same time, we're the leader when it comes to single stock ETFs. So this is actually a natural progression for us. But also, when you start thinking about what do investors want, they want income. That is a critical component of return, especially when the markets get volatile. So what we did is we got together with some institutional partners, which were Goldman Sachs and our index provider, SIBO, and we decided to build single stock ETFs that are not levered, that offer a 20% coupon, keeping the message simple for investors to get them income in the names that they already know, trust, and like.
So these individual stocks, as we're talking about, when we look at some of these, right? NVIDIA, Tesla, Alphabet, Meta, Palantir, Micron. I mean, Tesla, for example, is having a great day. Several of these names are up 4, 5, 6%. So let's talk about one of them, for example. Which one can we highlight here that you want to talk more about?
Look, I think Microsoft is a great one. I think we can use Microsoft and we can use Tesla. I'll use this as an example.
Okay.
For an investor, Microsoft is a name that is a staple in their portfolio. And what I want people to know is they can actually go out and get a coupon on a name historically that doesn't pay a very large, substantial dividend. However, Microsoft has had some serious questions coming into this quarter if they would actually have sustainable growth on their suite of products at the enterprise level when it comes to AI. So is the ROI matching up to the investment, right? So they were rewarded for that. When it comes to Tesla, historically, Tesla is a sentiment stock. It doesn't trade on traditional multiples and I would say earnings like everyone else. However, it's a stock that everyone loves and they always want to get exposure to it. Tesla doesn't historically pay a large coupon and or dividend. So what do? We provide coupons to names that they know, trust, and like. And that's a perfect example of the duality.
So when you talk about volatility around earnings that remain elevated, investors are looking beyond price appreciation. What's the sort of expansion on that thought?
All right, Broadcom looking good. Probably going to get back into Broadcom this week if it stays above the 50 day.
Today, call it 5-7% swings. It's not normal. If you look over the last 5 years, that's not a normal move for a lot of these stock positions. It should be like 1.5%.
Often tied to generative product advancements. We like ServiceNow's position given data context matter a lot. Palo Alto networks and cybersecurity would be another one I would push to the top of the pecking order, just given the post-Windows inflection and spend we're expecting to see there as well.
You mentioned Michael Tom here. You mentioned the Palo Alto side of things, right? How much more will that cybersecurity thematic be key to this kind of AI evolution for that next leg? Is it going to be as key?
Tesla turning up. Tesla.
Really? A bit of a paranoid uptick in cybersecurity spend coupled with all of the prioritization of AI-related spend that's happening. So we think the next couple of quarters, it will be important for cybersecurities to show that there is follow-through in terms of spend and inflection of growth. Palo Alto, given the strong acquisitions on the identity space with things like CyberArk, really strong core positioning within its core network, product capabilities, and just the platform advantages of consolidating spend in the cybersecurity space. To us, seems like it has just the concert of all the major segments of the business working in tandem. So I think Palo Alto and CrowdStrike will be the first couple of companies that investors focus in on. But very important signal for carrying through some of the optimism that you're hearing.
All right. Michael Turin, Wells Fargo Managing Director and Software Analyst. Thank you very much. We appreciate the conversation, sir.
Appreciate you having me on. Thanks very much.
All right. It's been a summer to forget and get your popcorn out, by the way, and watch for some things. record debut for the new Spider-Man movie this weekend. So just how long can it and the entire box office's hot performance continue? That momentum in Hollywood coming up next.
Let's pick a direction. I'd like to buy some calls, but we've already made a nice move back up to the high. Okay, it looks pretty good. Nothing really overhead to stop it. S&P looking good. Okay. Tick cumulative is green. We've had a really good day today. Tesla pushing back up. Broadcom's at the highs. Microsoft trying to break higher. S&P trying to get back up to the high of the day. Looking really good. We've got an hour and 9 minutes to go. Hour and 8 minutes to go. Okay, AMD with earnings coming out. SK Hynix back to looked a little better. SK Hynix watching for a follow through. SK Hynix. Tesla back up to the highs of the day. S&P looking good there, Grover. See if we can't see a push to the upside. Okay. We get a runner here. S&P runner.
are joining bonds higher, cooling tensions in the Middle East and crude lower, West Texas Intermediate 80.52. Carol, Tim, that is a Bloomberg business.
All right, Charlie, thanks so much. Hey, let's get to the hospitality sector because Marriott International shares, we've seen them under some pressure after the company said that room growth for 2026 would likely come in at the lower end of the range, driven by construction delays in the Middle East.
I mean, talk about applications.
It keeps coming and making its way, right? All right, so we've got that stock down about 6.4%. High was out though last Thursday.
Yeah, stock traded down a company that its net income guidance. The S&P Composite Hotels Resorts and Cruise Lines Index, that's about 3%.
New York Fangs are hanging in there.
US Gaming, Lodging, and Leisure Research Institute.
An hour and 4 minutes to go.
We love this area. It tells you, yes, about the consumer, but it also tells you about business travel and so on and so forth. Walk us through, first of all, the earnings that we've got and what it's telling us. What's really interesting is there's a bifurcation. We are in one of actually the best travel environments for the US that we've seen in a long time. US RevPAR is up 5%. Now, the revenue per room, that's basically the key metric. Now, what's the problem or the offset to that is two things. One, unit growth is coming in a little bit lighter, so that's new hotel rooms. And two, as you said, the Middle East is an offset that pressure that has been higher than expected. And that's
S&P up 116 or so points. Looking good.
Is the next thing. Like companies are saying, okay, we're actually abandoning construction projects.
I think we're a long way from that. And the one thing that I think is good and maybe misunderstood by the market is take Marriott.
SoFi having a pretty big day today. SoFi.
The Middle East. And there's a bifurcation in the Middle East. You see trends in Dubai that have been down 50%, 60% on pricing, but areas like Saudi Arabia, they're seeing 30% positive pricing. So there's a bifurcation even in that Middle East. We do see some structural erosion there. There's enough power within it, and there's a small enough segment for the hotel companies. That's a bigger share than I would have thought. Really?
SoFi, nice reversal today. SoFi up nearly 10%.
In phase two of lodging growth, we've had a lot of growth in the US. There's still more to come in the US. But the real next big growth opportunity, it's Asia, it's Middle East, it's Europe, it's Latin, it's US for the most part. There's a story post-pandemic travel boom is starting to stream as high fuel prices, the war in Iran, and persistent flying headaches deterred travelers from booking international trips for this year's peak summer season. Now, everybody in the last 2 years was going to Italy or like Japan. Yeah. Are you seeing this also? A little bit, but it's at the margin. I think the bigger kind of question or debate that investors are having is it's almost the travel environment for the US and Europe, to be fair so far, has been so good. The World Cup, for example, that added about 100 basis points to pricing just for US alone. And it's what's so good today makes for a tough comp for tomorrow. And so investors are pre-trading that deceleration now to see these idiosyncratic tailwinds and now starting to fade and some of the concerns that you mentioned as well.
We were concerned in the last drop. Because there was this idea that
SoFi just shy, S&P just shy of the high of the day.
Yes and no. I think we're seeing these reports, and not just from the jobs report, but also just generally across kind of consumer dashboards.
We're going to run this higher, S&P. We're going to run it higher.
The hiring keeps doing better. That's the way. I think people thought it would broaden out more this year to third and fourth quarters. We haven't seen it.
Can they run this?
People pricing are doing a little bit better versus, some of the windows and choices. We see business versus kind of regular people. Very intermingled, as you mentioned. Sometimes both growing, and that's actually interesting. So the first time we really have seen quite a nice low single digit plus and growth in business travel this year. So that's broadened out until a little bit more to that week. But leisure really been the biggest leading indicator.
you also come to the cruise office. Charlie, big cruise guy. Yeah. But those companies getting fuel prices too. What It's a good measure of consumer and certain type of consumer. It's like talking about probably folks that.
You know, it's interesting. It's been a tough 2026 for sure. I think that's I was so surprised because you go back to last year and I feel like everybody wants
Starts, they're looking for some.
visibility, bookings way out. Like,
All right, we got an hour to go. Power hour, 60 minutes.
Happy Monday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Staten, coming to you live from our Chicago headquarters. And I'm Steph Bonus, coming to you live from
Here we
the
go.
Stock Exchange. Let's take a look at what is coming up on today's show. We will look at the electric vehicle market, stage one, advantage in the rate environment, how it's impacting commercial real estate. And we do have earnings coming up after the closing bell today. We will get live reaction to earnings from Palantir and OnSemi as soon as those numbers break and come out. But for now, Molly, talk us through what's been on your radar today. On my radar today, hitting a new record high, along with touching a $3 trillion market cap for the.
All right, S&P, you see they hedged this and pushed it higher. Okay, S&P is about to go. Okay, we're about to go here. Okay. All right, S&P is going.
International shares plunging though after reporting mixed results for the second quarter as the conflict in the Middle East weighed on those results.
There we go. S&P going now.
Combine that with a Q3 profit guidance that also fell shy of expectation, and you end up the worst performer in the S&P 500 today. Do you want to check in with markets though as we near the end of this trading session here? As we take a look at the big.
Oh, what a crazy day, huh? Everything's on a buy right now. The S&P on a buy. Looks like this could run.
And the Russell 2K is up about 1.6% at 78.09. Nice day of gains here across all four of our major indices. The 10-year holding pretty tight at 4.7. The dollar just below 100 right now. Gold sticking fractionally lower. We're at 41.0350 a troy ounce. Crude oil back above $80 a barrel.
Confirmation that you're going to continue to spend. Both of those are obviously bullish signs for a market that was getting a little
S&P still climbing. Looks like it could get some short covering and push a bit higher.
Extraordinary this moment has been. You had the leading stocks go down 30, 40.
Futures
And the index at most
up 118 points.
Sun Micro down 30 or 40 and 99, or Cisco down 30 or 40 and 99. What would the Nasdaq have been down? It's a remarkable rotational tape that we're in. When you look at some of the response post earnings, I thought the response from Meta is particularly important here. It has now recovered the entire earnings decline in a matter of about 3 or 4 days. When they can't keep them down, there's nothing more bullish than a bearish chart that won't break down. So you have that going on with the hyperscalers. I also think it's notable when you get new highs in banks, new highs in healthcare, new highs in ESA, Europe, Japan. Yields coming down a little bit, that's a big help. You got oil coming down a bit, that's a big help. And on the back of
Nvidia looking good here. Nvidia.
Out there. What does that do?
Yeah, I mean, the North Star for me is semiconductors. Remains that way. I mean, company's going to grow between 7 and
Nvidia back to the high of the day.
next 5 years. The idea, I look
Tesla.
at this cycle as May 2023, Nvidia's first upward revenue revision that was massive. Your 3 years, 2 months into what probably is a 8 to 12 year investment cycle. So we know the rally's not over. We're going to get big pullbacks. We're going to get technicals on the path, but are we going to be higher on the semi trade and the tech trade in 12 months? Of course we are. Earnings are growing more than 50%. I think 60% of tech earnings from now through the end of 27, 60% of S&P earnings are going to come from tech growth. 60% of growth. So how can the market hold in unless you continue to get the spending it can? So I like semis. I like the Mag 7 or grade 8. And I continue to think they'll be outperformers from here.
Okay, so it's interesting that you say May of 23 as the moment, right? When NVIDIA did what it did, and here we are,
NVIDIA.
you know, getting later in 26. So we're 3 years beyond the bump that this market and this group got based on that.
Yeah.
I'm wondering if you can make a
SoFi. Nice day on SoFi.
timeline about when Micron sort of blew the doors off everybody with their own, you know, earnings projections and where that market is, and it's not even past that. So does that portend the kind of runway that this gentleman that NVIDIA delivered to this whole trade?
Micron will grow earnings by 1,000% this quarter. 1,000%. So it likely is the peak in earnings growth. And I think the big question is, will the peak in the growth rate in earnings correlate to the peak in the stock? Meaning, will the stock market care about the second derivative if you see the earnings growth rate slow, but they're still growing earnings at, let's say, 200%? Will you see more?
All the New York fangs look pretty good. Snowflake faded from the high of the day, but Broadcom looks like it wants to get above the 50-day. Looking to get back into some Broadcom once it's back above the 50-day. Microsoft hanging out at the highs along with NVIDIA. Apple just lost all of its momentum. We took that off about 2 hours ago.
Last week, you were down to 0% of the semis above their 50-day moving average. When you're in a long month trend, that generally gets you in the vicinity or the ballpark of the below. We'll see how they respond out of it. The last couple of days have been encouraging, but this is the bigger picture here. When parts of the market correct and money rotates elsewhere, doesn't it tell us that money does not want to leave the asset class of equities? We have yet to find an interest rate that's high enough to really be competitive to draw money out. Not for any extended period of time.
Let's see, Microsoft looks like Microsoft off the highs of the session. NVIDIA at the highs of the session. AMD with earnings. AMD with earnings scheduled for tomorrow. Some of these semis should see some action. I think most of them will see some action off of that earnings report.
Literally, you made your living looking at these stocks for years and years and years. Yeah, it's just
Their new Halo CPU box computer. Competition with NVIDIA's $8,000 box. AMD's box is $39.99, $4,000, so half the price of NVIDIA's box. So you have AI supercomputer on your desk. Okay, SOXL. Tesla got rejected at the high. Tesla turning back down. Let's see, what's Tesla? I got December calls on Tesla.
How long does it stay at peak and how fast does it erode? But Chris's point is good, right? A year ago, the analysts had a cumulative $6 billion in free cash flow for this year and next year fiscally for Micron. It's now closer to $300 billion.
Well, because
so the order of magnitude is the issue here.
You know, we don't know, and we're learning as we go, and we've done it every incremental step of the way, how to quantify what this AI build out is going to look like.
Massive day today for the bulls. Congratulations.
Choice but to get caught up, because how would you know?
Last year, this time, people thought that CapEx for 2026 would be flat. And now it's up 90% from the hyperscalers. And so that's why we've seen such a huge rally in these semiconductors. 20-30% growth for hyperscaler CapEx in 2027. But if the market keeps pushing back on raising capex forecasts, could we see those numbers be too high? And that would be the one thing that would challenge the sentiment.
I wonder whether we're gonna move beyond the questioning the spending to once again being in need of it. And we were almost worried, I think, with some of these reports that just finished. What happens if so-and-so just confirms, reconfirms, doesn't raise? What's gonna happen to those stocks? What's gonna happen to the trade? Scott, I think the, we call it 12-month anxiety with all the hyperscalers was not that AI fundamentals were deteriorating. It's that we had to think of new ways to evaluate a group that we traditionally look to as free cash flow stocks. And once they became something else, I think it took time for analysts and investors to adjust. I think that adjustment's underway right now. Their multiples compressed. I mean, we've been reflecting that, right? And it's not just hyperscalers. I mean, look at the breakout in ETN this week, or stocks like Quanta getting back in gear on comfort systems. The move in Amazon is a really important breakout over the last couple of days from really a 18-month sideways consolidation in a long-term uptrend. So I think you have to look at that and continue to give the benefit of the doubt here. I would expect Alphabet goes on and makes new highs, and I would expect that Facebook goes and takes a run at the highs here as well.
Maybe, I mean, look, Microsoft's up 25% a month. A lot of that done in literally less than a handful of days. And speaking of software, yeah, it's going to be another big evening for the software trade. Palantir reporting, of course, in overtime. Seema Modi has a look at what we should be thinking about going into that. Hi.
Hey, Scott, well, since Palantir CEO Alex Karp joined us a month ago, leaders from Washington to Silicon Valley have voiced in on this whole open versus closed source model debate. Many of them agree with Karp's point that it's unfair that companies are forced to hand over their data to work with the frontier labs, that enterprises should be pivoting to open source models. So yes, tonight, Scott, we will get a fresh read from Karp himself on how Palantir is potentially capitalizing on this opportunity. Remember, in addition to having a big government business, nearly half of its sales comes from the commercial side of its business. Customers that use Palantir's artificial intelligence platform. Shares have rallied over the last few weeks, but the stock is still down about 30% this year. So the question is, will earnings change that story? And be sure to tune in tonight. My exclusive sit down with Karp that airs at 5 p.m. Eastern Time.
We'll look forward to that. We'll see you then. Seema, thank you so much. Then Seema Modi, you still go weight chips over software, semis over software. What makes you change that? Or at least today's the first day I've seen an uptake where software is doing well. Software really only beats semi. It's in the middle of a massive tailwind, so I'd say I'm tethered to the thesis for now. But we at least, I think, have gotten to a point where we're able to better separate winners from losers. Before it was, if you had software in any part of your description, you stunk, and like the market was basically throwing you in the garbage. Now, other stocks like Snowflake have shown that okay, maybe we're a winner.
S&P holding its own. We've got 47 minutes to go. 47 minutes to go. We'll see which way dealers hedge into the close. The bulls have the bias for now.
Looking at the composition of strength on up days of where it's coming from, the fact that you're actually getting some IGV over SMH today, in light of that, I do think is a noted change. And it does speak to this idea. I mean, we're sitting here with 70+% of the S&P above the 200-day. That's decently broad. I'm not sure how much broader people want it than that. It's the broadest we've seen in probably 2 years. I'll get back to that in a minute. I just want to make sure everybody sees what I'm seeing on the bottom of our screen. Amazon, $3 trillion market cap, first time ever. If that doesn't tell you the bump that stocks like this one got after earnings, that Microsoft got. Remember, Apple coming into the print was like $5 trillion as well. So that's a big Amazon bump, and there it is. It's still hanging out above $3 trillion. Now, the broad. You want to say something about this? We talked about it last week. Where what hurts a lot along with PMs on the institutional side is if it's rated stocks outperform the.
All right, so watch how they hedge this into the close.
Because of mutual fund rules or risk management. So this kind of stuff hurts them. And Cameron and I were talking upstairs a little bit about like what's painful for people sometimes is when you get a rally and things are underweight. And I think a lot of folks have been behind, as you mentioned, ETF and the flows integrated. I think that
NVIDIA profit taking, Microsoft profit taking at the highs, Tesla profit taking. I would take profits off as well. I closed the Apple position. Microsoft did well. I took some Microsoft off today that I've been sitting on since May. We rolled out to June into August, July and August. I took some of those off today. Netflix, looking to build a position in Netflix. If it can manage to catch a bid. AMD earnings tomorrow. We'll see how NVIDIA performs tomorrow. Got about 45 minutes to go.
I think history would say there's more runway there.
Previous forecast of 671.
All right, S&P hanging out at the highs.
Now, as you know, we have to wait until Wednesday morning to hear the breakdown in tenors for the debt, but we do know Treasury has leaned on small bills in the past, and they said once again back in May that they anticipate being able to.
Megan, thank you. Megan Casella. SpaceX touching its lowest level since going public today as we await two major events this week. The earnings, of course, and lockup expiration, which everybody's been talking about. And I know Morgan Brennan's been thinking a lot about as well. Hi there.
Hi, Scott. That's right. So we've been digging into this. You just mentioned two big milestones. First, earnings of the public company tomorrow. First stock lockup expiration on Thursday. And that's really where we got to start the conversation, because that's really what's been pressuring the stock coming into this week. 911 million shares owned by about 20% of insiders, early investors. Those become eligible to sell on Thursday. Just to put this in perspective, SpaceX sold 629 million shares, or less than 5% of shares outstanding in the IPO. So we're talking about the beginning of a supply tsunami here. That's just the first tranche. Through the end of September, public float poised to triple, and that is going to continue to swell until next June. In total, according to Morningstar, share total could climb to, at least in theory, more than 6.4 billion shares. This is one reason SpaceX shares have tumbled 18% from the IPO, are down, or IPO price, I should say, are down more than 45% from the intraday high. And Wall Street is betting this is going to continue. S3 Partners says short sellers now holds 32% of the company's current publicly tradable float. We got more on that on CNBC Pro. But as for earnings tomorrow, after the bell, watch Starlink results, CapEx plans, and guidance for Starship after a successful 13th test flight. How much did Starlink subscriber growth, NeoCloud deals with Anthropic and Google, and multi-billion-dollar government contracts offset the cash burn that's associated with that big AI?
I got 41 minutes to go. 41 minutes. S&P hanging out at the highs, up 118 handles.
The idea of tying together SpaceX and Tesla because you know that's been talked about
Traders
since the
chasing calls with Core 1M at 567.
While the CEO of President SpaceX about coming into the IPO, and they have not confirmed nor denied that possibility, but have said, at least on the Tesla earnings call 2 weeks ago, that that was not the time or the place to have that discussion. That being said, whatever the future ultimately holds, the two companies are very intertwined. They have big partnerships, including now with semi-manufacturing with TerraFab. And the expectation is that those synergies will continue, whether they are tied up in an official merger capacity or not. I'd expect we're going to hear some comments about all of that in the call tomorrow night.
Sure, we will. You've had a very long day already, and I appreciate you sticking around for us, Morgan. Thanks, Morgan. Another story we're following this hour, some deal chatter in the healthcare space. AstraZeneca reportedly holding talks with rival Bristol Myers. And Kim Constantino joins us now with the latest. Does anybody like this proposed deal?
Hey, Scott. So this potential deal is actually getting mixed reactions from the market. But let's start out with what you need to know here. So these drug makers are worth more than $130 billion each. So the deal would value the joint company at roughly $400 billion. That would be the biggest pharma deal in history and would make it the largest drug maker after Lilly, J&J, and AbbVie. And so one upside of this deal is that it would create an oncology powerhouse. You know, cancer drugs make up nearly half of their respective revenues, but there is a lot of skepticism around this deal here. So one concern is that these companies have directly competing products that could attract antitrust scrutiny. You know, the other question is whether Astra needs M&A of this size to really fill in their pipeline here. You know, last week the company said that it's on track to reach its goal of $80 billion in revenue by 2030, and that doesn't even factor in major mergers here.
IBM. IBM looking good.
Annika, thanks. We'll see where it all goes. Appreciate that. Annika, Kim Constantino. We're just getting started here. Coming up next, from record highs to rich valuations, Aswat Damodaran, the so-called dean of valuations, is with us next. We'll talk all things tech, state of the AI trade. Of course, we'll talk SpaceX as well. Each one live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Another example is the Jeep Cherokee. It only comes as a hybrid. So as that continues, more people are going to end up with
Apple lost all of its momentum. Apple needs to get above the 50-day before we'll take another look at that from a swing trade standpoint. Intraday, that had a nice little bounce earlier. S&P hanging out at the highs. Dow Jones also looking good. The Dow Jones. Diamonds. The Qs look okay. New York FANG component.
Paying north of $5 a gallon for gas?
yes. The short answer is yes.
New York FANG looks good. RSI rising. MACD stochastics have turned. This looks really good for the New York FANGs for tomorrow. If we can get Apple to move back above the 50-day, that would be good. Apple just sitting right underneath the 50-day. Not the best trade setup. NVIDIA, Meta, Google, these all look better. Big moves today. Microsoft just shot out of a cannon.
Less burning, less pollution. So you're accomplishing the same goal, although maybe on a longer
S&P, beautiful trade. Back above the 50-day moving average, looking good. Bulls are winning. Bulls are winning.
Conversations over the years about the tug of war. I mean, clearly in a place like China, the government is winning the tug of war, but in a place like America, the customer is clearly winning here. Herein lies, obviously, the hybrid winners here. I'm wondering what that means then, Brian, for a name like Tesla.
Well, Tesla is always going to be. I wish I could explain just how unexplainable Tesla is. It's an anomaly. You see these other electric vehicle companies come along, they come and they go and they come and they go. it's not easy to create an all new
Oh boy.
be successful. Yet that's what Tesla has done.
Nasdaq up almost 3% here. Nasdaq NDX up
People see it as a luxury or as a tech thing. Here's what
NDX
with
up 3%, nearly 3%.
people have choices to make.
S&P looks like it wants to run.
With sedans, is it that Americans don't want sedans? We still have a Toyota Camry and a Honda Accord and a Hyundai Elantra. So I think the so-so electrics will go away. The good ones, Tesla being one of those, are going to remain.
Under normal circumstances, if I were to buy the S&P, right here, it would definitely pull back. I don't like buying the highs. Not buying it, it's probably going to break out. Go figure. Hope everyone's having a good day. Very nice.
Envisioning the industry changing? Are we going to see a lot more affordable vehicles coming our way because rates are high, because gas is high, because Americans say we feel pinched everywhere, even though we're still spending? Or are luxury cars going to still continue to be the winner?
All right, so we'd love to see a close up here. More than likely will. More than likely see the S&P close up here. I bought some hedges before. Those will be toast. That's okay. Looking good though.
Television was before cable, and then after we have the Golf Channel and the Racing Channel and the Drama Channel. There's channels on right now where you can see TV show Friends 24/7. Cars, same thing. You're going to have more luxury, like you said. People have shown they want that. You're also going to have an abundance of lower price cars. Brands like Slate and REO, Ford, Chevrolet has the Trax, Kia has a K4, and also Chrysler. Stellantis has actually said they have a big product onslaught coming, and many of those vehicles are going to be under $40,000. So the answer to your question is yes to all that, but who's going to remain and who's going to go away? That's what we don't know. Some lesser quality brands are going to go away. Quality is going to be important, even if it is just $30,000.
I love a Bronco. They're really nice cars, but I'm stuck with my 2012 Ford Fusion, and I love that car, that sedan. I'm just wondering, Ryan, if you ever see a world here in the US where Chinese cars enter the market, particularly when you think about the psychological aspect of the range anxiety that people have here. I mean, it's a very big country. We have the same in Australia, but I think the BYD can go, 2,000 clicks on, a full tank and a full charge. I'm wondering if, the Americans will ever look at the Europeans and go, hey, maybe we do want some of those cheaper cars here too.
Now. Do you know what I think is going to happen with that? I don't think that you can keep Chinese vehicles and products out of your marketplace forever because, as I said a second ago, if I even know a little bit that the market's going to decide, the market's going to want better for less. That's what Americans typically want. Here's how I think that's going to go. Automaker, we see it, is going to partner with the Chinese automaker, and they're going to bring their vehicles in, federalize them so that they meet all the standards of U.S. buyers, safety and reliability.
Oh boy. All right, so let's go back to what we started out the day with. Okay, let's go back to the way we started out the day. Here is Gex, and I'm just going to change this. I just want to show you what it looked like today, this morning. Okay, at let's see, 9:30 this morning. This is the way we looked. 9:30 this morning, we looked like this. 9:30 right there. We started off the day right around 75.30. We had all of this open interest. We had this as resistance, and I'm just going to play through the day. You can see how all of this worked out. Dealer hedge flow started to shoot higher right out from the start. You can see that purple line just rising as we proceeded through 10 o'clock, 11 o'clock. A lot of these trades, as we traded up against this, all these positions were closed. In through lunchtime, hedge flows continued to rise and then flattened out for a brief bit of time. And then hedge flows continued to rise. So we had a beautiful trend today. Beautiful trend. And we're just hanging out at the highs right now. You would think that this would come back in a little bit just from a hedging standpoint. Looks good though. Looks good. Very good trade today. Congrats to the Bulls. All right, looking good. Amazon turning back up. Late day short covering most likely. Apple, no momentum in Apple. S&P hanging out at the highs.
The New York Stock Exchange. When markets react, watch now.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smart, invest strong.
Okay, I want the markets to stay up here at the highs. I bought the hedge just in case the markets pull back. No pullback is good because the majority of my positions are longs. With the exception of VIX, of course. VIX, I don't care about VIX. That's just a hedge. I want all of these positions in Tesla, Netflix, and Nvidia, Microsoft. I want these to continue to move higher. Tesla had December calls, so I'm looking for Tesla to be higher. SpaceX earnings coming out. That should be fun.
Shares are lower today after Phillips Securities downgraded the stock
SoFi having a good day. Nice reversal in SoFi from last week. SoFi had made it down to 15. SoFi had made it down to 15. It ran all the way up to 18. It's up 10%. Just shy of 10% today. SoFi. Big move back up into the range. Weekly trend. Okay, we need to take out 20, obviously. So if we can get this to turn, so I have June of 2028 calls, 25 calls, the 20 and the 25s. So I have fairly decent sized position. That's back in the green and looking good. S&P just holding up here. Okay, Micron, what's Micron look like? Micron, nice reversal. I marked this up last week, anticipating that Micron is going to turn the corner, build a cup pattern. Wednesday, we were down quite a bit and then reverse back up, only to get sold on Friday. Now we're trying to hold on. Micron turning back up, pre-market high, that purple line over here on the left. Micron, S&P, just hanging out at the highs. Waiting for that last 15, 20 minutes of dealer hedging to see if they pop this higher or they push it lower back into today's range. So far, the markets are holding at the highs. So this is really good. Really good for tomorrow, provided breadth can continue to shape up like it has been. Breadth looks pretty good today. A lot of rotation into communication services, consumer discretionary, technology, industrial materials. So breadth turned back up, looking pretty good. This is exactly what we're looking for. Weekend video, we were looking for breadth to continue, push higher, and for the New York FANG to perform. So New York FANG looks really good. Nice follow through. All right. We've got 22 minutes, 40 seconds to go. New York FANG looks good. All right, S&P pulling back a bit. Just a little profit taking. $21 minutes to go. Looks like dealers are starting to close positions. We're starting to fade a bit from the highs like we did around 2 o'clock. Let's see if we hold on to 7,600.
So, in order to develop, say, the demand is there across the country.
All right, we're fading off the highs. Just a little profit taking. We did make it all the way up to almost to 76.10. Actually, it looks like we made it above 76.10. We tagged it. Netflix starting to show, starting to turn up now. Looks like shorts covering on Netflix. S&P. S&P 500. Just a little profit taking. Looks like a little profit taking here in the day with 19 minutes to go. Watching what dealers are doing.
Next, CUB.
CBRG.
Microsoft hanging on to the highs of the day as well, looking really strong. Amazon turning back up a bit. Meta just off the highs of the session, back to the opening range highs. Meta, we're looking for a follow through in Meta tomorrow. I did take off the put credit spreads that I'd taken on this one. I'd sold put credit spreads down below this low. We got a double bottom situation. Very nice retracement, mean reversion back towards the 50-day. Look for a follow through. If we get above the 50-day, we could see a nice little rally up to the 200-day this week. So it's looking pretty good. Looking really good. All right, hope everyone had a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com with 17 minutes, 40 seconds to go. It is Monday, August the 3rd, first trading day of the month.
Welcome back. It's nice to see you.
Nice to see you.
Okay, so you sat down and you.
In the back of my mind, I keep thinking about seasonality. August tends to be the worst month of the year. There are times when we do see a little rally in the first 2 weeks. But generally, overall, August is not the best time of year. A lot of people on vacations, finishing up their vacations into Labor Day, and coming back and start working at the markets into September. So August tends to be a bad month. So I am continuing to reduce exposure. I know you get tired of me saying it, but as long as Core 1M stays at the lows, I'll be trading options that expire out in September now. August, I took some August calls off this morning. Microsoft that I've been sitting on since May, rolled out from May to June into July into August. And I just finally took that Microsoft calls off for a profit after that big pop that we had on earnings. Same thing with Google. I had some Google options that I had been rolling out since May, June. And one of the reasons why I like to do that, giving myself plenty of time for these bull and bear cycles to shake a lot of people out. Time is your friend. All right, watching the S&P right here.
So I think that 10 years price, we could see 4 or even higher inflation at the end of the year.
Wow. So do you must think that the Fed's going to be forced?
All right, so it looked like a little profit taking from the highs. Markets are holding up very well, which is good for the overall. The overall portfolios were moving back up to all-time highs. S&P. What's New York Stock Exchange look like? NYSE. The New York Stock Exchange Composite, 2,400 components. Okay, making new all-time highs. 24.3, where the high was 24,260. All right, let's see what the comp looks like. NASDAQ Composite. All right, back to the 50-day. We'll need to see it move through the 50-day tomorrow. Maybe we'll get another bullish day. If we can get above the 50-day, that'll mean that institutions are buying. And if you look at tick cumulative is green on the shorter time frames. So that tells us that institutions are buying. Junk bonds, not the best signal from junk bonds. We are holding the lows again, but we did gap down too. So that's not the greatest situation. The US dollar Japanese yen pair. We need to see this bounce. Okay, we need this to bounce more. All right, the last time this happened was back in April. If I go out a little bit further, okay, the last time we had some big sell-offs like this was the beginning of the year, and we had that double drop into the February lows there. So we need to recuperate. We need to get back above the 200-day. Need this to bounce. This is the US dollar Japanese yen pair. The Japanese Bank of Japan was selling US Treasuries, so that pushed yields up last week. Okay, so the Bank of Japan was selling US Treasuries. Bonds go down, yields go up, and we had this nice pop up to 4.74%. So we need this. If you're bullish, you want this to roll back over and move back towards the 50-day. Watching futures. Been a very bullish day. So some of the other things you might want to consider, check out the watch list. The watch list did very well. Many of these stocks following through. Where is my watch list?
Good to see you again. Congrats on your new job.
Thank you.
Elizabeth Burton, Fortress Investment Group. See you soon. We have more news out of Washington to get to. Megan Casella is back for that. What do we know now?
Scott, we've got a new legal challenge to the president's latest round of global tariffs impacting almost everything the U.S. imports from abroad. This is now 25 states in the Court of International Trade suing the president, arguing that these so-called forced labor tariffs imposed under Section 301 are unlawful. They say that this Section 301 is simply being used as a pretext. Forced labor allegations are simply being used as a pretext to put the global tariff regime back in place that the Supreme Court already knocked down once. They say that this is the third attempt to impose worldwide tariffs, but it is equally unlawful. They call them arbitrary and capricious. I'll say, Scott, that this is at least the second lawsuit against these Section 301 tariffs. And while these are on firmer legal ground than the ones the Supreme Court already knocked down, there is a strong argument to be made against them that the USTR didn't follow the process that they needed.
All right, we got a few minutes left to go.
I appreciate the update on that, Megan. Thank you. That's Megan Costello once again. To Christina Bartzanevelos now for a look at the key stocks to watch as we head towards the close. Hi there.
Yeah, let's start with shares of Alibaba. They're up roughly 4% right now. I'm looking at Corning. We'll get to Alibaba. After unveiling a new AI model set to officially be released next week, the Chinese tech giant calls Quen 3.8.
All right, so the watch list.
Latest Quen release has 2.4 trillion parameters.
Many of these looking good. Apple, we need to get back above the 50-day. Bank of America from the watch list trending. That looks good. CBRS needs to get back above 245, 250. Pretty decent day for Cerebras. CrowdStrike, beautiful, looking good. Following through, day 3. Thursday, Friday, bouncing off the 50-day. RSI rising. MACD stochastics turning. Volume picking up. Looks good for CrowdStrike. Chevron, still trending, but pulling back today. Dell, back above the 50-day. Need the Dell to get back above 463 or so. Dell. Dexcom breaking out. That looks good from the watch list. Volume looks good. MACD stochastics rising. Emerson Electric, I believe their earnings are tomorrow. Google, nice follow through gap up today. IBM, looking for IBM to get going. Watch for IBM. IBM should do well. The remainder of the week is looking pretty bullish. RSI rising, MACD stochastics turning. Volume starting to pick up. Watch IBM this week as well. JD.com trending. Chinese stock, JD.com. JP Morgan taking a break today, but trending. The LNG stocks taking a break today, but starting to build a bullish trend. Medtronic, looking for that to get above the 200-day. Meta, of course, we all know what Meta did today. Microsoft breaking out. That's doing very well. We took the call credits off on Friday for a small loss. Today would have been a much larger loss. Calls that we had from May that we rolled into June and July and into August. I took the August side off today for a nice profit. I've been sitting on those for about 6 to 7 weeks. Bought them over here. Was looking forward to push through the 50-day. Didn't happen. NVIDIA back above the 50-day. Looking very good. RSI rising. Volume increasing. MACD stochastics turning up. Ship Finance trending. A lot of these shipping related names are trending. SPY Value, SPYV, SPY Value ETF trending. AT&T with a bounce. Verizon also bounced. TK Tankers, Maritime Shipping. All of these look pretty good. VeriSign breaking out. All of these watch list stocks just keep going. Verizon higher. Walmart near the lows, looking for that to push higher. So we got about 2 or 3 that aren't working. The rest are from the watch list. I have about 15 names. About 18 names. We got about 15 that are working, about 3 that are just kind of taking a break. Okay, traders, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We got about 6 minutes and 30 seconds to go. And the S&P is holding on to the highs. So this is good for the bulls.
Infrastructure. We see emo attacks targeting not just critical.
All right, we're watching for the dealers to close some of these positions. We got some selling coming in now, a little profit taking.
Healthcare, for sure, but also commercial verticals,
Apple dropping off even more now. People taking profits, pretty obvious. Amazon's holding at the high.
If you send email.
Microsoft is starting to fade a bit as well. I would be taking profits off if I have short-term options that expire this week or next. Day trading.
Take advantage of modern standards, and then it won't stop.
Tomorrow's another day. Okay, we're starting to see a little bit of a fade here. Back down to 7,600. Looks like support now.
Scott Palantir has the chance to put the icing on the cake for stocks today. Options traders look optimistic it could happen, especially as we close in on all-time highs for the broad market. Now, it's still somewhat...
SpaceX is ripping here. SpaceX ripping.
Big money traders buying closer to the money puts and selling calls, but in the last...
SpaceX is ripping here.
Now more than 70%.
I still have those 75.80s. So if we drop below 7,600, it'll be because dealers are closing positions. All right, SpaceX, look at SpaceX. SpaceX ripping.
Contracts. Regardless, it's probably a setup for action.
SpaceX going.
Swing in the shares after earnings, much bigger than the roughly 7% average move after its last four reports, which brings up a catch there too. Palantir notoriously underperforms these big options expectations, Scott.
Okay, dropping off. 4 minutes to go. 4 minutes to go.
About 18% since the company's last earnings. User growth and ad strength are in focus after daily active users declined in North America in the first quarter. Now Snap is projected to add just under 4 million daily active users in total. New Street Research warning that Snap remains most exposed to the growing wave of team social.
All right, here we go. Starting to pull back now.
Concerns about a potential slowdown in ad spending. Analysts are now looking to see the company's rebuilding of its ad infrastructure will pay off, with analysts projecting revenue growth will accelerate to 14.5%, and for earnings of 8 cents per share, that's up from break even a year ago. Now, analysts are very much on the fence about Snap. 71% have a hold rating, 23% have a buy, and 6% have sell. Back to you.
Okay, we'll see what happens, Julia. Thank you. That's Julia Force. Jonathan Prince joins me now. So we talk a lot about the momentum trade, which means we talk a lot about the chips trade. Where do you feel we are after what was, as you suggested, the biggest unwind and fastest that we've ever seen?
Hey, Scott. So, yeah, we're on the Thursday talking about how we got that capitulation moment tactically for the momentum trade. And so, at this point, we're operating under the assumption that we are in a reflex rally of that momentum that gets you somewhere back up.
All right, 2 minutes, 40 seconds to go.
Which would be, about 20 to 30% off the recent low, depending on what index you're looking at.
It's interesting. I mentioned this earlier in the program. August and September, generally and historically, not great for the equal weight. And I'm thinking about, well, did the hyperscalers and the tech trade give investors renewed reason to come back in force into that trade? That may suggest yes, and history about the equal weight and its performance may suggest yes as well.
So we think there's two different parts to the trade here. So, coming into August, which is notoriously a weaker part of the calendar, you have to put it into context. I think the semis and the momentum trade actually come in from an oversold position, so we're expecting strength there, at least in the early part of the month. But I think as the momentum trade unwound in July, what we saw was a lot of money rotating into other parts of the market, and that's what drove the equal weight to all-time highs. So we actually think the weak seasonality for the equal weight is likely to come into play. As
1 minute, 30 seconds to go. 1 minute, 30. 76 is holding. 7,600 is holding.
Do you think that we're set up for more of what some would say is an everything rally? We've had the clearing event of earnings, especially for tech. We've had a clearing event, if you will, in the momentum unwind. Now we can maybe rebuild. And we're still feeling pretty decent about the state of where this economy is. How does that all measure up?
Look, I mean, we'll see. Like we said, I think the parts of the market that benefited during the AI unwind are definitely likely to struggle here. It doesn't mean they have to go down a lot, but I think, you know, it was clear there was.
Okay, 50 seconds to go. 50 seconds.
To the momentum trade. So we're not so convinced that that continues at least at the same pace, but certainly there is room for a bit higher and everything. It's just, I think the bulk of the rally is going to be concentrated in the stuff that are being down the most at this point.
Well, what if I said to you, okay, let's throw yields into that soup and say higher yields as
30 seconds. 30 seconds to go.
Say it's not the absolute level, it's the velocity. And I think if you look at kind of a 5-year chart of long end 30-year yields, they're at a pretty interesting level. If you were to see a swift surge higher in yields from this point, call it 530, 540, 550 in a short order of time, I think that would be an issue. But as long as they kind of churn.
5 seconds. 4 seconds. There we go. That's the closing bell. All right, folks. I have a hard stop. I am exhausted from traveling. I'm going to take a break. Have a great evening, everyone. We'll see you first thing in the morning. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, August the 3rd, 4 p.m. Straight up the closing bell. I'll see you guys tomorrow. Take care.